Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Mahima Vashajani, and we'll take you through the next 1 hour of trade. Morning, Mahima.
Morning, Alex.
Well, if there's one story that you should focus on at the start today, apart from what's happening in the equity markets, it is that today we're going to talk about everything that you need to know about the GST reform. And we've got an on-ground event in New Delhi that starts at 3 p.m. today, and the who's who from North Block as well as the captains of Indian industry are going to be there. Of course, the star of the event is going to be the Finance Minister. Finance Minister Nirmala Sitharaman is going to be talking about what went into the planning of the GST reform that is still playing out in the stock market, and everybody trying to anticipate what the implications are. In fact, we've been speaking to companies over the course of the last few days, including today, and one of them, of course, was Metro Brands, one of the footwear companies that stands to gain. But there's so much more than just footwear. You're talking about consumer durables, you're talking about automotive companies, and you're talking about the consumption basket as a whole. We're going to talk about all of that with Finance Minister Nirmala Sitharaman. There's, of course, the Commerce Minister, Mr. Piyush Goyal, who's going to be at the event. You have the Chief Economic Advisor that's going to be at the event to talk about the implications for the economy if indeed that consumption boost kicks in starting the 22nd of September, which incidentally is tying in with Navratri. So yes. The long story short is that this is a message to you, dear viewer, because this is a show that gets us to liaise with you directly, and you've got a couple of ways to get in touch with us. One is the message on top of the screen, but also the number on the bottom of the screen. Let us know what you would like to hear at that event. If you've got a question that you think should be posed to Finance Minister Nirmala Sitharaman when that event does kickstart, then let us know in the comment section, or in fact in the messages that you send us over the course of today's show. Of course, besides that, you can also ask all of the questions that you have for us. Joining us to answer all of your questions this morning, we have Gaurav Sharma, who's Associate Vice President and Head of Research, Equity and Commodity and Currency of Global Capital. And we've also got Astha Jain, who's Senior Research Analyst at Hem Securities. She'll join in just a bit. But before we go to our experts, let's take a look at where the markets are. And really, in the equity markets today, the one big story that we're tracking is the IT pack as a whole. So 0.2% for the Nifty 50. But if you pull up the heat map for the Nifty 50, you will see at the top of the screen, and this is something that we saw at the open as well, the list of companies at the top are the likes of Infosys as well as Wipro. You have Tech Mahindra and a few other of the tech companies, HCL Tech in the top list as well, TCS doing well. But really, Infosys up over 4% at this point on the back of that buyback announcement. It is not decided, the quantum of the buyback, or in fact the price of the buyback. These are two aspects that you will need to watch very closely. The meeting of the board takes place on the 11th of September, but directionally, this is a statement of strength, a statement of intent from the management amidst this pall of gloom that has been over this sector as a whole. Infi at the high point of the day, and so is the IT index. But pull up the sectoral heat map, because really you will see that IT is by far and away the big winner, but you have a few others that are moving, and not too much, right? So you have the media index, it's about 0.5% up or so, the pharma index about 0.4%, and consumer durables, auto, these are stocks that had gained quite considerably over the course of the last couple of weeks that are cooling off just a tad bit. But we've got Astha as well as Gaurav now joining us to take all of your questions, and let's start with the first one. Good morning to the both of you. Arjun from Kolkata has got the first question, and he's looking at Avantel, which he's contemplating for a period of 7 to 8 months. He's gotten at a price of 161. He's got 68 shares. The stock is up as much as 3% in trade today, which has pushed it above his buy price. He's wondering whether to hold and what levels he should look for. Gaurav, on the charts?
Hi, morning, Alex. The viewer can hold on Avantel with a stop at 165 and look for targets close to 185, 195 zones in the coming a month or so.
Regards to where Avantel stands, we've got our next question from Ravi, who is writing us from Hyderabad and asking about Suzlon. He's bought at the levels of 61.5 and holding 2,500 odd shares. Asta, hi, good morning to you. I'll come to you on this one. Your view with regards to Suzlon, he's bought it at elevated levels. Should he continue to hold?
Hi, good morning to all of you. Talking about Suzlon, I think he should hold this counter for the price target of 75 to 80. So we are giving that much of the target to this counter. Now, if I talk about the fundamentals of the counter, I mean, now this counter is now, they have started growing from, if I look after the back, then definitely it is a great turnaround story because the kind of financial performance they have posted few years down the line. So definitely, that is one of the reasons. Another reason about Suzlon on which we are very much optimistic is that about their recent order flow. So I mean, this type of order flow which this company has receiving, I mean, definitely it will help them to show a very, very strong financial performance going ahead also. So we are thinking that this is a good story to bet upon and hence remain invested in this counter. Price target which we would like to give at the initial level is around 75, but I think 80 can be set as our ultimate price target for this counter.
All right. So Suzlon so Asa is positive on Suzlon. The stock has been languishing around that 55, 57 mark, below 60 mark for a little while. I wonder when that catch-up takes place. SBI, talk about languishing. The stock has been around that 800 mark for quite a while and it's not budging. But then we've got Uma, who has bought at levels of 525. She says she's a long-term investor and she's got 1,000 shares that she's bought at that price point, which in the light of what we've seen over the course of the last couple of years, in fact, for State Bank of India, is quite the buy price. She's wondering whether to hold for the next 2 years and what the upside potential is. If it's not a remarkable upside that is on the cards for State Bank of India, she's wondering if she should partially exit and invest elsewhere on a new generation or next generation stock which has a growth potential better than State Bank of India. Asa, the question is for you. Does that catch up eventually take place? Of course, one must state that the equity markets don't often see a linear progression upwards. So will that patience eventually be rewarded?
Yes, I think so. And my price target for this counter at the initial level is at around 950 to 980. So very much near to the cost price of the investor. Now, talking about the fundamentals of this counter, we are believing that SBI will show the credit growth of around 10 to 12% in the coming years. So this is majorly we can see on the back of the growth in their MSME and the retail portfolio. So I believe on the back of a strong credit growth, in fact, going ahead also we can see some sort of a margin appreciation also in this counter. So we are optimistic on this counter in the longer term, not maybe in the shorter term, but yes, in the longer term, definitely she will see the levels of 950 to 975, which can be very much near to the cost price. So I think there is no need to exit from this counter at this point of time.
Okay, and continue to hold is the view that Asta has. The person sitting on profits of 2.8 lakh rupees as we speak. All right, we've got our next question from Surya, who's writing us from Kolkata. And he's holding 65 odd shares of HPL Engineering at the price of 156 and is a long-term investor. Wants to know if he can continue to hold the same for the next 2 to 3 odd years. Asta, I'll have to stick with you. Let me know with regards to this counter, HPL Engineering, should he continue to hold for the next 2 to 3 odd years?
Definitely, yes. Because if I talk about the fundamentals of this counter, fundamental seems to be very, very strong. Why? Because we have seen a strong rise of more than 70% in the bottom line in the quarter gone by. So that is one of the major reasons that we are keeping a very much optimistic outlook on this counter. And another point which I find is that definitely this counter is also going at a higher valuation of a price to earning multiple of more than 50 to 60 times. But the kind of growth they are showing right now, I think it is very much justified. So remain invested in this counter is what we are believing right now because it can yield much better returns from here. However, initial price target can be set at around 900 rupees.
I must confess that the next counter that we're going to talk about is not something that we speak about very often. Gaurav, I'm hoping that you will have a view on this one. Jaiswal NECO, Jayswalneco, 6,000 crore market capitalization company, currently trading at a ticker of about 62 or thereabouts. And we've got Satyan, who has bought at levels of 38. So quite an attractive buy price, and he's seen quite a considerable upside. He wants to know whether to hold for the short to medium term or whether to book profit at this point, and where would you place the stop?
Nigel rightly said, a stock that has, even I am not tracking it on a very close basis. But congratulations to the viewer. He has purchased the stock at a very attractive price point, 38 buying price. 63 is what the stock stands currently. It is, placed a little bit on the higher side now, trading close to its previous peak. I think some kind of resistance would be seen. That's what exactly the stock is facing right now. It is not able to surpass the 64, 65 level hurdle from past 2 to 3 weeks continuously. So I'll suggest at least take partial profits here, take 50% of the profits off the table, hold the remaining with a stop at 57 and keep trading stop loss once that 65 mark is taken out. Part profit is what I'm suggesting.
Okay, all right. So that's the view with regards to where Jayswalneco stands. We've got our next question from Yamini, who's writing us from Chennai. She's asking about Godrej Agrovet. She's holding 70 odd shares bought at the levels of 837 from a shorter term perspective, but she's sitting on loss of over 7,000 rupees. Wants to know if the 880 and 890 levels are achievable or not. From a slightly longer term perspective. Gaurav, I'll come to you on this one as well. Your view with regards to where Godrej Agrovet stands?
Overall, it is not a bad company. It has performed well, but it is consolidating from quite some time now. It is taking more time than it was expected. The recent peaks were not taken out. 875 is where the stock is struggling to go past. This time around as well, the stock tried to go past that mark, but failed and currently trades around 730 odd levels. I think this consolidation will continue for some more time, and a level close to 675 is even possible. So from the shorter term perspective, like a couple of months, it is better to take a stop at 690 and hold the position. And if the viewer can hold it for a little longer period, then there are hopes that a level close to 775, 825 can be expected.
Okay, you've heard, of course, viewer, that gold prices at all-time highs. The spot price in the global market, $3,600 per troy ounce, and that's just ahead of the festive season. Just last couple of weeks, gold prices are up as much as 10%. Now, we're not talking about gold. We're going to talk about a jewelry company. And Rajesh, calling in from Hyderabad, wants to know, I believe, about Kalyan Jewelers. Rajesh, morning, and thanks so much for calling us. How can we help you today?
Yeah, good morning, sir. I'm thinking to invest in Kalyan Jewelers for long term. So, is this the good time to buy?
Is it time to buy? And why Kalyan Jeweler from the entire jewelry pack? Is there some reason you've selected them?
Yeah, the results, quarter results are good, and the stock hasn't performed that much great from long time.
Okay. Asad, the question to you, therefore, would you buy into Kalyan Jeweler from the entire jewelry pack? First of all, would you buy into the jewelry pack with gold at record highs?
Yes, we can go for a jewelry stock, but not necessarily Kalyan, because we are very much optimistic on Titan at this point of a time. So rather than Kalyan, I would like to go with Titan.
And Kalyan, Astha is preferring Titan in the jewelry space. All right, we've got our next question, which is from Sushila, who's writing us from Bellary. And she's got Jamna Auto at the levels of 113, and she's got 488 in quantity and wants to know the targets. She's not mentioned the time period, but Gaurav, your view with regards to where charts are concerned for Jamna Auto?
First of all, I'd like to confess one of my favorite stocks at the moment from the auto ancillary space, Jamna Auto. The near-term price targets are 118. The stock is likely to face some resistance around that zone. Some profit taking can also be seen around 115 to 180, 120 zone. So any dips should be considered for fresh buying. As the viewer is already having a position in this, she should hold on to it for say a 6 months period. And I think brighter targets towards 135 can also be expected once 118 is taken out.
All right. Okay, so we've got a next question on Alembic, and this is a question from Balaji, who's writing in from Chennai, and he's got a levels of 114 or thereabouts, and he's wondering whether to book losses or hold for a period of 6 months or a year. So therefore, on the charts, not too far away from the current market price of 104, lost a little bit of ground. What's the view, Gaurav, on the charts?
It is still struggling, Alex, and there are chances that it will further slip down towards 90 odd levels. I don't see a meaningful upside in the stock coming, at least in the near term. A lot of resistances are there. Price resistances around 108, 110, then 113 is the confluence zone of its short as well as medium long-term averages. So not a bright future, at least in the near term. A downside possibility is much higher.
So that's the view with regards to where Alembic stands. The next question that we have is on Amber Enterprises. Meera Patel from Mumbai has 50 odd shares, bought at 7496 a piece and wants a long-term view on this particular counter. Asta, I'll come to you on this one. The recent news with regards to where Amber is concerned is the fundraising on the cards, and probably eventually leading to a demerger is on the cards right now. Your view with regards, ideally, actually yesterday the street was supposed to take this thing positively, but the stock tanked as much as 4% in trade yesterday. Your view with regards to Amber Enterprises and especially these developments?
I think right now Street is not taking these developments in a positive way. But if I talk about Amber Enterprises per se, I mean, the company is looking very strong to us because they have got a diversified business mix, first of all. And this is the company which can benefit from the government measures which will be taken by the government in the form of the, PLI incentives. These, benefits can be taken by the company, anti-dumping duty, etc. As well as what I believe that the capital subsidy can also act as one of the incentive for this company. So I think on the back of the these measures by the government, on the back of kind of diversified business this company is having, and the most important point is that they are having the leadership in RACs. So I think that is also we should think about it, because they have got the leadership in RACs, and now their expansion plans are also very much strong on that path. So looking after the company's fundamental only, I think this company is a very, very strong company to stay invested in. In the short term, we can see some sort of volatile price moves, but in the long term, I think this is here to stay. This company will show, upside momentum with the price target of 8,000 and above at the current juncture. We are recommending hold on this counter.
So hold is the view that Asta has on Amber Enterprises fundamentally. All right, we've got our next caller. Chetan is calling us from Bengaluru. Chetan, hi, a very good morning to you. How can we help you today?
Yeah, very good morning to everyone. Just I want to know on the Apollo Microsystem, I hold 250 shares at the rate of 119.50.
Okay.
I want to know long-term view on that, 5 to 10 years.
Okay, and Chetan, when you bought this, what was the thinking from the entire defense pack? Why Apollo Micro specifically?
Because recently, whatever they have expanding their business, right? They have investing capital in the expansion. So that's the reason. Just want to have the long term.
Okay, got your question, Chetan. I take this up with Asta. Asta, he's sitting on profits of almost 40,000 rupees as we speak and wants to continue to hold for the next 5 to 10 years. Is that the right thing to do?
Yes, one can remain invested in this counter for the next 5 to 10 years as well. Now, talking about this counter, what we believe that the kind of order flow in this company is getting, this seems to be very, very attractive. Again, their financial performance is very, very strong, and the kind of industry they are operating into, this industry will be going to remain in a flavor for at least coming 2 to 3 years. So, on the back of all these parameters, we believe that Apollo Microsystem is a good candidate to invest in the long term. However, we have seen a good upsurge in the price in the recent times. So idea here is to invest in this counter, but somewhat at the lower levels.
Okay. Somewhat at the lower levels is the view on Apollo Micro. What a run it's had over the last 3 months, despite the kind of drop that you've seen from the top. Goldiam International, we've already spoken about jewelry companies, but this is a slightly different play. In the B2C space, Asta, you've already picked Titan as your preferred pick, but Santosh wants to know about this one. He's bought at levels of 169 and he's wondering what the long-term prospects are. He's seeing pretty good gains because of his buy price. The stock is trading well above that, more than double that. So therefore, would you hold on?
I think one should book partial profit at least as of now, because here the profits are quite huge. So rather than, waiting for some more time, we are advising partial profit booking. Although the fundamentals of the company seems to be average, and what we believe that this company will continue to show good financial performance in the coming time, but the kind of valuation it is enjoying right now, it seems to be a little overstretched. So on that basis only, we are recommending partial profit booking.
Partial profit booking is advised on Goldiam. Karthik is calling us from Hyderabad. Karthik, very good morning to you. How can we help you today?
Hi, good morning. Nice talking to you guys.
No, it's our pleasure. Please go ahead.
I'm holding Centum Electronics at 1500 as my price.
Okay.
I would like to know, is it good time to book, or we can, look at better price as an exit?
And what is the time frame that you had in mind when you bought it?
For 2 years.
Okay. And when did you buy it?
Early this year.
Okay. So therefore, you're well within the time frame that you had in mind. It's a fair question. Gaurav, question to you therefore. So it seems like he's wanting to take some money off the table, wondering whether better prospects exist. What does the chart indicate?
The stock has still not achieved its near-term targets. What I see is 3100, 3150 is where the stock should, this up move should take a pause. I think that is the price point where you should be considering booking at least 70-75% of his position. As of now, I'll advise him to hold, maintain a trailing stop loss. With every rise, keep trailing the stop loss upwards. The stock has performed well. It is in a strong uptrend. As of now, the stop loss that I'm suggesting is 1720 to 720.
That's with regards to where Centum Electronics stands. It's time to slip into a very short break, viewers, but we'll be right back answering all your queries on the other side, so do stay tuned.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें। गोल्ड ग्लास, क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कैसी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected.
Welcome back. You're watching NDTV Profit. This is Ask Profit, and we're in the midst of taking all of your questions. And an interesting one coming through from Jesna, who's writing in from Mumbai. And she says that she's bought an IT ETF. And we've spoken about IT in some detail over the course of today. Of course, the entire sector is buzzing on the back of that buyback announcement, or the fact that Infosys will be contemplating a buyback when the board meets on the 11th of September. The question is, does she hold on for the long term, or does she book at this point? And I believe at this point she is incurring a loss. Asta, the question for you, if you look at traditional valuation multiples, then a few of these frontline companies are trading well below that. Infosys in particular, and we've talked about the fact that it's trading at 20 times 1 year forward, and the traditional multiple is 25 times, and this is just Infosys. While the entire pack is up and about today, does that indicate that you should hold on and expect a bounce back, or would you book out and move to something else?
No, I don't think that she should book out at this point of a time. The reason being, first of all, if I talk about the Infosys, the kind of dividend yield the stock is giving, and just see the balance sheets of these, IT giants. I mean, they have got a very, very strong balance sheet. Yes, I know the environment right now is not in a favor of these companies, but I think if the horizon is purely long term, I'm referring to the time period of more than 6 months to 8 months. So if the time period is such, then definitely she should remain invested in, because I think going ahead, maybe 3 to 4 months down the line, definitely we will see some sort of improvement in the macros also. And I think at that very moment, these companies are well placed to enjoy the benefits. So right now, just stay invested in this counter is what I believe, but time horizon should be more than 6 to 8 months.
Okay, so that's with regards to where these IT companies stands. We've got our next question from Shubham Jain, who is writing us from Bengaluru. He's saying that Vijay Kedia, in one of the interviews with NDTV Profit, did mention that the next multi-bagger theme would be hotel and the tourism space, and wants to know what stock can he focus on or buy, which in the same space that could, give him great profits and could be the next possible multi-bagger. Asta, I'll come to you on this one. Your preferred pick in the hotel and tourism space?
Lemon Tree. We are liking Lemon Tree at this point of a time a lot because the kind of expansion this hotel company is doing. In fact, their previous financial numbers were also very great, and I think this is one of the space where one should really, keep an eye on because as not, happening with the other POs, this company is continuously expanding and they are got very, very strong demand also. So I think Lemon Tree is one of the counter where one should keep an eye on, and here one can make investment. And my price target for the Lemon Tree as of now is 220 rupees. So Lemon Tree is my preferred pick in the hotel space.
It must be said that the gains over the course of last month, and you saw those charts for Lemon Tree, have been absolutely stellar. So 22% or thereabouts. So we're going to make a bit of an exception and go to our technical analyst on this question as well. Lemon Tree Hotels, Gaurav, since that is the fundamental pick, what levels according to you should a fresh investor look at if they want to deploy for the long term?
Absolutely, Alex. Firstly, yes, even we as a house are bullish on the hotel space. I am personally bullish on Lemon Tree. The recent GST benefits announced by Honorable Finance Minister suggest that price range below 7,500 will be most benefited. Lemon Tree is a hotel company that operates in this segment only, the mid-price segment. The other listed entities may be ITC Hotels, East India Hotels that runs the Oberoi brand, Indian Hotel that runs the Taj brand. They are on a slightly higher bracket. So I firmly believe that Lemon Tree, considering the kind of expansion plans they have, this is a sweeter pick to have at the moment. As far as targets are concerned, I was just looking at the chart. Still a slight up move is expected in the near term. Price target close to 210, 220 can be expected. And I would prefer to hold this stock for another 1.5 to 2 years and look for targets close to around 240, 250 range.
Okay, all right. So that's with regards to where the hotel space is concerned, and both fundamentally and technically Lemon Tree looks strong. Okay, we've got our next question on Marksans Pharma. Hemant is asking this question and wants to know if this is the right time to make an entry in this counter for the next 3 to 5 years fundamentally. Astha, your view with regards to Marksans Pharma?
So talking about Marksans Pharma, what we believe that if anyone wants to make an entry, because right now we believe that some downfall should come for this counter, and I think those are the good levels to make an entry. Now, if I talk about the fundamentals of this counter, we all know that it is a generic pharmaceutical formulation company which operates in the global markets also, and there some of the facilities are situated or located in apart from India in USA and UK. Now, this company, we are liking this company on the back of its robust product portfolio, which this is having. And they have their portfolio which spreads over major therapeutic segments, whether we talk about anti-diabetic or we talk about pain management, etc. But the problem, I think right now is just about the valuation, which we believe that it should get some more sort of relief on the valuation front. And hence, if some fall is there in the stock prices, then those are the good levels to make investment into. So right now, we believe buy at the lower level is a better choice rather than entering at this moment of time.
All right, so that's a view on Marksans Pharma. It's not had the best last 3 months or so, quite a deceleration in the stock price. We're talking about NMDC next, and this is a question coming in from Anil, who's writing in from Jalandhar, and he's bought at a price of 69.41, which is not too far away from the current market price. But he's asking what the prospects are if he can hold for the next 6 to 12 months. What's a view on the charts, Gaurav?
Clearly positive, Alex. The kind of uptick that the company has posted, 9.7% uptick in its business. So that was the reason why this particular stock shot up from currently 79, 76 odd levels. In the next 6 months, I see it heading towards 80, 84 zone. So it is a buy and a hold on the stock.
Okay, so that's with regards to where NMDC stands. We've got our next caller. Lucky is calling us from Ahmedabad. Lucky, hi, a very good morning to you. How can we help you today?
Good morning, everyone. Alex, sir, good morning.
Good morning, sir.
Yeah, I'm holding two lot. Actually, I got the 2 allotments of Vishal Mega Mart.
Okay.
At the price of 78, I'm holding 380 shares.
Okay.
So as the the valuations have picked up, so
Yes.
should I hold it for long term?
Okay.
Or should I book profit book?
Okay, got your question, Lucky. I'll take this up with Asta. Asta, Vishal Megamart is one of the beneficiaries of this GST 2.0 reform, because apparel below that 2,500 mark, the GST will come down to that 5%. Do you think that he should continue to hold since he's got the IPO allotment from a longer term perspective and see further profits?
Yes, because apparel constitute around 44%, if I'm not wrong with my numbers, of the revenue of this company. So, I mean, they are holding a good chunk apart from general merchandise and FMCG products, which hold around 28%, if I remember it correctly. And they have got a very strong presence in the tier 2 cities. So, we are positive on this counter since the IPO came. And right now, we are still holding our view of, remain invested in this counter. However, price target which we are setting for this counter is around 165 to 170 at the initial levels. So yes, one can hold this counter for at least those levels.
I'm wondering, Asta, if you have coverage on Servotech Renewable, and this is just a 3,000 crore market capitalization company. Do you?
No,
Okay.
Alex, we don't cover this.
No
companies.
worries. Mukesh Jain has got this question, and he's got 150 shares of the company at a price of 158. It hasn't had the best last 3 months. It's down about 18% or thereabouts, if I'm not mistaken. If we can pull up the last 3-month chart for, okay, so it's down about 13% or thereabouts. It has come off the low point. The question is, would you hold for the long term? And he's defined this, Gaurav, as 3 years rather. So 36 months. Would you hold?
So, firstly, we also do not have a coverage on this stock, but I can provide a view by simply looking on the charts. The stock is a little bit on underperforming space, but there are some good things as well. Firstly, it is trading close to its supports. It is bouncing back from that level, and in the immediate near term itself, I am expecting this up move to continue till 150, and once that is taken out in the little longer term, 6 months and higher than that, 165 170 zone is also possible. I'll advise him to take a stop at 124 125 zone and hold on to his position.
Okay, all right. So that's it with regards to where Servotech Power stands. We've got our next caller. Sudheen is calling us from Jharkhand. Sudheen, hi, a very good morning to you. How can we help you today?
Nice.
Hi, good morning. I can hear you, Sudheen. Go ahead with your query.
Good morning.
Good morning.
Good morning. My query is, I want to know about the NBCC. I purchased 2,000 shares at the rate of 108.
Okay.
I want to know about the system. Can I hold it at least 1 year, or we have to exit?
Okay. Got your question, Sudheen. I'll take this up with Gaurav quickly. Gaurav, your view on NBCC with regards to where charts are concerned?
Hold this stock. No point to exit it now. It has seen the bad part, the worst part. I don't see any further decline. Take a stop at 98 and hold on to the position. 115 and 120 are the levels that can be expected in the next 1 to 2 quarters.
Do stay with us, Gaurav, Asta. We have to deviate a little bit from our questions because we have to discuss the new listing of the day, and it's up about 11%. Amanta Healthcare, of course, is the name of the counter. This is an IPO that got considerable interest across the board, whether it's institutional, non-institutional or retail. All of those segments were oversubscribed. Not the largest IPO, but let's talk about this with the management and what the prospects are going forward. We're joined today, in fact, by Bhavesh Patel, Bhavesh Patel, who is the chairman and managing director of the company. Sir, apologies for getting your name wrong initially, but let me wish you all the very best and congratulations for the listing today. Can you take us through what the initial use of the funds is going to be?
So this proceeds would be used 100% for capex. We have two major revenue streams. One is the Steriport, which is our flagship brand. We are market leaders. So we are doubling the plant capacity there. And the other would be small volume parenterals. That is mainly export centric activity. And There also we have a short supply situation from our side. So capacity constraint was something which was hampering our operations. And the intention is now to develop the capacity in both the verticals.
Patel, hi, Mahima also joining in. Just want to understand with regards to your exports. You have a wide distributor network in India already, and even in terms of exports. A two-part question on this one. What are your plans with regards to where geographic expansion stands? And secondly, how much of your exposure, if at all, is there with regards to where US stands? And the entire talk about tariffs going on, what are your expectations and how do you think will that impact your business?
So I'll answer the second question first. The US tariff is not much relevant for us because we don't have exposure to US market at all. Coming to the geographic expansion, Steriport would remain primarily India-centric activity, and we have a network across the country, right from Srinagar to Trivandrum to Agartala. And our focus would be to increase market share in India only. Some of the products would be exported to Southeast Asia from Steriport format. SVP, as I said, 90% of the revenue in SVP comes from exports. And the domestic market to some extent was getting neglected. So with the doubling of capacity of SVP, we will be able to do some improvement in our domestic market share as well, in addition to our export initiative. Export would be mainly confined to Southeast Asia and UK and Ireland.
Our analyst that tracks the space was looking at the financials as well, and what she's listed out is that the products that you're manufacturing are generally faced with quite a bit of competition, and so therefore you've just pointed out the orientation and the expectation going forward is that you're going to challenge for market share. So the question that I have for you is, can you maintain the margins that you've had over the course of the last 3 years? And you've seen a trajectory upwards over the course of the last 3 years. Do you maintain it at those margins, or will you have to be more competitive in the pricing front?
I think injectable space, especially one that's consumed in a hospital, is not experiencing so much of price pressure. If you look at our historic numbers in last 10 years, our cost inflation was 2% and our sales inflation was around 3%. So we have been meeting the inflationary this thing by 1%. So that should not be a problem. And coming to, sorry, what is the first question apart from the competition part?
Question, which is you've maintained above 20% margins for the last 3 financial years, and you've seen an upward trajectory in that. Do you anticipate that that will continue, or do you expect that you will maintain it where you've seen it in FY25?
No, I think incremental EBITDA will be far, far better because a lot of overheads are getting absorbed. So doubling of capacity would not solicit proportional increase in our overheads also. So we do see a huge synergetic gain there. So there would be definitely EBITDA expansion way beyond what we are doing right now. And Steriport, right now we do roughly 120-130 crore top line. We are doubling the plant capacity, so it should be generating additional 130 crore top line.
My next question, in fact, that will generate, but that 130 crore of top line, how long will it take to reach that 130 crore? Because in the last 3 years, your revenue has been in that range of 260 to 280 odd crores. And then how will the profits also improve?
Yeah, so the top line has remained sort of stagnant because we did not add capacity. Now, with addition of capacity, we'll be able to increase the top line also.
Okay, so I can understand that you don't want to give too much away on the first day of your life on the Lal Street. We'll take that, Mr. Patel. But then we look forward to speaking to you after your next quarterly results to see where things stand. Wish you all the very best.
Sure. Thank you. Pleasure talking to you.
Pleasure talking to you as well. All right. So let me go across to Asta, because I'm sure if anyone's got a view on a newly listed company, then she does. And she's probably looked at the financials as well. Quick view on this one. Do you think that what you just heard in terms of doubling of capacity, the expectation that the operational metrics will improve and the margin trajectory should also improve, do you buy into that? Would you say that you should go out and buy right now?
No, I would not say that. Why? Because the valuation at which they have got the IPO, we find that valuation to be on the higher side. Because at the price of around 126 on the higher side of the price band of 120 to 126, it was coming at price to earning multiple of 47. So that seems to be quite stretched at that point of a time. But we know that this is a very small size issue, and what I believe that issue size of only 126 crore, when such small size issue come, it is very hard to predict first day of the listing. Why? Because they always go in a trade to trade segment, being a smaller size issue of less than 150 cr. So I think that can be one of the reasons that we have seen such a strong listing. Although my stand here is that just book partial profit, at least if anyone has got this allotment, because everything being said, I find valuation still to be on the higher side at the current levels.
So valuation a bit of a concern, and that has been the case if you think about most of the recent listings. Well, they haven't really had too much of a pop in the initial couple of sessions. Tata Elxsi is the name of the counter that we're talking about next, and we've got Bharti who's writing in from Mumbai, and she's asking about this. She's bought at levels of 7,430 rupees per share. She's got 20 shares. She says that she's incurring a loss at this point. It is quite considerable because the stock price has dropped all the way to 5,560. She says she's not really in a hurry to take money off the table, but she could if the prospects are set to worsen. So therefore, Gaurav, on the charts, is that something that you would suggest book out and move to something else? And if so, what would that be?
I think she should hold on to a position. At this current level, there is no point exiting it because the stock is likely to head northwards here, and I see the levels close to 5,800, 5,900 coming soon, and sustaining some of that mark can even take it to 6,200 odd level. So I'll suggest to hold the stock.
Okay. All right. We've got our next question from Jyoti, who's writing us from Karnataka. She's planning to invest around 2 lakh rupees for her son's future, who's 8 years old. Wants to know what sector and possible stocks can she go ahead and invest this 2 lakh rupees in form of portfolio. Asta, your view on this one?
So I think right now in the banking space, positive on ICICI Bank as well as HDFC Bank, because what we believe that HDFC Bank is one of the bank which has shown very strong, net interest margin and asset quality. So in the banking space, we are positive on these two counter. In the FMCG space, as this is, right now going on very strong on the back of the kind of GST reforms which were done by the government. I think HUL is and Britannia is looking very strong to us. So in that space, HUL and Britannia are our preferred choice. However, in the automobile space, we would still like to go with the TVS motor, but not right now. Maybe at the lower level, because this has seen a quite sharp jump. So these are some of the counters where I think one can put their money into. However, L&T is all-time favorite. So L&T can be one of the counter where one can start, making investments.
Got it. All right. Comprehensive view. So you've chosen to advise on the large cap stocks that she can buy, which is always a good thing. Pushpa has got a question. Oh, we've got a call, I believe. Ashwin is calling us from Hyderabad. Ashwin, very good morning to you. How can we help you today?
Good morning, Alex. Good morning to your panelists as well.
Good morning.
I have a query with regards to electro steel casting.
Okay.
I hold 1,000 shares. I bought it at 195.
All right.
Bought it a year back in July of 2024. I sit at a loss of 50%. So I have about 2 lakh rupees right now. Will it be a good time to average it out at the current price of 97 levels, or do I have to kind of wait? I would like to know from the expert.
Ashwin, what's the time frame that you have in mind?
About 8 to 12 months.
Okay, so it's relatively short term. Gaurav, the question therefore is, has a bottom been found? Is there a possibility of him recovering his buy price? What should he do?
As of now, he should hold on. It'll be a wait and watch for this stock. It has been a clear underperformer. I'll ask him to take a stop at 88 now and just hold on to his position. Keep the fingers crossed. If the stock manages to go past 108, 110 odd levels, then a rise towards 120 and higher levels can be expected. But as of now, just hold on.
Okay, we've got our next question on Mazagon Dock, which is from Pushpa, and she's got 166 shares bought at 2835 a piece. Wants to know from a 1 year perspective, she can continue to hold. Asta, a quick view on this one.
Yes, definitely. From a 1 year perspective, we would recommend to hold this counter on the back of a strong industry tailwind, which this counter is enjoying.
It is time now for the rapid fire round, and this is where we throw as many questions as possible at our experts over the course of 2 minutes. Let me start with endurance technology, and this is a question from Jodhpur. Seema wants to know the technical view for the long term. Should you buy at the current juncture? Gaurav?
Yes, one can buy. Take a stop at 2825 and look for targets close to 3300.
Okay, JSW Cement is the next one. Rajan Iyer is asking, he's got 100 shares at 147 a piece. That's the IPO price, wants to wait for the next 3 years. Your view, Astha?
Yes, definitely one can hold this counter from the next few years perspective.
Okay, Praveen wants to know about PFC REC. Good time to average is holding for the long term. Would you agree, Astha?
Yes, definitely averaging can be done for this both the counters at the lower levels as well.
Okay, Nesco is the counter that Gul is holding at 897 a piece. Wants to know the 1 year target for this one. Your view on this, Gaurav?
Already the stock has rallied, most likely to come down. I'll advise a cautious approach.
Okay, ITC Hotels from the hotel pack, 128 I believe is the buy price. No, 160. 160. Okay, would you book or would you hold? 18-month time frame. What's the view, Gaurav?
Hold.
Okay.
Targets close to 270 can be expected.
Okay, Senco Gold is the next one. This is from Sambi Vasarao, who's holding 900 shares, bought at 432 a piece. Wants to know if he can continue to hold from a longer term perspective. Astha, this is for you.
Okay. Yes, hold it from the longer term perspective. Price target can be set at around 415 to 420 at the initial levels.
ABB is the name of the counter, bought at levels of 5,535. Mahalakshmi wants to know whether to hold or average at the current price. Astha?
I recommend hold this counter at the current levels with a price target of 5,300 to 5,400.
Okay, BLS International is the next one. Khushbu has got 5,000 shares, wants to know till what time she can continue to hold. Your view on this on the charts, Gaurav?
Little bold downside can be expected in the immediate near term. A price target close to 325 can be seen here. That could be the averaging level.
Got it. All right, we've taken 33 questions today and quite interesting ones, if I say so myself. Thank you so much to the both of you for taking the time. Pleasure having you. And well, that brings us to the end of this edition of Ask Profit. It's been an absolute pleasure from Mahima and myself and the team that put the show together. Thank you so much for watching, and do stay tuned. Up next is Know Your Company, and this is NDTV Profit.
गोल्ड क्लास ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी। तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa, whoa, whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected.
Hello and welcome. You're watching KYC. I'm Harsh Saita. With me is Varsha Chandnani, and multiple ways to play consumption. One is obviously directly through B2C companies, front-facing companies, a Britannia, a Nestle, some AC manufacturers, a Symphony and the like. Then you have another way of playing consumption, which is you'll start looking at the raw material companies, something like a Galaxy Surfactants, right? Something like a soda ash manufacturer, like a GHCL. So to try and set it up, GHCL is the company that we're going to speak about today. Plenty of free cash flow coming in, a decent size in terms of business, a decent valuation as well. But there is obviously a set of risks that something like a GHCL runs. And one of those risks is the fact that they manufacture soda ash, and a lot of this is linked to China, both in terms of production as well as supply. Now, what happens there largely determines pricing here, and therefore you start to just wonder whether there will be pressure coming in the near term at least, because at some point that pressure will come through. So first off, this is what we'll try to understand as to whether China is a factor at this point or not. Q2 was supposed to be a soft one, is what Varsha tells me. Now, how is it looking like as of now? We're now almost through Q2. So we'll get a better perspective or a better sense. Of course, there may be certain caveats which may come through, but at least hopefully we'll get some kind of a flavor on how Q2 is playing out. It was supposed to be soft. Is it as soft as maybe they were penciling in? Capex, 300 crore. And they're going to do this on an annual basis. They're going to continue to grow the supply side of things. Mind you, this company was also into textiles, by the way. They divested the entire textile business. They've doubled down on the soda ash business. Now, that part of the pie is virtually 95% plus of the business. And therefore, all of this capex will go on that side of things, which is soda ash. It's the number 2 soda ash player. And therefore, what does this do to both when does the capacity come on stream, so the timelines for that, and second is the turnover. How is this going to impact the top line number, which has stagnated for a very long period of time, right, Varsha? You want to see, if you're investing in India, you don't mind paying a higher multiple as long as you get some growth. So I want to see how much can this number go up by. Now, number 4 is the fact that cash flow utilization. They are doing 300 crore of operating, 600 crore, I beg your pardon, of operating cash flow every year. On a 3,000 crore top line, they're doing 20 to 25% margins, which is 600 crore of cash flow. The debt isn't that substantial, frankly. And therefore, what are they going to do with this cash flow coming in? And they've been repaying around 100 crore out of debt last couple of years. Now that they are close to debt-free status, what's the outlook like with regard to the 300 crore of cash flow that they are not going to allocate to capex. Now, the fifth piece is concerns on increasing working capital cycle. Now, while this could be a low risk item and it's not translated last couple of years, but I want to understand whether this risk is real and live or not. Could this at some point of time translate, or is this not a concern whatsoever? That's what I want to know. And the last piece of this is the stability in the top line and the margins. How much of the contracts that they have with their customers, how stable are they, for how long term are they, and how much can we rely with regard to the current top line number for it to just keep going up, even if not at a substantial clip, but even stability on that number will help. Even a 5% growth with stability may help give us a perspective both with regard to top line and margins, and really good numbers overall that we will see and we will discuss. But Varsha, about the company.
Yeah, thank you for that. So as you rightly pointed out, this is the second largest manufacturer of soda ash, has almost 26% of market share. Now, what is soda ash? So it's nothing but it's also known as sodium carbonate. Is a white odorless water soluble salt, and has a wide range of industrial and domestic applications. So for example, the largest use of soda ash is in the manufacturing of glass, because it makes glass production more energy efficient and easier to ship. Also the soda ash, also manufacture sodium bicarbonate, which is also known as baking soda. But they are also into consumer products, but 98% of their revenue comes from soda ash, but 2% comes from consumer products like edible salt, industrial grade salt, and one of the honey they make, that is jujube honey. And now I was talking about the soda ash product offerings, that as Harsh was mentioning, one of the proxy play to consumer business. So soda ash is actually used in soaps, in detergents. For detergents, it acts as a water softener, in solar glass, as I told you, and in flat glass. So these are the products, or these are the segments where soda ash is being used largely. Now, onto the geographical expansion, or rather geographical analysis, if I were to talk about, 96% of their revenue comes from domestic market, that is India, and 4% from export. So basically a domestic focused company.
Yeah, sorry Varsha for that. This is one of those, again, we've tried to pick some of these even on purpose. When you're looking at the export number, no tariff impact whatsoever.
Yeah, no tariff
Everything's
impact.
Domestic, so no concerns
no
there,
concerns
right? At least that headway is something that one can look for when you're looking at companies like GHCL. Anyway, Varsha, please go ahead.
So, so this is basically what company does in a simple language, that they manufacture soda ash. Now, onto the capex, which is the next leg of growth. So they are going for, onto the current capacity, so soda ash capacity stands at around 12 lakh metric tons. And even if you see their sodium bicarbonate, which is your baking soda capacity, is at 120 KTA. And also now the main important thing is what is the capex, what is the expansion that they are doing. They are setting up a capacity, bromine capacity. Now what is bromine? Bromine is a heavy, volatile, I would say a reddish brown liquid, which is used in your water treatment, in your oil and gas exploration. If you know about Neogen Chemicals, they are into bromine derivatives, so they make value-added products from bromine. If you know Archean Chemicals, they are into bromine. So what they are doing is that they are setting up capacity of 2,800 metric tons of bromine, and they're going to generate 40% EBITDA margin from this. Now this is what as company says. Also for vacuum salt, if they're setting up capacity of 1.7 lakh metric tons at existing plant in vacuum salt, and they are also gonna go for value added products which will be derived from soda ash. Now what I want to understand from here, as Harsh was talking about the margins, because you're going into value added products, is there a chance to increase your margins? I'm gonna ask to management as well. Also they're also going for greenfield and bromine projects, so soda ash phase 1 and phase 2 capacity plus bromine capacity of 10,000 metric tons. So this is nothing but the capacity expansion that they are planning to, and this will add the revenue, this will add incremental revenue for the company which has been flat over the years. So overall this is the business model for the company and the capacity expansion that they are doing.
Okay, let's start off with the metrics. Therefore, we'll start off first, of course, as always, with the income statement, the balance sheet, the cash flow, the shareholding, the return ratios, the street cred, the street coverage, and the valuations. And let me start off, or rather, I'll allow Varsha to start off with the income statement as always.
Yeah, thank you for that. So, income statement, if you see, there's been, I won't say problem, but fluctuations, when it comes to your profits. So if you see from FY24 to FY25, the revenue has seen, the three-year CAGR revenue has been 2%, the EBITDA CAGR, if you see, has been 9%, but look at the net profit CAGR has been -1%. Now there has been challenges that the company has faced. This is because of realizations. So realizations, the prices, the end product prices, that is the soda ash prices, have gone down. The realizations have gone down, and that's one of the reasons why the revenue has seen a declining trend. So in FY24, from FY24 to FY25, if you see, there has been declining trend when it comes to revenue. Now why? Because of the global uncertainty and abundant supply of soda ash, because there was too much of supply of soda ash as compared to demand. Your realization, your end product prices has gone down, which has impacted your revenues, and one of the reasons why you're seeing a muted or rather a declining trend over revenue. But over the margins, if I were to talk about, from FY24 to FY25, the margins have increased because of the cost optimization strategies that the company has taken, and of course the better operating leverage that the company has seen. But I want to just talk about the overall margin trajectory, which is important. Now if you see, from 24% it has come to 27%, but look at in FY23 the margins were at 33%. Now the fluctuation that you're seeing is because of the realization impact, but company has maintained, though, at 25 to 29 to 27% margin. This is because of the operating leverage that I was talking about and the cost optimization strategies that the company has seen. In March 24, the EBITDA margin impact was led by lower realizations and the volumes. In March 25, if you see, the margins have increased because of the operational efficiencies, and management is expecting that the 27-28% margins will continue. We need to ask on that. So overall, we would say, because of the fluctuations and because of the realizations impact that the company has seen, we would give a neutral rating for when it comes to income statement.
How much of an impact does raw material make on something like a GHCL?
Yeah, so we would have a number to that, but yes, this would have an impact, and that's also one of the reasons.
So that's the other lever. So there are two levers which are basically impacting that margin number, is what I'm trying to spell out. One is obviously your realizations, and the other one is your raw material cost.
But I would say the more impact has been 100%. Caused by realizations.
100%. It's all realizations.
Yes,
and then there is some impact of raw material prices as well. But one thing, generally when we see some of these chemical companies and we see impact on margins from realizations or raw material costs or both, right? This is that one company which sits on the confluence of it, where you have impact of both. You don't see a 20% plus margin number on a consistent basis.
Yeah.
That's something we are seeing where GHCL is concerned. And you're seeing very, very strong return ratios, which will come up on your screen as one of the metrics. But let me therefore start quickly and talk about the balance sheet. And the balance sheet, I mentioned a few nuggets from it. There's decent equity holding. For a 5,000 odd crore company, the total book value is at 3,500 crore, which is decent. The borrowing number is largely quite contained in that sense that FY25 number is incorrect. We'll have to change that number. The cash and bank balance also seems fairly okay, like there's no concern per se. The borrowing number is currently at 120 crore, so it's fairly low. It was around 210 crore at the end of FY24 and around 360 crore, and before that it was 1000 crore plus in FY20. That's where some of the concerns have crept in, but a lot of the concerns have gone away because the borrowing number has come down sharply, both FY23, FY24, FY25. The borrowing number has come down. We may need to change those numbers again. Please consider that. When you're looking at the cash flow though, let me throw it across to Varsha. So thumbs up with regard to the balance sheet, no concerns per se. Positive with regard to the cash generating from operations and also the kind of balance sheet that it has, fairly clean. Talk about the cash flow, Varsha.
Yeah, so cash flow overall, Harsh, if you see, I mean, not bad. You know, the negative net cash flow that you're seeing for FY23 and, you know, for FY24 is because company has been investing a lot. In fact, if in FY23, company has invested almost 358 crores. In FY24, it invested 107 crores. So overall, because of a lot of investing activities, you're seeing this, you know, negative cash flow for in FY22, in FY23. But overall, you know, because of the expansion that the company is going into, we are seeing this, you know, some of the negative cash flow. But overall, you know, Harsh, for a company like, you know, which is investing a lot, a cash flow seems a decent one.
Yes, absolutely. So you've got a decent kind of cash flow coming through, and they're distributing also a decent amount of dividend. So they do around 100 crore of dividend. Out of the 600 crore of cash flow, at least last year, let me try and break it up. 300 crore has gone into capex. Around 100 to 200 crore has gone into 100 crore has gone into repayment of debt, and thereafter around 100 to 200 crore has been paid out in terms of dividend. So you've got return to shareholders which have come through as a result of that. So that's the broad brush breakup of how they've opted to utilize their cash flow from operations, and likely to happen very similar kind of likelihood in FY26 as well. But we'll get a better perspective on that. Now, I know I have to move quickly. Let's talk about the return ratios. And return ratios fairly decent. You know, they've been either mid-teens or we've seen spikes with regard to returns. And obviously that depends. It's a function of profitability. And but regardless, those return ratios above 16% all throughout. And remember, there's some amount of debt sitting in FY20, 21, which has now tapered down. So a lot of this is going to be ROC equals ROE. And therefore, you're going to see a decentish kind of a hold up with regard to that ROE number, and a lot of it is now getting reinvested in the new capacities that they are setting up. So that's with regard to return ratio, shareholding pattern,
Yeah,
Varsha.
so overall, you know, on the promoter side, if you see, Harsh, the stake has been like 18 to 19%. I mean, we would like companies, you know, who are going for, I mean, the skin in the game matters a lot. But if you see, FII's holdings has been decent, DII holding has been decent, though the public holding has been lot at almost 44%. The only concern is, you know, at 18% of stake, which is, you know, because, Harsh, you know, we have normally seen companies having 40, 45% or more than 50, 60, 70% of stake in the company. Over here, it's only 19%. That's the only concern. But yeah, FII's and DII's stake has been good, and this is one of the reasons why we have given a neutral rating, you know, when it comes to shareholding pattern.
Okay, let's talk about street cred very quickly. And within that street cred, you look at the near term, it's not been too great, understandably so. There's been some pressure, but you look at the 5-year period, the stock has been a 3.5 bagger. So it's been decent from a long-term perspective, tough from a short-term perspective, and therefore we've given this one a neutral. You want to talk about valuations and maybe to some extent analyst recommendations? Okay, I'll take up analyst recommendations.
Yeah, so on valuation side, you know, the considering FY26 and FY27, the stock is at like 8 at a PE of 8, considering FY26. Now the numbers are taken from Bloomberg. Just to know that in FY27 basis, FY27 the company is getting at almost 7 PE, which is, you know, quite at a cheaper valuation. But we have we also have to consider the historical financial ability that the company has seen, and that's also maybe one of the reason why not a premium valuation has been given to. But if company shows some growth, this is like at 7-8 P. I mean, it's a good valuation.
Okay, so that's on the valuation side. Well, not too much coverage to talk about, but whatever it is, let's quickly show it. We've got 2 buy calls, 1 hold call, if I recall right. 46% upside is more than decent, and that's also a function of the way valuations have evolved. But there are plenty of changing pieces on the balance sheet side where debt has come down. So what you want to also do and also see is that balance sheet. Keep that in mind, because the debt has come down, and while your valuations have also remained largely in line with the 5-year average, that is the big change that's happened. Overall, no thumbs down is the other piece that stands out for me, and therefore this one gets a fairly decent 6 out of 8. I would believe it's 5.5 out of 8 on the final KYC rating. So anyway, let's quickly go across. We have Mr. R.S. Jalan, who's the Managing Director at GHCL, joining us. Sir, let me first start off with the China factor. How much of that is playing out with regard and impacting your realizations? Are we seeing any of that as a significant concern currently?
Well, thank you, Harsh, and good morning to both of you. I think very nicely you have presented the whole history of GSCL.
Thank you, sir.
And before I respond to this, your China situation, which you have just asked for, I just want to give you some perspective of the GSCL. See, in the GSCL, we are having around 40 years of the legacy. In these 40 years, now we are one of the largest soda ash producers in a single location in India. The second, our market share is around 26%, which used to be around 15 years back, used to be around only 15%. So we have moved from our needle from 15% to 26% market share. Our capacity has gone up double in last 15 years, and our revenue has gone by 3 times. Our profitability has gone by 8 to 9 times in last 10 to 15 years. And our market capitalization has gone up by 25 times. So I would say, Harsh and Varsha, that in last 15 years, we have created a very strong foundation for the GSCL, where we are one of the cost leader in the margin leader in this industry. Second, we have created a long value for our stakeholders, and we have a kind of a long legacy. I just want to add one more thing here, is that our cash flow at this point of a time, as you very rightly said, from a debt of around 2,000 crore around 12 years back, we are today 1,000 crore plus in the balance sheet. So this is what the journey which we have gone through. Now coming back to your point on China. China has around 45% of the global capacity. Against 80 million tons of the total global capacity, they have something around 38, 39 million tons of the capacity. And obviously, China has a major role to play in the global scenario. But good thing which has happened in China in last 2 years is that on one side, they have added the capacity of around 10 million tons, but on the other side, the demand has also been very phenomenally very high. Around 10 to 18%. In 2023, it was 10%, and in 2024, it was 18% growth, which was a very phenomenal growth. Of course, currently, in the short period of last 5 months, their capacity has been, their market or their demand outlook is slow, and because of that, there is no growth in calendar year 25. Yes, in the short term, definitely we see a kind of an implication of China's scenario onto the overall global soda ash business, and that will definitely have an impact on the Indian industry as well.
So the pricing pressure is still expected. So will that impact your Q2? Because I remember that last time you said that a Q2 will be impacted, but now since we are very near to the Q2, how is Q2 looking?
Yes, Varsha, Q2 and maybe 1 or 2 more quarters is definitely going to be challenging for the industry per se. But like I said, if you look at the slightly longer terms in this business, like you have very rightly presented the number, our EBITDA margin is in the range of around 25 to 30% kind of a margin range. And I think if you look at maybe 2 years down the line, probably you will see a kind of that kind of a margin will continue to be there. I just want to highlight one more thing here. Is like you very rightly given the number in 2024 versus 25. On one side, our prices have gone down by 19%, but our bottom line is only hit by around 4 to 5%. And this is all not because of only the raw material prices. This is all because of the operational efficiency which we have built in our business over a period of time. And this capabilities of ours will continue to drive us from it on a different level of scales.
Understood, sir. Sir, talk to us about where does the top line go? You're adding capacity. You've guided for 2 to 3% growth in FY26, if I'm not wrong, and we've built that into what we've built into our valuation metrics. But talk to us about beyond that. Bromine comes on stream. You also have fresh capacity of soda ash coming on stream. When does that come, and how much does that add to the top line? Give us that perspective. What does it take your potential top line to? I understand realizations are fluctuating, but give us that perspective.
Right, Harsh, in this year, 25-26, we will have both the capacity of your bromine, which is, as you rightly said, 2,800 tons will get added to this, and maybe last quarter of this year, that will come on stream. And our vacuum salt will also come on stream on the last quarter. Beyond that, in next 5 years, our vision for 2030, because we are setting up a new greenfield project where we have a vision of around doubling the capacity what we have right now. From 1.2 million ton, which we have currently, it will go to 2.3 million ton. And you can imagine this number going just going to be double than what the revenue we have and all other numbers.
Also, sir, with just on the extension of this question that Harsh was talking about, I just wanted to know, because of this, the capacity expansion that you're seeing over the longer period of time, how are you seeing the EBITDA margin, increase? Will you see the increase in EBITDA margin because of the value-added products that you're going into, and because of the expansion, that you are doing? So, any kind of a ballpark, a number that you could give us on margins for the next, 2 years?
See, what's up, when you talk about the next 2 years, like I said, our capacity of the new greenfield project will be coming in the only after 3 years. So that's number one. So therefore, the margin expansion on that soda ash business will be after 3 years. Yes, bromine and your vacuum salt will definitely improve our overall margin. But the percentage of that in the overall revenue will be not very significant, and that may not lead to kind of a very significant overall margin increasing in the business. But that will obviously add to the bottom in terms of the absolute number will get added.
The balance sheet metrics on your screen now, that borrowing number clearly visible. Mr. Jalan, I want to understand, you're doing plenty of capex. How much you've guided for 300 crore over the next couple of years? For how long is this kind of capex cycle going to last you? And what's the return? Because 300 crore over the next 2 years, even 600 crore is virtually nearly 10% of your market cap, or more than that, in fact. So talk to us also about the return ratios. What does it do to that number? What's the aspirational return ratio you want to maintain as a floor, as the absolute minimum?
See, Harsh, if I can talk about this 300 crores which we are talking about, primarily these numbers are going into two parts. One is the bromine and vacuum salt business, that is number one. And there the return ratio will be very, very significantly higher, which will be something around more than 30%. The second is the operational efficiency which we are I spoke about it. So that will also kind of help us to kind of maintain or improve our margins. Overall, in these numbers, probably you can visualize a kind of a return ratio of around more than 20-22%.
Sir, just my quick last question is that, of course, as the capex cycle will play out, what do you do with the cash flow? Does this mean better dividends to shareholders? Because you'll have 300 crore of free cash flow, your debt is now sub 100 crore. Give us that quick perspective, sir. I have only 20 seconds. Sorry.
Yeah, Harsh, I think the board will definitely take a call on that. But like I said, we have to invest around 6,500 crores into the new greenfield project that will start getting spent after 2 years. So probably we will kind of have a discipline of the growth as well as the dividend to the reward to the shareholders.
No more reduction in debt, sir. Is that the right way to think of this?
No, we don't have a debt, Harsh, right now.
Correct. Sub 100 crores. So broadly, it will entirely be either dividend, either capex. Is that the right way to think?
Yes.
Perfect. Thank you so much, Mr. Jalan, for coming in and giving us that perspective. Of course, this likely means that your dividend yields will go up as a result of this. That's what I was really looking for. Anyway, we was completely out of time on this edition of the show. From Varsha, myself, everyone who puts this show together, thanks so much for watching.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग, तब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Markets hold in green, Nifty steady around 24,850, Sensex up over 200 points, Nifty IT zooms ahead, top sectoral gainer, while pharma and autos take a breather. And the US Senate introduces the Halting International Relocation of Employment or HIRE Act, seeking imposition of 25% tax on outsourcing payments. IT stocks remain resilient, IT the top sectoral gainer. Infosys up nearly 5% after the company announces that its board will consider a share buyback proposal on September 11th. This marks its first such move since October 2022. Prime Focus builds on gains after hitting upper circuit yesterday. This after ace investors Ramesh Damani, Madhusudan Kela as well as Utpal Sheth pick stake. And NDTV Profit gets ready for the GST Conclave to be held today based on the theme Reforms for Resurgent India. Stay tuned. Good afternoon. You're watching Markets at 12 with me, Shreyansi Singh. First things first, let's take a look at the markets, and it looks like a decent picture as far as the Nifty and the Sensex are concerned. So Nifty, it's about a 68-point gain that you're seeing there as well. And when you take a look at Sensex, that's the one that is jumping about 200 points, there about 230 points. as we speak. Let's also quickly take a look at the list of gainers in terms of the sectors. And no surprises there because IT, in fact, is remaining quite resilient, 2.5% uptake for IT. Other than that, there's pharma, FMCG, media and rural sectors following suit. And on the flip side, there's realty as well as defense and auto that are in the slow lane. So those are some of the sectors, and that's the entire sectoral picture. But let's also quickly take a look at some of the gainers from within the Nifty 50 pack. Again, there's Infosys, Wipro that makes it to this particular list. Tech Mahindra as well, up about 2% as we speak. Infosys, in fact, is the one that is up about 5%. And they do have that buyback news where they're going to be mulling a buyback on September 11th. So on the back of that, you do have that stock in good shape. Other than that, there's a Dr. Reddy's, Adani Ports, HCL Tech, Bajaj Finserv, as well as TCS up anywhere between 1 to 2.5%. As we speak, so those are your top gainers from within the Nifty 50 pack. On the flip side, there's an Eternal, a Trent, Titan Company, Tata Motors, as well as Bajaj Auto that are on the downside. But let's also move on. Let's get you the list of counters that you should be keeping on your radar at this point in the afternoon. In fact, Vansh is standing by with just that update.
Well, yes, so let me start off with RailTel. Now, the company has won orders worth rupees 713 odd crores. Now, the orders include multiple LOAs from Bihar Educational Project Council, and it also includes procurement and installation of smart classrooms at government middle schools, and this also includes the supply of teaching and learning materials as well. Now, the majority of the orders are to be expected to be completed by March 2026, and the order book of the company stands at about 7,200 odd crores as of Q1 FY26. Second on my list is Quality Power and Electrical Equipment. Now, the company, the step-down subsidiary of the company, has won 2 international orders, and the orders are worth approximately 75 odd crores, and they are expected to be delivered in the next 2 years. Third on the list is Elpex Solar. Now, the company has received orders worth rupees 345 odd crores for the supply of solar modules, and the projects are scheduled for the completion by March 2026. So these are some of the stocks that are buzzing in the trade on the account of developments that I just mentioned.
Well, absolutely, and speaking of buzz, then let's also take a look at Prime Focus, because that stock is up and away in trade yet again. It hit upper circuit yesterday, and as you can see at this point in time as well, 10% to the tune of 10% is the kind of gain that you're seeing on Prime Focus. It's on our radar on the back of that 20 lakh shares changing hands at about 187 rupees a piece. In fact, the stock is also buzzing at this point in time as well. Mahima, in fact, is standing by with that entire update there.
Right, so as you rightly mentioned, large trade has happened yet again in Prime Focus, and this is the third straight day where a block deal has happened in this counter. Around 20 lakh shares have exchanged hands at a price of 187.61 a piece. Yesterday also, the block deal took place of around 3.87%, in which the transaction price was 156. Marina Horizon sold around 0.3%, Marina Ivy sold around 1.56%. Augusta Investments yet again sold around 2%, and Kraft Emerging Market Fund bought around 3.87% stake. Day before yesterday, marquee investors like Madhusudan Kela entered the counter, bought around 2% stake. Utpal Seth also bought around 0.6% stake, and Ramesh Damani also entered the counter and bought around 0.3% stake. The stock has been since focus in the past few days and has seen a significant amount of up move in the past 1 month as well. So this is the overall view of what's happening with Prime Focus.
Well, absolutely. Thanks, Mahima, for getting us that entire update. So the stock is buzzing, and that's for the third day in a row. But let's also move on. Let's get you the update as far as IT then is concerned. Firstly, let's take a look at what Gen AI as well as Higher Bill are going to be doing, and their consistent uncertainties seen for IT players. And that's, in fact, the word also coming in from Moshe Khatri of Wedbush Securities. Let's go across and listen in.
So a couple of things. This really is another attempt to regulate or pretty much cap outsourcing. We've seen this, we've seen multiple attempts on the regulatory front, probably in the past, 15, 20 years to get it done. Ultimately, reason prevails, right? And reason prevails because if you think about this, you need the scale to be able to disintermediate, some of the work that gets done out of India. You need massive scale, not just scale. So that's one thing that you have to remember. And again, in the past, what was it? The visa programs and capping visas and raising prices on visas. And ultimately, it does have to go through the Senate. It has to go through a vote. The president still needs to sign it. So it's a whole process. The issue for this industry is that it seems that it can't really catch a break, right? Because we've had multiple challenges or multiple concerns, anywhere from spending that's been kind of under pressure on discretionary work. That's been going on for a couple of years now. You have the impact of GCCs. You have the potential disruptive impact from Gen AI, and this comes up. So it probably adds in general to the negative sentiment impacting the space. But again, given what we've seen in the past, ultimately, from my perspective, we believe that reason will prevail. And whatever has to happen has to be logical for U.S. businesses. And if it's not, it probably won't happen.
Rather than IT, the top sectoral gainer as we speak as well, and that's also some key commentary coming in as far as the road ahead for IT is concerned. But let's move on. Let's get you the word. In fact, let's get you the update, in fact, as far as one stock that is buzzing away in trade is concerned. And I'm talking about Ujjivan Small Finance Bank. That counter is up about 6% in trade. The bank conducted their analyst day as well. Harsh is joining in with more details on what MK then had to say about the key takeaways.
Well, and ambitious plans as well. They're planning to get their gross loan portfolio to around 1 lakh crore by FY30, which is certainly ambitious because it will mean that the loan portfolio triples over the next 4 financial years, or rather 5 financial years. So very, very strong growth plans. Out of this loan portfolio, around 70% will be secured is what they have suggested and alluded to. So there will be a large tilt towards secured. In terms of cost ratios, expected to come off. 6% is what the cost to assets is currently at. They're expecting that to come well below 5% is what they've suggested. They've also said that universal banking license will come through, and they're expecting that to come through by December of 2025, which will be critical from a liability perspective. They say that the plan is agnostic to the universal banking license in terms of scaling up, but it could boost the liability profile of the bank in a significant fashion, and therefore that will be the big positive. Better asset quality visibility is expected in H2 FY26 is also something they've spoken about. They've spoken about sustainable 1.8 to 2% ROA. All of those pointing to positive outcomes, hopefully, if all of this were to play out.
Well, absolutely, and that counter is buzzing away in trade, 6% uptake coming in on Ujjivan Small Finance Bank. And speaking of buzzing away, in fact, let's take a look at Metro Brands, because even that counter is up and away in trade, 4% uptake thereabout coming in on this particular counter. Nissan Joseph, who's the CEO of the company, stated that the company is going to be immediately passing the entire benefit of the new GST reforms to consumers. He also assured that the GST changes will not affect the company's profit margins. Let's go across and listen.
I think it's the positive revenue is really the increase of demand that comes when you lower price points. So that's where the positivity comes from. As far as clearing out the old inventory, it's not a question of old versus new, right? It's a question of what is tagged. So we can instantly start giving them the benefit of the GST discount right away. And then the new products would have that rolled into the price. So it's not new versus old. It's really a new price point that we're trying to get, but we can reach it a couple of ways. But the bottom line is we plan on turning all those GST savings back to the consumer in all of our banners. No, we don't see a distinct difference between, a product that might be at 5,000 rupees versus a product that's at 2,000 rupees. Our sourcing structure, our margin structure remains pretty constant. So we don't see that, and I think you mentioned inflation. Inflation is always going to play a part of it. And as inflation comes up, you try to reduce some other costs. So you try to get operating leverage to try and maintain that trajectory of that 15% or the mid-teen PAT numbers that we guide to.
All right, and that's the update coming in as far as Metro Brands then is concerned. But speaking of updates, let's quickly take a look at some of the other counters that are also buzzing away in trade. In fact, there's a Voltam Transformers, and that is on the back of promoters that may sell 7% stake for that $67 million through the block deal. And the floor price that you're looking at for this one is about 7,600 rupees per share at a 2.2% discount. So that's one counter that is in focus. On the back of this news, down about 3.5% as we speak. The next one that we should be looking at is Quality Power Electrical, and it's an uptick coming in on this one on the back of the step-down subsidiary also winning 2 international orders. It's up about 2% in trade at this point in time, and orders are worth about 75 crore rupees going to be delivered over the next year. So that's something that you're looking at as far as this particular counter then is concerned. Other than that, there's an IRB Infra on the back of that 12% year-on-year toll revenue growth that we saw coming in the month of August. You did have that combined toll revenue where you saw this 12% year-on-year uptick as well. Toll revenue for both entities, in fact, has risen to the tune of about 563 crore rupees in the month of August. And they also anticipate this growth momentum continuing in the next few months as well. So that's also an important update as far as IRB Infra then is concerned. But speaking of buzzing away, in fact, let's also quickly take a look at gold as well, because gold is something that has punched through $3,600 an ounce. Another day, another record high coming in for this particular metal. More legs to the rally is something that we've seen come in on the back of Fed rate cut hopes as well. Traders are pricing in three rate cuts at this point in time this year. You've seen gold break out of this months-long holding pattern. And you also have ETFs also piling into bullion as well since Jackson Hole conference. So that's also some important updates coming in as far as gold is concerned. But let's also quickly take a look at what is the kicker when it comes to gold. What are the factors that are in fact driving this sort of uptick that we've seen for the precious metal? First things first, it's fresh geopolitical risks that you're considering across the globe, and that is also something that is helping gold prices. So while you do have ETF inflows that are not higher than the COVID levels that we saw coming in, still good level of inflows for ETFs as well, for gold as well as silver. And we'll get to silver in a bit, but policy uncertainty is also something that you should take a look at as a factor for gold prices. Central bank purchases also key to take note of, because you've seen a bunch of central banks also step up their buying when it comes to gold, and that's also a very important factor. But what is really helping these renewed bets when it comes to US Fed rate cut hopes, that is also something that you should be taking a look at. And Fed chair, in fact, also cautiously opened the door for a reduction. So on the back of that, you do have gold prices that are going to remain in focus, and so will silver. In fact, let's take the conversation forward. Get you some key commentary coming in. Tejas Shigrekar, who's the senior technical analyst, commodity and currency at Angel One, is joining us this afternoon. Thank you so much, sir, for joining us. First things first, I've got to talk about gold, because another day, another record high coming in for the metal. Do you see this sort of momentum also sustaining?
Yes, thank you very much for inviting me on your show. Yes, such kind of the momentum keep coming up since from the April onwards. The aggressive rate cuts are also going to be pushed out in this market. Whenever Trump was announced the tariff plans since from the April, the prices has keep boosting out the prices, as well as the bullion saga has been begin since a multiple high right now we are reaching up to. The weaker dollar is again making certain space for the bullions, as well as the central banks meetings keep going on for the hedging purpose, as well as the building them the new policy results. Could be make some certain kinds of pressure on the dollar, as well as this pushing the gold and silver prices on the higher note. Since from the so far from the 2005, 2025 to 2005 up till now, we are looking forward the prices having the boosting from the lower level to the making their multiples highs. Currently in this year, financial year, we are looking forward it's already reached up to the 35 to 40% right now. The still some other Fed meetings are keep going on in this month. So September month, might be looking forward the 85% to 90% ratio is towards the 25% basis point cut. So far, so soon, the market will again boost up this price rally continuation. And so in the coming month, so we are looking forward the prices will reach up to the $100 term 4,000 mark.
All right, then 4,000 is something that you're looking at going forward as well. But you know what's very interesting is that this morning we've gotten some very interesting commentary also coming in from brokerages. And one thing I wanted to understand is whether you think 5,000 is something that gold can unlock. Is that sort of bullish momentum to that level? Is that something that you're penciling in?
Currently, certain prices are not so far bullish because this rate cut news is keep going on from since 3 to 4 months away. So prices are already discounted at particular news, and right now we are mortgaging about the high level. So prices are currently reaching out to the 3,700. mark, then freight, if suppose this going to be happen 25 basis as well as the continuation of this freight cut rallies up to the 50% also till the year end. So we could see these higher levels are keep boosting the prices, and prices could be cross the 4,000 and 4,400 up to that mark.
Well, absolutely, that's something that we're looking at in terms of gold. But what are the key support and resistance levels, if you can help us out with those as well?
In this particularly September, when we're looking forward, the price structures is keep pushing from the lower level to lower high, and right now is pricing reaching at the higher levels and making the multiple highs. As well as when we see the China boosting the gold reserves as well as to the 10 strengthening numbers. So we can say the 74 billion is already mentioned. And as well as when we see the overall momentum of coming up from the inflation data as well as in this particular week. So prices could be reach up to the $37.50 term, and near term in the MCX market, it's up to the 1,10,500.
Well, absolutely, 10,500 is what you're looking at. But just one quick update as far as silver is concerned. You've seen that silver-gold ratio also changing drastically at least this year. And you do have silver also playing catch-up, right? So I can't not ask you about that. I wanted to get your sense as far as the momentum for silver also is concerned.
See, the ratio was already disturbed. When we see the larger players on taking the positions, they always look forward to how the this ratio particularly working. In the April month, as well as the continuation of the current month, it's drastically changed. So position is almost looking forward the industrial production data as well as the how that production work in the real market. The EV and the electronic sections already using the silver positions, as well as the solar system is already mentioned over there. So position is keep building out from the international perspective, and ratio is again is one of the concern for the making that hedging person. The overall, when we look at the technical perspective, is 44 to 45 is a near-term dollar-term levels in the silver.
Yeah, absolutely. That's something that we're looking at. But just one quick update that I wanted from you. What do you have in mind when it comes to silver in terms of prices? What are the kind of prices that you have in mind there as well? Because last week we saw prices breaching that $40 an ounce mark. For the first time since 2011, you do have a good level of factors that are going to be helping, because fifth year of supply deficits is also what you're looking at for silver.
Yes, definitely. Price structure is such bullish signs are keep building up, and all the oscillators are keep making the higher high. So if this rallies keep sustaining, the current target prices which we looking forward is 1,35,000 and 1,34,000. If that price sustain and the price reach up to the 1,37,000 mark, so we could see the 1,42,000 it's near-term targets.
All right, then those are some of the near-term targets as far as gold and silver then are concerned. That pretty much covers everything. But I also wanted to get a quick sense of what you think about crude before we let you go. What do you have in mind when it comes to crude prices? What is the momentum that you see there as well?
See, some of the factors when we're looking forward to economic numbers, it's keep not favoring to the oil market. When it's coming from the Fed chairman, keep making the certain rate hike and rate cut marks announcement over there, from the pushing the all over price structure from the tariff to the from the dollar term. When we looking forward to calculating those part, so is nearly to break the $60 mark in WTI crude, and we can reach up to the $58 in near term. So in the MCX market, we looking forward 5,000 mark is going to be breached out, and the next upcoming target is 4,700.
Right, absolutely. So that just about sums up everything that we had in mind. Thank you so much for helping us out, not just with gold as well as silver and oil. And that was quite the day to talk to you about gold as well. Another day, another record high coming in for gold there. But let's move on. In fact, last week, NDTV hosted the Bhopal chapter of its seminal regional event, the Emerging Business Conclave, with Chief Minister Dr. Mohan Yadav As the chief guest, the event focused on how entrepreneurship, education, skill and vocation are making Madhya Pradesh a developed and inclusive state. Also speaking at the event was Bhuvan Ribhu, the founder of Just Rights for Children. And that's an important update coming in there. But tell you what, with that, let's also quickly take a look at this particular event that we've talked about, the Bhopal chapter of its seminal regional event.
इमर्जिंग बिजनेस कॉन्क्लेव में आप सभी का स्वागत है। देश के दिल मध्य प्रदेश की
The NDTV Emerging Business Conclave Bhopal chapter was a confluence of the state's topmost policy makers, Chief Minister Dr. Mohan Yadav, ministers, business and thought leaders, academicians, artists and entrepreneurs. One of the most powerful conversations at the conclave reminded us that while education lays the path to a future-ready workforce and can transform the nation's economy, child marriage steals that promise. Cutting short dreams, silencing potential and closing the doors to a life of opportunity.
बाल विवाह को खत्म कर दें.
The conversation was with eminent child rights activist and founder of Just Rights for Children, Bhuvan Ribhu, who talked about how early protection and proper social reforms contribute to long-term economic development and sustainable business ecosystems. This discussion emphasized that safeguarding children's rights and ensuring their education isn't just a social responsibility, it's the bedrock of a thriving, inclusive economy.
अब भारत में आज मात्र 19,000 करोड़ रुपए की जरूरत है देश की हर बच्ची को 18 वर्ष तक शिक्षा दिलाने के लिए। तो कोई कारण नहीं है कि अगर सारा भारत इसको कॉर्पोरेट सोशल रिस्पॉन्सिबिलिटी से अपनी रिस्पॉन्सिबिलिटी थोपी हुई के बजाय कॉर्पोरेट सोशल अकाउंटेबिलिटी की तरह देखे कि ये हमारी अकाउंटेबिलिटी भी है, ये हमारी जिम्मेदारी के साथ साथ हमारी अपनी सोच भी है। तो वी मस्ट इन्वेस्ट इन एजुकेशन ऑन वन साइड एंड ऑन दी अदर वी मस्ट इन्वेस्ट इन सेफ्टी, इंटरनल सिक्योरिटी। अगर हमारी बच्चियां, अगर हमारी बहनें सुरक्षित महसूस नहीं करती, अगर जस्टिस डिलीवरी पॉसिबल नहीं है, तो ये फिर बिजनेस फ्लरिश नहीं कर सकते।
And why is this an important point to make? The World Bank estimates that integrating 50% of women into the workforce could boost India's GDP by 1.5%. Ending child marriage is not just a moral obligation, it's an economic necessity. The conclave provided a platform to investors and entrepreneurs who are holistically shaping the development story of Madhya Pradesh. The discussion highlighted the seminal role that business persons have in ensuring social justice through the impact and control they wield.
Be just. Be just. मैं आपके अंदर जो ये सही और गलत की सोच है, अगर ये बच्चा मेरा होता तो मैं क्या करता, अगर इस इलाके में मेरे बच्चे रह रहे होते तो मैं क्या करता, मेरी फैक्ट्री के बाहर अगर मेरी बेटी घूम रही होती पैदल तो मैं क्या करता, जो मैं तब करता उसी की जिम्मेदारी लेने के लिए मैं आपसे अनुरोध करूंगा। भारत पॉसिबिलिटीज़ की जगह है और आज हम ऐसे मुकाम पर पहुंचे हैं जहां सारी दुनिया में कम से कम बच्चों की सुरक्षा का तो लीडर हम ही हैं। तो अगर हम भारत में बाल विवाह या ट्रैफिकिंग या इस तरह की बुराइयों को ख़त्म कर देंगे तो दुनिया की 1/3 बुराइयां ख़त्म हो जाएंगी।
Ultimately, protecting our children from these crimes is a collective responsibility that requires more than just money. It demands our time, conscience, and unwavering commitment to justice.
All right, an emerging business conclave Bhopal chapter is what you took a look at, but that's all the time that we have on the show. Thank you so much for tuning in.
That's huge. That is a biggie. It's out of there.
गोल्ड क्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Hi, thanks so much for joining in. You're watching NDTV Profit. My name is Alex Matthew. With me is Puneet Zaveri. Hi, Puneet.
Hi, Alex. Good afternoon.
Good afternoon. And you're watching Profit Buzzers on NDTV Profit. But before we get started on all of the Profit Buzzers today, we have to tell you, in case you haven't yet heard, about the key event to track today. And it is on NDTV Profit, live and exclusive, starting at 3 p.m. And we're talking about the special conclave that we've lined up just for you. It is on everything GST. And everything that you've seen over the last few days in the market has to do with the big GST reform. So let's talk about that for just a bit. Starting at 3 o'clock today, we're going to be speaking to the who's who from North Block, from India Incorporated, and everybody who should have a say on this matter. And we're speaking, of course, to the Finance Minister Nirmala Sitharaman, as well as the Commerce Minister Piyush Goyal. You have the Chief Economic Advisor who's going to be there. You have the CBIC head who's going to be there to talk about the tax perspective. So everything you need to know about the expected consumption push that could come about on account of this GST reform, the move to a two-rate structure, to the revenue implications, to everything in between. What it means for you as a consumer, and more importantly, what it means for you as an investor in the Indian equity market. We'll talk about all of that and more. In the meanwhile, as we run up to that event, I would encourage you to write into us on our social media platforms, or indeed on the comment section while you're watching this. Tell us what you would like to listen to. What specific questions do you have so that you can make your investments accordingly? Let's take a look at where markets are right now very quickly. And we have had a pretty chop and churn kind of a session, but we've held on to gains for the benchmark Nifty 50. It's been range bound, but we are trading very close to that 24,900 mark. Remember, that's when the U-turn took place towards the end of the session yesterday. And the sector that was losing ground in trade yesterday is the one sector that is shining bright. And I'm talking about the IT sector. This is something that Puneet tracks very closely, and he's going to be talking to you in just a bit. But Infosys, really, the story today is all about that buyback that's lined up. They're going to be talking about this, the board of Infosys, on the 11th of September. We've spoken about the quantum of money that could be spent in this buyback. It could go anywhere between 30% or thereabouts of the cash that they currently have. And we're talking about as much as 45,000 crore that they currently have, Puneet, in cash. So we'll talk about that in just a bit. But before we do, let's get on board the management of Aris Infra Solutions. We've got Srinivasan Gopalan, who's the Chief Executive Officer of the company, joining us today. And thank you so much, Srini, for taking the time. Pleasure speaking with you. Let's talk about this latest project that you've gotten, right? And it's a 200 crore luxury project that you've announced in Bengaluru. What can you tell us about this? What are the prospects?
So the most important part is this is a villa development within the city limits. So that's very, very difficult to find otherwise. Today, you can find a lot of villa and plots available outside the city. And this place is just 15 minutes from Mall of Asia, 15 to 20 minutes from Mall of Asia. So that's a big highlight. Location is a great highlight. And you get 3-bedroom villas here. So we are expecting that we will do great in this project.
Srinivasan, a very good afternoon to you. Thanks so much for joining in.
Good afternoon.
So largely, we have been speaking to you since you listed in earlier this year, and a lot of it has gone into a lesser spoken vertical about yours, which is the EPC vertical, as well as what you guys are doing on that aspect. Talk to us a little bit about what could be the future opportunities similar to this one that could be coming out of there. Also, what kind of revenue contribution, if any, range, if you can give us from that EPC vertical that you could give, because that has the higher margin compared to your traditional business.
Sure. So first of all, I beg to correct, it's not our EPC business. It's called the development management business. So EPC is just one part of it, and that too it is an outsourced one and not a part of our service. So let me quickly explain what is development management. As soon as the project gets all its approvals, there is a host of things to be done. Coordination with the contractor, coordination with the sales team, selling, collecting the things, managing day-to-day cash flows. This is the aspect that the services business of Aris Infra Arm does. So as of today, you will be amazed that we are handling more than 2.5 million square feet of development, which is the development management business. So having said that, what are the advantages of this? One biggest advantage of is this is a fee business. So on a top line, we generally charge between 10 to 13% of the top line, which is a purely fee business. And the cost of that is just a little bit of manpower. So it's a huge margin business. The second aspect of it is whatever materials that are required for this project are all supplied in-house from Aris Infra. So you have two advantages. One is the top line that you get. And the second thing is the profitability with extremely less amount of working capital locked into such projects. And we have complete visibility of the project right from day one till the money gets back to the company. So these are the big advantages and brings a lot of stickiness for the business with the developer.
Mr. Gopalan, then let me ask you this, right? So as I understand it, FY26, the current financial year, the expectation or the target at least for revenue growth, as it is going to be for the next 2 to 3 years, is that 40% to 50%
Yes.
revenue growth, and the margin projection is between 8 to 9%. Are you likely to breach that mark in the short term in terms of the revenue growth, and what is the updated expectation on margin projection?
So basically, we have given our guidance as far as this year. We will be, the top line will be between around 1,000 and 1,050 crores. So that is a guidance that we have given. We are completely on target for that, and even the profitability guidance that we have given. The demand for services has increased, and especially not to our expectation, much more than that, especially after the IPO, that we have close to 500 crores of business we have tied up after the IPO on the services business. So we anticipate that the services business will be between 6 to 8% of the top line. And these are really, really high margin business. I don't want to give a number to it, but it is an amazingly high margin business.
Got it. All right, so we'll speak soon enough. Mr. Gopalan, thanks so much for joining us and for giving us the perspective on this latest project and the outlook going forward.
Thank you so much.
Our pleasure. Well, on NDTV Profit and otherwise, of course, one of the big stories so far in 2025 has been the Jane Street issue. And this is something, of course, that you are well aware of. But the latest coming in is heated arguments before the Securities Appellate Tribunal, or the SAT, between Jane Street and the market regulator Sebi. Jane Street had filed that case, remember, against Sebi in front of the SAT on the 2nd of September, demanding documents relevant to the ongoing investigation into that case and the allegations, of course, that were made by the Securities and Exchange Board of India. Charu joining in to tell you about the arguments that have been made between the two sides and also what the SAT has said. Charu, what are you picking up?
So the Securities Appellate Tribunal has fixed the matter for further hearings on November 18th and given both the parties to file their detailed replies and submissions before the three-bench authority. However, what we are picking up is that Jane Street mentioned before the three-member bench that, it needs some relevant data points and details of the correspondence between Sebi and NSE that took place before the interim order, as well as the internal reports that led to the finding that Jane Street was, engaging in manipulation. They want all this relevant data before they are able to file a detailed reply to Sebi's notice or allegations. However, Sebi mentioned that there has been no cause notice issued yet. However, since it was an ex parte order, we have given Jane Street entities an opportunity to get a hearing. They do not want that. They want internal communications and data, and this information is currently at a crucial stage of an investigation, either not relevant or is confidential and cannot be shared. In fact, the representative of Securities and Exchange Board of India mentioned that they are not going to provide any more information before, anything more than what they have already given, and they are not required to do so either as per the relevant case laws that have been, filed in the past as well. They also mentioned that Jane Street, as per their interim order as well, that they used to buy a huge amount of contracts of Bank Nifty in the mornings and then used to participate in contradictory trades throughout the day, used to basically pump up the price and caused market manipulation, and these are the charges on which it wants a detailed response from the entities and wants to understand their strategy and want them to put on record their own strategy, and that is why they are not going to be sharing any more data. So the battle has begun, and we will be keeping you updated as to what kind of arguments come from both the sides.
Thanks so much, Charu, for getting us those details. So that's something goes without saying. We'll bring you the latest updates as and when we get them. Let's talk about the GST situation that we have, right? Because one of the big talking points in the markets, as we started this show with, Puneet, is the consumption push that we're likely to see, right? And we'll talk about some aspects of that starting 3 o'clock today. But before we get that, what is the research community talking about the prospects and the opportunities that arise from this reform?
Well, it's definitely a lot of sectors that get a huge benefit. So you see that sector, already a lot of moves essentially on sectors like auto, on electronics, on discretionary, amongst others, that you see that benefit. But there's also a fiscal math to it, right? Because you will be essentially losing out on some revenue, and brokerages like Nomura have come out and said that they could see a disinflationary impact of roughly 0.3 to 0.4 percentage points to the headline inflation, and there we'll see that impact. But despite these fiscal uncertainties, they don't expect essentially the slippage for FY26 fiscal deficit to be that large. So that's one of the key positives. Apart from that, someone like Bank of America has also come out with a similar view. They've said the net impact of GST will be limited to 13 basis points of GDP, and they've mentioned the GST cut is unlikely to have any kind of larger fiscal slippage in FY26. And finally, someone like CLSA continues that roughly about 48,000 crores is the impact that they'll see because the GST rate reduction and that kind of revenue that would essentially come in at a higher GST will now not come in. But they mentioned that the manageable fiscal impact will be equal to the consumption boost that you will see of roughly about 30 basis points on that growth estimate. So while the fiscal might get impacted slightly, the larger implication of a stronger growth prospect going forward is something that most brokerages are penciling.
Yeah, absolutely. Because just logically speaking, if the rates go down and consumption gets bolstered, the collections that they might have lost because of reducing the rates will be mitigated to a certain extent if consumption itself picks up. So that's a pretty straightforward argument to make, and also the expectation that it could well be disinflationary, and that bodes well for monetary policy as well. It provides ammunition to the Reserve Bank of India and the Monetary Policy Committee of the Reserve Bank of India to cut rates. But we've been speaking about the implications of the GST rate reform with various companies, and one of them, of course, was Metro Brands, who we spoke to earlier today. And we spoke with the Chief Executive Officer of the company, Nissan Joseph, and he spoke about the fact that under that 2,500 mark, where footwear is going to be benefiting from a lower rate in the GST structure that rolls out on the 22nd of September, the entire rollout will take place to the customer. He speaks about that as well as the prospects for the company. Listen in.
I think it's the positive revenue is really the increase of demand that comes when you lower price points. So that's where the positivity comes from. As far as clearing out the old inventory, it's not a question of old versus new, right? It's a question of what is tagged. So we can instantly start giving them the benefit of the GST discount right away. And then the new products would have that rolled into the price. So it's not new versus old. It's really a new price point that we're trying to get, but we can reach it a couple of ways. But the bottom line is we plan on turning all those GST savings back to the consumer in all of our banners. No, we don't see a distinct difference between, a product that might be at 5,000 rupees versus a product that's at 2,000 rupees. Our sourcing structure, our margin structure remains pretty constant. So we don't see that, and I think you mentioned inflation. Inflation is always going to play a part of it. And as inflation comes up, you try to reduce some other costs, so you try to get operating leverage to try and maintain that trajectory of that 15% or the mid-teen PAT numbers that we guide to.
Well, that was the management of Metro Brands. But, we spoke about Infosys at the start of the show, that the stock is in focus after the company announced that its board will consider a share buyback proposal on September 11th, marking its first such move since October of 2022. What does that mean for the company? Somit gives us details of this particular transaction as well as what it means for Infosys shareholders. Somit.
Well, yes, Infosys will remain in focus given the fact that the board will meet on September 11 to consider buyback. Now, this is the first buyback, if approved by the board, in the last 3 years. The last buyback was done by the company in October 2022, and exactly after 3 years, the company is now again considering a buyback. So if you look at the past trends of Infosys buyback, you can clearly see that always the buyback has been at a premium, and the average premium that we have seen for the last 4 buybacks that Infosys has done, it has been around 25%. In 2017, they did a buyback of 13,000 crore rupees. In 2019, they did a buyback of 8,260. In 2021 and 2022, they did a buyback of close to 9,200 to 9,300 crore rupees. Now, of this 4 buyback, the first one that was in 2017 was a buyback via tender route, while the other 3 were a buyback via the open market route. But given the fact that the open market route buyback has now been cancelled or terminated by Sebi, the company will have to choose the tender route for buyback this time around. So a 25% premium is the average premium that we have seen for Infosys. Now, if you look at the cash balance, now we have compared the cash balance that Infosys had before announcing the buyback with the buyback amount. And if you see, on an average, Infosys has used nearly 30% of its cash balance for that buyback. In 2017, they did around 31%. But if you look at the current cash balance, that stands at close to 45,200 crore rupees. And on an average, Infosys has spent around 13%. And the final amount comes to close to 13,500 crore, which the company could use if the past trends, if we follow, that is around 30% of cash. Now, if you look at the net worth of Infosys stands at close to 95,350 crore rupees. And on an average, 14 to 15% of the net worth is something that the company has bought back shares. And if you calculate the 14 to 15% of 95,350 crore rupees or this time, the amount comes to close to 13,800 crore rupees. So these two plays at least give us an idea that the buyback size could be anywhere between 13,500 crore rupees to 13,800. Now let's look at the Sebi criteria here. Now the 25% is the maximum that a company can do a buyback, and 25% of net worth for Infosys stands at close to 24,000 crore rupees. And if the company chooses to do a buyback of more than 10% for that it will need a special resolution, but the limit there is 95,335 crore, that is the 10% of Infosys net worth currently. Now what it means for Infosys and Infosys shareholders. This buyback comes at a great time given the fact that the stock has been under pressure, and this buyback could lend some support to the stock price in the volatile environment that we have been currently seeing for Infosys. And even if you look at the analyst view and the valuations for Infosys, the consensus target price stands at close to 1,743 rupees, which suggests a return potential of 20% from the current levels. Highest target price is around 2,085. Upside of 46%, and in fact the lowest target price also for Infosys compared to yesterday's closing price was above that, which means that the downside is quite limited when it comes to Infosys. And if you look at the valuations of Infosys, it's trading at a deep discount. 20 times is the 12-month forward valuation as compared to the 5-year average P of 25x. Now what does this mean for the entire IT space? This could actually mean that IT companies could go ahead and start doing buyback, because for the last 2 years we have not seen any buyback coming in from the large names like TCS, Infosys and Wipro. Now Wipro, TCS and Infosys, TCS and Wipro had done around 5 buybacks each from 2016 to 2023. Since then, there have been no buybacks, and Infosys has done around 4 buybacks from 2017 to 2022. So this could be actually a time, given the fact that all these companies have strong cash balance, so they could go ahead and decide to distribute the same cash balance to shareholders via buyback. And here's just the last table that we are putting across to give an idea of how much have IT companies given back to shareholders. Now over FY17 to FY19, TCS has given back around 65,200 crore rupees via buyback and dividend back to shareholders. Infosys around 49,400, Wipro and HCL anywhere between 15,000 crore rupees, and Tech Mahindra has given back around 5,700. And this amount has increased multiple times in over FY20 to 25. TCS has given back around 2.24 lakh crore rupees back to shareholders via dividend and buyback. Infosys has given around 98,600. Wipro has returned close to 44,000 crore rupees. HCL Tech has returned close to 59,300 crore rupees, and Tech Mahindra has given back around 20,300 crore rupees to shareholders over FY20 to FY25.
Well, thanks so much for that, Soumit, giving us perspective across, the history of Infosys as well as the buybacks. A lot more on the IT sector as well. But to discuss a lot more about this, we're now being joined by Sandeep Agarwal, the fund manager and co-founder of Sovilo Investment Manager. Sandeep, very good afternoon to you. Thanks so much for joining in. It's a space that you track very closely. Let me first start off with Infosys. What do you make of the company's potential announcement of a buyback meeting on September 11th, as well as essentially the timing of it as of now?
Hi, so good afternoon and thanks for having me on the show. So since we run a PM as a disclaimer that I'm not recommending any stock or anything, it is just a view. So basically, if you see the whole industry, the IT industry that generates tons of cash, and they have been generating significant amount of cash year after year after year after. So there are only 2 options to use that cash, either, distribute it through dividend or buyback. And the capex requirements are very minimal, so there is no choice with these companies but to come out with regular dividends and buyback. And I think that is what Infosys is also trying to do. And I think that the numbers which already have been discussed on the screen, it should be around that 2-3% of the market cap. So maybe 13,000-14,000 rupees is what they can come. It can be a little bigger also. Because right now there is no immediate use of such huge cash balance, so it is best to return to the shareholder. And it unnecessarily also depresses the ROE of the company, because the ROEs look less because of huge cash balance in the balance sheet.
Okay, so Infy seemingly going to be biting the bullet first, Sandeep, and very good afternoon to you. Would this mean that the other large companies also will follow suit? And what is the view then from that perspective? Because the challenges that they're faced with, they don't go anywhere. There's still a question mark about the discretionary spending in the United States, about the health of that economy, and heading into the rest of the financial year as well. So this is probably one trigger. Let's talk about that first, and then what you make of the rest of it.
No, so the real challenge is that, we have penetrated very deep in the outsourcing space already in US. Almost whatever could be outsourced, most of that market share is already with Indian IT companies. So how much more you can gain? So this and the size which in Indian large IT companies have grown to, the scope to grow at double digit is very limited. So this industry, for the large cap perspective, has become a X growth kind of industry where growing at more than 5-6% will be really challenging. If 1 year there is no growth, next year you can see 10-12% growth, but the average will remain 5-6% kind of growth. And some benefit of rupee depreciation, so profit growth could be 1-2% higher, but not more than that. And for that, the PEG ratios which the industry is commanding is between 4 to 8 times, which is little expensive. So I think the only rationale which happens in the IT sector, large names, is that either you look at them as defensive and should give better returns than the FD returns, or you replace them with FMCG to some extent, because FMCG with same growth is trading at 30-40% premium to them. So a fund manager may choose to shift from FMCG as a defensive to IT. That is the case. Second, they are relatively lesser valued than the FMCG. Otherwise, from a PEG ratio perspective, they are not cheap at all.
Got the view, Sandeep, and largely that has been one of the key issues, right? Over the last 2 years, the growth has been really depressed for all the large cap IT peers, while we've started to see that not so much of a revival essentially in Q1. Post Q1, we've seen some deal wins starting to come in, which are sizable for the likes of TCS amongst others. How are you viewing that in context of what's happening currently with generative AI amongst others? Do you see that over the next couple of quarters, to say the least, we might see the deal win momentum starting to inch up again for all these large cap IT peers?
So, deal wins get announced on and off, but the problem is that the deals are over a period of 3 years, 5 years, 7 years. So, you really cannot make out whether they will really change the revenue growth trajectory, number one. Number two, remember that, we are going through a disruption phase, which we have gone through 7-8 times in last 30 years. But in the past, all the disruption phase, the key point was that, we were transitioning from one technology to another. So you have to retrain your workforce, reskill in the new technology, and you can redeploy them. So the growth used to get bundled up and come back. So never ever, there was a reduction in the work. But if you see with generative AI coming in, what has happened is that, the efforts are going down by 20 to 30%. Now, if your effort are going to go down by 20-30%, you have to make that up with more work and also realization improvement, which looks tough. So what is happening? Total IT spends may not go up substantially if you include hardware, software, everything. But for last 10-15 years, all this spend, everything from hardware was getting reallocated to services. And now this is the first time in last 1.5 years, we are seeing some allocation happening from services side to the hardware side in buying the GPUs and the servers. So overall spends are probably still going up, but the allocation has changed after 10-12 years in a very different way. So I believe that, we will have growth challenges for some more time to come. Once that great reset happens, I don't know when it happens, 4 quarters, 6 quarters, either in terms of valuation or in terms of growth coming back, then probably, the sector will again come back into flavor. They are doing an incredibly good job. They are doing phenomenal job. They are generating tons of cash, but it is an industry disruption which no one can survive, and everyone will take time to, recoup to that.
From the perspective, and point well made, Sandeep, but from the perspective of investors and watchers standing from the outside in, the question is, of course, and you've already talked about the fact that they've penetrated quite a bit with regard to the outsourcing activity. And so from that perspective, if they're sitting on as much cash as they are, why not use it for inorganic growth and bolster revenue sources from other areas which they're not utilizing right now? Or does the opportunity not exist in your opinion?
So inorganic acquisitions, if you see, even Accenture keeps on doing every year 10, 15, 20, but they are minuscule size. So those are for skill set or some entering in some market that even Indian IT companies keep on trying doing small, but otherwise large acquisitions you can't do, because there is no successful case in Indian IT services space for a large acquisition to be successful. Tech Mahindra has tried many times and many other players have tried. except for Satyam Tech Mahindra. In that case, Satyam was available at a reasonable price, so they made some good money out of it. But otherwise, large scale acquisitions are very difficult in IT, because finally what you are paying is to get some people which you can any which ways hire, and some foot in the door in some clients, some markets, and also for that paying billions of dollars, I don't think how fruitful it is. Then secondly, the exit, the key man do exit after some time, and all those challenges happen. So I think large acquisition in IT services is very difficult to integrate, execute, and make a positive return. No one has been able to do it. And I think small skill-based, all of them are doing when they get an opportunity. So I think it will remain a small skill-based acquisition, market-based acquisition, geography-based acquisition thing, and not a large. You can't deploy big cash in those acquisitions. So I think inorganic has its limitation for the space.
Got that, Mr. Agarwal. Just last question from my side. Essentially, we've seen, we discuss about deal wins, we discuss about acquisitions and the cash that they hold. What would be your, pecking order, to say the least? Would you prefer having that exposure towards mid caps where the growth is higher, but so is the valuation? So how should investors, according to you, look at this aspects to close out the discussion? Because while the cash is one of the major positives for large cap IT players, the growth has largely been missing for the third consecutive year, essentially, if that happens in 2025. So what could be your pecking order, according to you?
So, see, I will give you a theme. Basically, what is happening, a lot of deals are coming in the new technology, that is AI and all. But the problem is that till 2019, what was happening, the deal sizes were big, whatever disruption was happening. So, large caps were the first to benefit. After COVID, what has happened, that deal sizes has collapsed by 40-50%. People wanted smaller deals, quick turnaround. And that is the reason you would have seen that mid caps like Coforge, Mindtree, LTI, LTTS, so many of them did phenomenally well from 2021 to 23, they went up like 8-10 times in that short span of time. So they got massively re-rated. I think this time with the disruption which is happening, the deal sizes are even 40-50% lower from that size. So while everyone is chasing those same deals, everyone has the capability, everyone is able to probably execute also. But it will, if you take the whole scheme of things, it will take lot time before the composition of the business for large cap to change to reflect that growth. And it will take even some time for the mid caps. But small names which are very, very small in size, for them, getting this 50,000, 100,000, 200,000 contracts and changing the number of revenue could be, the probability is better. So I would say that thematic perspective, I think this is the time, this disruption will make very, very small companies big very quickly, means in terms of value creation, rather than, mid cap or the large cap. So this time we are looking at more very small names and not mid and large names. That is the way we are approaching and looking at the space.
Right. So we have to do our own research. Thanks so much, Sandeep, for getting us this chat and perspective. And I guess that means we have to do a little bit of legwork on our end to get our viewers that perspective. All right, it's time for a very quick break. Just a quick reminder for you before we do slip into that break. We have that GST event that takes place at 3 p.m. today. It's live from New Delhi, and the who's who of the Finance Ministry, you have the Commerce Ministry, you have the Chief Economic Advisor, and a number of other very, very big names that are going to be at that event. It's live from 3 p.m. Stay tuned. We'll be back on the other side with more stocks that you should watch out for.
गोल्ड क्लास ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
हम नेक्स्ट जनरेशन GST रिफॉर्म लेकर के आ रहे हैं ये दिवाली के अंदर।
I think it will have a very positive impact on the GDP.
A landmark reform, a new economic chapter, a nation rising together. NDTV Profit presents the GST Conclave with Finance Minister Nirmala Sitharaman, policymakers and industry leaders, reflecting on GST 2.0 and charting the road ahead. NDTV Profit GST Conclave, reforms for a resurgent India. Only on NDTV Profit.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets.
Markets hold in the green. The Nifty 50 is steady around 24,860 and the Sensex is up 300 points. The Nifty IT zooms ahead. It's the top sectoral gainer, while pharma and autos take a bit of a breather.
US Senate introduces a higher act seeking imposition of 25% tax on outsourcing payments. IT stocks remain resilient, led by Infosys as well as the potential buyback announcement amongst others.
Infosys up nearly 5% after the company announces that its board will consider a share buyback proposal on the 11th of September. This marks the first such move since October 2022.
Prime Focus builds on gains after hitting an upper circuit yesterday as well. This is after ace investor Ramesh Damani, Madhusudan Kela as well as Utpal Sheth pick up stake.
And NDTV Profit gets ready for the GST Conclave to be held today. And of course, the big theme is reforms for a resurgent India.
Welcome back to Profit Buzzers right here on NDTV Profit. We've spoken about themes like IT as well as which is one of the major sector gainers in trade today. That's despite the news coming in yesterday of higher act which could potentially put a 25% tax on and this is just a draft bill to say the least, but it will put 25% tax on companies that are availing services and outsourcing the IT services to other countries, and India is definitely one of them. Let's pull up the auto index now as well, because we've seen that post the GST announcement having consistent gains as well. Today, it's largely fat after giving us some gain. Let's also look at the constituents very quickly for the Nifty Auto, because we have seen while someone like Bharat Forge is the top loser in terms of the Nifty Auto. Yesterday, the stock was up over 4 to 5%. Something like an Ashok Leyland will also give up gains. We have seen this space largely being active, and brokerages have now come out and started, putting in these estimates of GST rate cut and what it could do as a demand booster, to say the least. We have something like a Morgan Stanley that's come out with a note today. We had one BOFA yesterday as well. For Morgan Stanley, they've come out and they've upgraded some crucial stocks in their coverage. Maruti has now been upgraded to an overweight rating. Target price has now been revised from almost 14,000 to 18,360. Hyundai is the other one where we've seen a substantial target price increase from 2,200 all the way up to 3,000 rupees per share. And M&M continues to be a favorite for investors, gone up from 3,600 to 4,300 in terms of the pecking order. Some others like Ashok Leyland has also seen an upgrade in terms of target price, and there are just a couple of key points I want to highlight from this report. They do mention that, and some of the other stocks visible on your screen right now as well. Hero MotoCorp has also seen an upgrade to an equal weight rating. Target price now 5,900 is what Morgan Stanley sees, while Eicher Motor is the other one which has also seen a decent hike as well. Largely, Morgan Stanley continues to believe that the GST rate cut will be a huge positive kicker for all the auto space, and rationalization may drive up price cuts into a magnitude that's never been seen before in the space. And they've also largely said that we could move from essentially, just a premiumization economy to actually going deeper to the country as well, something that's been elusive as well. Let's now welcome in Vinay Rajani, who's the Chief Market Technician and Senior Technical and Derivative Analyst at HDFC Securities. We also have G. Chokalingam, Founder and MD of Economics. Gentlemen, thanks so much for joining in. Vinay, let me come to you. We've seen some kind of sell-off in index today, and that's largely seems to be quite okay given the gains we've seen since 15th August. Do you see any more stocks that could have some more gains going forward and more legs to run in this particular rally in the auto space? Vinay, I think you're on mute.
Yeah, sure. So yes, gradually Nifty is getting strength, and on charts we can see that Nifty is now about 10, 20 and 50 days exponential moving average, though we have been underperforming most of the Asian markets, but broader markets are relatively stronger, and some of the stocks, as we have been discussing, the auto space, some of the hotel stocks and some FMCG stocks participated well, and some metal stocks also did well. So overall Nifty is getting strength, and 24,700 is a very immediate support for the Nifty. On the upside, we are waiting for breakout about 25,000, above which we can expect a momentum to come back, because right now we are not in sync with the global markets. We are underperforming. About 25,000, we can expect sharp short covering from the FIs in the index future, which can take the index towards the 25,500 also. But till then, we can say that we are overall into a consolidation where stock specific and sector specific bullishness is going on. And auto space, yes, I can see some stocks in the auto space, especially in the auto ancillary space, which can outperform in this and continue to do well from here also. We have seen a stellar rally in the auto stocks large cap, but some of the auto ancillary stocks still looks good as the Subros. Subros is looking quite strong. Some of the stock like Sensera Engineering, another one is the LG Balakrishnan. You see, these stocks are looking strong on the charts. Some medium-term breakouts can be seen on the positional chart, so can be traded long with the appropriate stop losses. So yes, I still see some opportunities on the long side in some of the auto ancillary space that I have discussed.
Okay. And by the way, we did have a conversation with Sansera earlier today. Puneet had that conversation. You should be able to find that on our social media platforms. Mr. Chokalingam, I want to come to you on the entire auto pack, right? Of course, among the key beneficiaries because of this GST reform, but the point is that the sector as a whole, the index as a whole is up practically double digits in just about a week's time. Do you still see opportunities based on the fundamentals and the prospects that are in the offing?
So one has to wait. I mean, the market has already rewarded even before GST was announced, particularly the auto sector. And post announcement also, we saw some upside. So it is quite natural that, market discounts the good news well in advance. Now, you need to wait for, at least October monthly sales numbers before seeing any big upside for auto stocks. So one has to really see the tax cut, how it is going to trigger the upside, the sales of automobiles after September 22nd, and particularly October month. If year on year October month can see big upside, then this rally would continue to get energy. Otherwise, it would take some, lullness and then wait for September quarterly results. After that, only they can start moving. Otherwise, in the next 3-4 weeks or 6 weeks, I think they would stabilize at around current level and consolidate whatever they gained in the recent weeks.
Okay. All right. So that's the perspective on the automotive pack as a whole. But let's also talk about IT and the opportunities that you see there, because the question mark is whether or not you would initiate at all at these levels. And Vinay, I want to come to you on the charts, because if you talk about an Infosys, for example, with gains of close to 5% at this point, if you don't have exposure to IT, would you get in right now based on what you're seeing on the charts?
Yeah, definitely there is some sort of sign I can see on the short-term chart. Some pullback rally could be there. There is a news definitely because of the buyback announcement. Infosys has risen, and because of the Infosys Nifty IT index has risen. But this index particularly has seen a healthy correction from the higher level, so we cannot rule out the possibility of the pullback in the index. So sectoral rotation can happen because of the oversold levels, and I can see there is a development of double bottom on the Nifty IT index. So right now the index is at 35,200 odd level. There is a strong double bottom formation at 34,200. So this was the low in the August 7th August 2025, and here also in September we can see the same bottom around 34,200. So there is a double bottom formation, and news has come out. It might happen that it could result into some pullback rally. So definitely I am expecting this IT stocks to see a bounce back from this level. So if not reversal, but at least we can expect a pullback rally, and that could give result to 5 to 7% to 10% also in some of the stocks in IT space.
All right, so that's a perspective on the technical side. Let's get you a few buzzing stocks that are in focus on account of news updates or information sent to the stock exchanges. Among them, you have Realtel, you have Quality Power, both of which are buzzing on the back of order wins. You also have Morpen Lab. And we've got Varsha joining you to tell you about the details and what stands out here. Varsha?
Well, thank you so much for that. Let me start with Realtel, wherein the company is in focus on the back of multiple order wins. They received almost 5 orders, totaling of around 713 crore. Now, the order has been received from Bihar Education project, now wherein they're going to make smart classrooms, provide teaching materials, and most of the order, need to be executed by March 26. And as of June 25, if you see, their order book stand at around 7,196 crore. But next on the list is Quality Power, wherein their arm has received 2 international orders of around 75 crore, which needs to be delivered in next year. Last on the list is Morpen Lab, wherein they've signed a JV agreement with a UAE-based company, wherein the JV will, manufacture and sell medical devices related products, which they want to enter into. So overall, these are the 3 stocks which are buzzing on the back of news flow that came yesterday evening.
Well, thanks so much for that, Varsha. Mr. Jokalingam, let me come to you. Any of these names that you have any kind of do you track? Either of these names that Varsha just spoke about?
Yeah, out of these 3, Morpen looks good because the stock price has crashed a lot, and post that enterprise value to sales is around 1.5 times. So pharma business, I always believe that anything around 2 times is quite attractive enterprise value to sales, because many times the small pharmaceutical companies are valued more on the sales base they have built, not only on the bottom line. And Realtel also, the kind of growth they have posted in the last 3 years, it looks pretty good to hold because the P ratio on trailing basis is around 36. Otherwise, I would give a buy call, but it's a good to hold considering the recent growth. In case any small correction is there, then one can buy Realtel as well.
All right, let's talk about the new kid on the block on Dalal Street, right? And it's always with a sense of excitement that you talk about the latest listings. Amanta Healthcare, not the largest IPO, but that IPO was oversubscribed, and how? And interest across the board from institutional as well as retail participants in that IPO. Stock at, I would think, the high point of the day, about 12.5% higher than the issue price. And let's talk about what stands out about this company. Varsha joining in with some of those details. Varsha, take it away.
Thank you so much for that. The listing was at 7% premium in morning. Now the stock is up at almost 12%. But overall, if you see the subscription, the oversubscription, so the company saw almost 82 times when it comes to overall subscription. About the company, if I were to talk about, companies into sterile, sterile liquid parental products, also makes medical devices and, eye lubricants also. Onto the use of proceeds, the IPO money will be used to, for the capex required requirement for the civil construction works, and they're also setting up a new line, and part of the IPO will also be used for the general corporate purpose. Onto the financial highlights, if I were to talk about, you will see some kind of fluctuation when it comes to revenue. Now this is because of the export timing, and also because of the port congestion delays that the company has seen, and not because of the demand weakness that the management has already clarified. Now onto the SWOT analysis, company has diversified portfolio, and of course onto the weakness, there's a single manufacturing location is one of the weakness that the company has, but considering the healthcare opportunity a company would eye on, that is the opportunity that the company has, and but higher competition, stiff competition into the overall healthcare is the one of the threats that the company has. But overall, if you see a good subscription data, but yes, the stock is up at 12%, so good listing.
For getting us that perspective, Valsha. But the other stock that we want to talk about is Ambuja Cement. Now we had a positive brokerage note come in the morning today from CLSA, and that largely has maintained an outperform rating with a target price of 665 rupees per share. 3 to 4 key points are making them improving demand as well as profitability outlook is one of the key points. But they were also there at the CLSA forum, and they mentioned that it's more constructive on the cement demand as well as the profitability outlook. The company continues to have a large part of the discussion on GST reduction, and that will believe that the realization is likely to see a positive aspect going forward once things stabilize. Premiumization as a category continues to be a key positive, and the reduction in indirect tax is likely to have an additional impact to boost it to roughly 50% of the sales versus 33% right now. Over the medium term, Ambuja also believes that the industry will likely grow at 7 to 8% and is likely to grow in double digits because of the boost that we might see due to GST, amongst other reasons as well. But Mr. Chokalingam, let me come to you on this one. Any top picks that you have in the cement space?
Yeah, one can consider Ambuja Cement for long term because last 2-3 years, despite difficult conditions in the industry, the company has done reasonably well in growing the profit. Since valuation is slightly high, one can buy for medium to long term. The other stock which I have been extremely bullish in small cap is KCP Limited. Personally also we have invested in the stock. I believe that it's a potential multi-bagger stock. It has got a huge land bank, and it has got a sugar business in Vietnam which is making over 250 crore of profit every year, and 43 lakh ton of cement capacity, extraordinarily well-known brand with 5 sources of captive energy. So this is one stock I've been extremely bullish for quite some time.
All right, so you've spoken about the cement space, Mr. Chokalingam, but I do want to extend that to ask you about the real estate players, because ultimately if you're talking about the GST impact of the reduction of rate on cement, then obviously one of the big beneficiaries is going to be the real estate companies, because construction costs should reduce. Do you have a positive outlook on any of these counters?
Only one problem was that most of these stocks, real estate stocks, have run very well till a couple of months ago. That's why they have seen some correction. Still, I would like DLF. Price correction is quite huge, and I am quite impressed by the rental segment of the business, which is doing pretty well. And also I've seen their debt reduction plan. So this one stock I like in the realty sector.
Okay, so that's the view on the real estate pack as a whole. Let's talk about a couple of stocks that have been buzzing, and one of them, Prime Focus. It's had 2 days, if I'm not mistaken, of hitting upper circuits. It's the third day, I think, today that it's hitting upper circuit. And this is on the back of several block deals that have come through on this particular counter. And you've had the who's who in the investments landscape. You've had Mr. Ramesh Damani, you had Madhusudan Kela, and you had a couple of other big names as well. Mahima joining in with some of the details as to who's gotten into the stock and why they think that there are such good prospects for this one. Mahima?
Right, so Alex, third day of seeing upper circuit plus third day of seeing large deals as well in this particular counter, and as you rightly mentioned, marquee investors are entering this counter. Today there was a large deal for 20 lakhs shares that exchanged hands, which was at a price of 187.61. Yesterday also we saw equity exchange of around 3.87% of the total equity, where Marina Horizon and Marina Ivy sold around 1.8%, and Augusta Investments sold another 2% in the counter, and Kraft Emerging Markets Fund had bought around 3.87% in total. Day before yesterday, marquee investors like Madhusudan Kela bought in around 2%, Utpal Seth bought around 0.5%, as well as Ramesh Damani bought in around 0.25% stake in the company, and because of this reason, the stock has been buzzing in trade and locked in upper circuit today as well. The next one is Voltam Transformers. Here also large trade has taken place. 7.86% equity changed hands in a block, around 7.94 lakh equity shares. The news was that the promoter may sell around 7% stake for around $67 million through a block deal. The floor price was fixed at around 7,600 rupees. The stock is stacking as we speak, but Mr. Kunjal Patel currently holds around 37.8% in the company, and post the stake sale, his holding will come down to around that 30% mark. So this is the overall view as to these two counters that are buzzing on the back of block deals.
So much for getting us this perspective, Mahima. But Vinay, let me come to you first on prime focus, because as the name suggests, it has been definitely in focus. But is the charts giving you some more time to analyze, because it's been in upper circuit for the last 3 days, as Mahima mentioned? Some more legs to rally right now?
Yeah, so it is into a continuation of an uptrend, and for last 3 trading session continues upper circuit, and it has recently surpassed the previous swing high which was made in the month of July, and that was around 180. So now that becomes the immediate support. So because as per the change of polarity rule, the previous swing resistance will act as a support now. So 180 is a support for the stock, and it is into continuation. I'm not anticipating any target because it is into continuation of an uptrend and trading at its all-time high. So better to keep this stock with a trailing stop loss. That would be the best strategy for the short-term traders. But yes, there is no fresh buy signal on the chart. It is into a bullish continuation.
Just want to check on the off chance that you have coverage on this one, Mr. Chokalingam. Any view on prime focus?
I'm sorry, recent time I have not studied it, so I'm not able to make any view.
Okay, fair enough. There is some additional information that we have on life insurance companies, and Puneet, you're looking at the numbers. Let's run through the numbers, and of course one of the big beneficiaries on account of GST as well, because it moves to 0%. Of course there's that sticking point, if you can call it that, on the input tax credit. They've been asking for relief on that, but then even if that doesn't come through, one would assume that volumes in the space, both health insurance as well as life insurance, should pick up.
Well, definitely, and I think a lot of that is visible in some of the key numbers that we're looking at for a few players. So Axis Max Life, has a 19% year-on-year change in terms of the premium at 1,144 crores. You're seeing a big beneficiary of SBI Life. It's been consistent at this particular point of time, and that's been in terms of premium growth of over 22.8% is what they've done in this particular month. While HDFC Life, while the growth is slightly subdued at 9.5%, still nonetheless a key mention. ICICI Pro is the other one, where roughly about 1,700 crores of premium has been added, up over 22%, up over 17%. While LIC has actually seen a downtick of about, in terms of 17% as well. On an overall basis, when you take the accumulated, because of the size of LIC, you've seen the overall premium being down actually by 5.16% for the month of August. But a lot more, as Alex, you rightly mentioned, of GST cuts amongst other factors that we'll be looking at, in quarter 2, as well as in terms of conversation with the management to affirm of what benefit of this could be on a larger scale, to say the least. Yeah, it's important to understand who benefits, right? Do you benefit on existing policies? Do only new premiums that you pay from this point on, from the 22nd, have the effect of the lower tax? All of that has to be spoken about. And of course, we've spoken to PB Fintech also after the announcement was made, and there was this buzz about whether or not commissions in the industry would fall on account of the GST rate rationalization, and they said that there's not too much room
because they only earn about 1% on the trade or on the selling of insurance policies. Let's talk about Ujjivan Small Finance Bank, and in fact this is a counter that is in focus. The bank has conducted its analyst day, and Harsh is joining in to tell you about what emerged and what MK specifically had to say about the takeaways.
Well, and ambitious plans as well. They're planning to get their gross loan portfolio to around 1 lakh crore by FY30, which is certainly ambitious because it will mean that the loan portfolio triples over the next 4 financial years, or rather 5 financial years. So very, very strong growth plans. Out of this loan portfolio, around 70% will be secured is what they have suggested and alluded to. So there will be a large tilt towards secured. In terms of cost ratios, expected to come off. 6% is what the cost to assets is currently at. They're expecting that to come well below 5% is what they've suggested. They've also said that universal banking license will come through, and they're expecting that to come through by December of 2025, which will be critical from a liability perspective. They say that the plan is agnostic to the universal banking license in terms of scaling up, but it could boost the liability profile of the bank in a significant fashion, and therefore that will be the big positive. Better asset quality visibility is expected in H2 FY26 is also something they've spoken about. They've spoken about sustainable 1.8 to 2% ROA, all of those pointing to positive outcomes, hopefully, if all of this were to play out.
All right, thanks so much, Harsh, for getting us those details. And of course, thanks so much to Mr. Chokalingam as well as Vinay for joining in and giving us all the perspective that they did. That brings us to the end of this edition of Profit Buzzers. From Puneet and myself and the team that put the show together, thank you so much for watching, and do stay tuned. Up next is Small Cap Buzzers.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशिताई, ऐसे बॉय मिलते मुंबई में, चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
हम नेक्स्ट जनरेशन GST रिफॉर्म लेकर के आ रहे हैं ये दिवाली के अंदर।
I think it will have a very positive impact on the GDP.
A landmark reform, a new economic chapter, a nation rising together. NDTV Profit presents the GST Conclave with Finance Minister Nirmala Sitharaman, policymakers and industry leaders reflecting on GST 2.0 and charting the road ahead. NDTV Profit GST Conclave, reforms for a resurgent India. Only on NDTV Profit.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabyte
Hello and welcome. You're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Anushi. Well, when you look at the markets, the Nifty is up just 90 points in trade, and the Nifty Bank Index, that continues to languish in trade. It's largely flat, not much of a movement that we are seeing after the sharp drop that we had seen in trade in the last half an hour yesterday. But let's go across to Hiral to understand what's been buzzing when it comes to the small cap segment.
It's interesting to see, Somit, in terms of the broader markets, because again, no major moves that you're seeing, but if you can just pull up the small cap index, that will tell you the story, because last couple of trading sessions, you are seeing the broader markets which are outperforming the benchmark indices in trade. If we can have the small cap 250 as well, there you go, 0.2% higher. So not as bad as it could look like. But let's look at individual stocks. Railway counters, Railtel and Titagarh Wagon are buzzing in trade. Railtel has an order win today. Titagarh already has seen an order win yesterday, 3.5 to 4% kind of up move coming in there. IT companies, on the back of the Infosys buyback, you're seeing some positive momentum which is building up there as well. From a eClerx to a Sonata Software, strong moves on these names. Apart from these two, let's look at the other ones which are in focus from the IT pack as well. If we can have the next set of names there. Affle, Quick Heal, strong moves coming in on these names as well. Volume buzzers, prime focus on the back of the block deal is in focus as well. Volumes absolutely strong with regards to Taj GVK. So look at both these counters pretty closely. Gujarat-based companies are also in focus today. So you have a GSFC, GMDC and GNFC, all the three trading under pressure today. Looking at other names, ITDC is seeing some smart moves today, 18 to 19%. Precision Camshaft has had a strong 2 to 3 trading sessions. JTech is also up almost around 11 to 12% in trade. Salasar is another one, seeing gains of around 5%. Sula Vineyard seeing some good momentum, 10% upside there. IOL Chemicals as well. Last 2 to 3 trading sessions have been really strong with regards to this counter. Raymond Lifestyle, Asahi and a TBO Tech continue to remain in focus. Very lastly, Ujjivan Small Finance Bank as well, on the back of the outlook that they've given out, is seeing some strong moves today, trading near the day's highest level. So watch out for these names pretty closely. Over to you.
Well, thanks for that, Hiral. So that's the overall picture that we are seeing for the small cap stocks that are buzzing in trade today. But you know, an interesting company that we should be watching out for is Ketan Chemicals and Fertilizers Limited. In fact, if you look at the stock performance, it's up over 7% in trade today. But to discuss on the outlook and the strategy forward, we are joined in by Shailesh Ketan, the chairman and managing director of the company. Hello and welcome to the show, Mr. Ketan. Let me start off by asking you about the price trends that we are looking across the industry, over the overall outlook that we've seen, post Q1, when you've reported strong set of margins as compared to what has happened in FY25. Just want to understand your assessment of the overall year for this financial year.
It's great to talk to you. I think last time we spoke was in first week of July, when the first quarter had ended. And then we had said that the company would be doing well in that quarter. And as you are aware, that if you look at quarter to quarter, while we had made a loss of around 16 crores in that quarter of last year, we have made over 21 crores of PAT in the quarter of this year. If I now look at the position as we stand today, the monsoons have been good. DAP shortage still continues. So I'm looking at a good position for SSP as we go forward, and especially about my company. I don't even mind sharing how the company has performed in the month of July and August, the 2 months of the second quarter. So what is very important is how much of fertilizer the farmers have bought from the retailers in these 2 months. So as compared to the previous quarter of these 2 months and this quarter, the offtake by the farmers have gone up by a massive 42%. So farmers have bought 42% more of Ketan product from the market, which is extremely encouraging. The SSP production in these 2 months have gone up from 56,000 tons to 93,000 tons. That is 66% growth in production. Even in sulfuric acid that we produce, the production is up by 31%. So the performance in these 2 months have been very good. And looking forward, not only for this quarter, but even if we look at the next quarter, that means October, December, which is the peak for the Rabi season, we are expecting that the sales should increase, the company should do well, and we are also expecting some subsidy increase starting from 1st of October, because the prices have gone up for the raw material, etc. So that will also assist the company. So we are looking at a good situation as we go forward.
Right, sir. As you were mentioning that Q2 has been a bumper quarter for Ketan Chemicals, and given the fact that nearly 40 to 45% of your revenues come from SSP, this uptick in demand that you have seen in the Q2, how sustainable is this going forward?
So first, 90% of my revenue comes from single superphosphate and 10% comes from other chemicals. In these 2 months, the offtake by the farmers have gone up by 42%. I do expect that even in the next 4 months, the offtake by the farmers should show a good growth. So we are looking at a positive trend in the SSP offtake. That's what I think we will do well.
One look at the margins for the company overall, given the fact that the production number has gone up, sales have picked up. I believe there might be some operating leverage here at play, and also I guess prices are pretty much stable.
Yes. So as a company policy also, we try to keep the price stable, and we believe that in case we are able to produce much larger quantity, we will be able to encash the economy of scale. And we don't want to load the farmers with any high pricing. That is not what we believe in. We believe that the farmers should get the product at the reasonable price only. So we are not looking at any massive increase in prices, not at all. We will make our money through economy of scale, higher production, and much better efficiencies.
So, Mr. Ketan, just a follow-up on that, with these prices sustaining and, your efforts on debottlenecking as well as backward integration plans, just want to understand from a 14% of margin that we've seen in the first quarter, 7% in FY25, where would the margin number stand in FY26? Along with that, if you have revenue growth projections as well for the financial year, if you can share that with us.
So, see, it is extremely difficult because it's a very seasonal industry, how the industry goes forward. I don't want to make guesses on any numbers. All I can say is we are expecting the production and the sales to go up very well, efficiencies to be high. So we're going to do well. I'm not going to give any projections on financial figures. You also asked for the year 2000, for the next year. So we are adding a product now. This is called urea SSP. We are adding this in one of our plants to begin with, and we are putting this plant of a capacity of 120,000 tons per annum. Work has already started, and we shall be introducing this product in the Kharif season of 2026. It's not a very, very massive investment because we have a very high capacity as it is, all being financed by internal accruals. So all these steps should make even 2026 hopefully good for us. It's subject to rainfall, other factors, but I think we should do well.
Sir, given the recent news which suggests that ties between India and China has improved or is improving, also given the fact that China has started urea supply back to India, anything that benefits you out of this?
So what has happened is that the relations have improved, but that supply by China, even after the improvement, is more of NPK and not of DAP so much. See, whether DAP now will come in the market or not, DAP is an expensive product. The prices have seen a huge increase, I think from $530 US per ton 1.5 years back. It is now at about $780 to $800 per ton. SSP is a great indigenous product. It is agronomically superior to DAP in my views. So we are not seeing a constraint in that, and it is very, very economical for the farmers to buy. The government is supporting us also. So I think that we should be very, very well placed.
On the domestic side also, just want to understand on some of the key products that we are looking at, the rate was earlier around 18% of GST. Now that has come down to 5%. Just want to understand your viewpoint as to what are the kind of benefits that you look from this.
So if we look at the SSP sector,
right,
the GST rate revision has been on two fronts in our products. One is on sulfuric acid, where when we buy sulfuric acid from 18% now, the GST has come down to 5%. Secondly, 65% of the SSP sales that we do is with value addition, where we use zinc, manganese, boron, etc., but in small quantities. Even on those, the GST rate has come down from 18% to 5%. Now, fertilizer units have had this problem of this GST, invertible taxes, etc. So this will help us in releasing funds which have been blocked with the government. So that will be helping the company.
Okay.
So it's going to be good for us.
Okay, Mr.
And I must tell you that from the fertilizer sector, when the people went to meet our finance minister, she understood the thing, she gave time to us, and I take this opportunity to thank her, really thank her, for the positive approach and the help that she has provided to our industry. We are grateful to her.
Well, that's an optimistic outlook that we are seeing on the macro side, but just want to understand, considering, overall a positive outlook that we have, what's the kind of capex that you're looking forward to for these next 2-3 years period?
So, see, principally, the capacity of SSP that we have in the company is 11.11 lakh tons. We have the second largest capacity in India. The highest capacity, I think, 11.40 odd lakh tons. So we are nearly at the highest level. The production is only about 5.5 lakh tons. So once the demand is there, without spending too much on capex, we can increase our SSP production and sales. So we are looking at growth, but not at spending too much of capex on that front. As I told you, we are putting up this plant of 120,000 tons capacity to make urea SSP, where again, minimum capex, but it will add to our, items that we produce. We are also now looking at 2-3 more things. One is an export-based fertilizer. I won't go into details right now, where deep studies are going on. And we feel that this is one sector which we will enter. We are also looking at setting up a production facility for NPK, etc., as we go forward into one of our locations, where also we will have synergy. And because we have a lot of equipments available, maybe at a much lower cost, we can achieve that. But these studies are going on. It is too early to comment. Maybe as we are ready with the full details, we will take a call at that point of time. One more thing that we are doing is, we have a lot of land in every factory that we own. So we have looked at the solar possibility also. And all the 6 plants have been visited by these solar experts. So we are getting the feedback. It will take us some more time before we will decide on that front also.
Right. So
one more thing that we are looking at also is that we have got a huge dealer network. We have more than 3,000 dealers and more than 30,000 retailers, 40 years old company with excellent brand. So we are also looking at importing fertilizer and marketing it.
Right, sir. Well, thank you, sir. Thank you for joining us and explaining about your company and the way forward. With that, let's also welcome in our guest for the show today, Lancelot Decora, CIO, Value X Wealth. Lancelot, have you tracked this counter, Ketan Chemicals? Any view? The company said that the Q2 is a bumper quarter with 42% growth in top line.
I think, yes, the company has done well in this quarter, and like they mentioned that, with 90% business of single superphosphate fertilizers, the offtake has been very good this quarter. But this is, one has to understand this is also a seasonal business, and you do get seasons where things are good, and then there could be periods when things are bad. So you have to average it out or annualize it over a period of time. So if you look at the stock, it's probably trading at 30 PE at the moment, and given that earnings growth has already got factored in this quarter, we have to wait and see how the whole year plays out, as well as how the situation plays out over a number of years as well. So I think it is a bit expensive. Yes, there is improvement on the working capital situation with a lot of news getting released. So that should help the working capital. But this being an industry which goes through cycles, I think making investments at the higher end of the cycle obviously carries a higher risk that the current performance may not be replicated over the next couple of quarters, and that could then result in re-rating of the stock on the downside. So one has to be a bit cautious given that the stock has also risen over 60% in the last 12 months.
So a cautious view is what we are seeing for Ketan Chemicals, but let's focus on JTech India now. And if you are looking at the stock today, it's up over 12% in trade today. What's leading to this buzz? Puneet joins us with more details.
Well, thank you for that. It's definitely one of the bigger beneficiaries in the auto ancillary space, largely driven by the company's focus on the domestic markets. But a couple of things here. Now, yesterday the exchanges did write to them about any kind of announcement that might come in, which led to the the higher volumes, and they mentioned that there is no such one. But even about the company, largely operates in the steerings and the column space, which steering systems you might use in your car to drive. 96% of the company's revenues comes from that, and essentially it serves key customers like Maruti, Tata, Mahindra, amongst others. Toyota is the one key beneficiary in terms of the business of the company as well. So we are expected to see a higher boost for the passenger vehicle side, and likely a big one for JTech India as well. Apart from that, in terms of ownership, JTech Corp, which is the global company, owns roughly 66% in the company, and the rest, or about 5.43% of a meaningful stake, is actually held by Maruti Suzuki itself in JTech India, going back to the association of almost the last 4 decades. When you look at the other key aspects, the company actually raised roughly about 250 crores via rights issue in the month of August itself of this year, and this was done at an issue price of 108 rupees per equity share. So since then, it's given a very meaningful return for all investors who got in at that time as well. In terms of Q1 performance, we did see some impact in terms of margins for JTech India. They mentioned that this was largely due to 2 to 3 key factors because of adverse product mix, higher employee expenses by 80 basis points, as well as the other expenses that impacted the company's performance by 20 basis points. And finally, there's very limited analyst coverage, but BNK does cover the stock. They have a target price of 151 rupees per share, which they actually cut from 173 earlier, and they mentioned that PV production is expected to grow to low to mid single digits, but JTech will outperform the industry by at least 4 percentage points is what their estimate is. And they've also gone on to say that the growth will be aided by increase in customer volumes like Maruti, as well as mention that the revenue contribution from newer segments like driveline in the CV space, as well as what they're doing in the light commercial vehicle space, will be a key beneficiary. So a lot of key aspects to watch out for JTech India, but definitely the passenger vehicle segment that the company caters to is expected to see a huge benefit, which will in turn help JTech in its financial momentum as well.
Okay, well, thank you for that, Puneet. Lancelot, coming to you, in Q1, while we did see a mixed performance for the business, the overall picture in terms of how the passenger vehicle is expected to perform remains on the healthier side. I want to understand your view on this counter.
So I think, given that we have seen most of the car companies announcing that they will reduce or revise prices downwards because of the benefit that you see in the, in the GST rates revision, and that would lead to more sales, and greater demand for the product. So it would obviously benefit the auto component manufacturers as well, and JTech as one of the suppliers of steerings and columns should be benefited in this production. However, if you look at it from a point of view that margins for an auto component manufacturer may not change much because of GST, because they obviously were anyway getting the benefit of the input and the GST collected, so it wouldn't really affect them per se. There may be some impact on whatever inventory they have, and that could have an impact. So given that the stock is already trading at a multiple of close to 60 times its forward earnings, it looks a little expensive at this point in time, and maybe any serious correction could be an opportunity to look at it. Though from a longer term perspective, yes, we do see a long runway of growth, but that would obviously be when if you buy the stock at a reasonable price.
Right, so that's the view for JTech that we are seeing. But let's focus on an EPC company now, and VR Goil Infrastructure is the stock in focus currently. Now, the stock is buzzing on account of a 126 crore of an order win that we are looking at, and this pertains for their public work regions for Nasik. Order execution period for this one being around 18 months. In fact, if you look at the order book of the company, that stood at about 1,423 crore. This is as of the first quarter end that we are seeing. But to discuss more on the order as well as the outlook forward, we are joined in by Yash Goyal, the Executive Director of the company. Hello and welcome to the show, Mr. Goyal. Let me start off by asking about this recent orders that is there. Along with that, there have been a couple of NHI order wins also that you declared in the month as well. So considering all of that, just want to firstly understand where does the current order book stand?
Currently, the order book stands around 1,300 crores plus this 125 crore order which we got from PWD Maharashtra. And the NHA orders are for toll collection contracts where we collect toll for national highways.
Considering, about a 1,400 crore positioning that we are looking in terms of order book, just want to understand the execution timeline of this. Now, in the first quarter, we did see about a 13% of a revenue dip. But considering that, your order book is roughly 5 times the FY25 revenue, that paints a good picture in terms of revenue visibility forward. So just want to understand your outlook in terms of growth forward for FY26 as well as how execution will pan out.
So the execution period for all these orders are roughly between 12 to 36 months, varying from order to order. And roughly we see a growth of around 20 to 25% in the current year. As we speak, we have already closed 150 crores of revenue in the first quarter.
Right, sir. Also, if you could give us some idea on what is the current order bid pipeline that you have, and what is your historical strike rate?
Generally, the strike rate which we focus, which our company has seen in the past, is between 15 to 20% of the strike rate. And we're roughly planning to bid a pipeline of around 2,000 to 3,000 crores of new orders.
Okay, so 2,000 crore is the kind of opportunity that you're seeing. So just want to get a sense in terms of inflows, if you have any particular target in mind for this financial year. Along with that, in terms of order book as well, 5 times is the book to bill ratio that we are looking at. Is that sustainable going forward?
Yes, ma'am, it is sustainable because the government has a good focus on infra sector. We've also entered into the water waste treatment field this year only. So we are looking to bid into the water waste segment this year. And when we talk about toll collections and road constructions, yes, the government has a good focus. And I think so this 5x order book will sustain. Roughly, we think that this order will be executed by the end of FY27. All these orders will be executed. And yes, we think of good potential in the near future.
Right, sir. Also, if you could share with us some guidance on the margin front, what is the kind of EBITDA margin that you're looking at for FY26? And usually, what is the target EBITDA margin that you see when you bid for a project?
So generally, target EBITDA margin we see is around 11 to 13% is the target margin which we are planning. And we keep in mind while we see, as we are a mid-sized company, so to achieve higher ranges of orders, we try to focus on growing our company's credential to get the bigger order. So right now, what we have targeted is that near about 6 to 8% of PAT level in the near future for our company.
Mr. Goyal, you just mentioned that you're entering the water waste management system. Over here, if you look at the margin profile, that is considerably on the higher side. So in next 2 years, just want to understand the overall contribution between your segments that is there, and if that would lead to a further improvement in terms of the margin outlook you've just given.
Yes, we're continuously focused on the wastewater treatment, but since this is the first year which we have entered, so it will take a little bit time, say a year or 2 years, to grow in this sector. But yes, the margins are quite better. And when we see in the near future, we're targeting around 30% of revenue from water, 40 to 45% in the road, and the balance in different sectors like toll collection and other.
And any capex plans that you have for this financial year?
Not right now, ma'am, since the capex which are currently holding will cater to the required business which we already have in our hand. So new capex is not required. But in general, whenever we take a new order or something, around 4 to 5 crores if a new capex may be introduced, may not be introduced, depending on the work.
Okay, thank you so much, Mr. Goyal, for joining and sharing that outlook on the company. Lancelot, coming to you for this particular counter, well, it's a very small company that we are looking at, but significant order book size that we are seeing. Just want to understand from you the overall picture for this company.
So, companies which are in the infrastructure space, the main criteria or challenge that they face, one is there is very low net profit margins. So even if you look at this company's net profit margins have been about 6 to 7%, which is fairly low, given that, they may be executing more orders going forward. The other challenge that smaller companies face is the working capital requirements, because as they need to, grow, they need to have more investment in working capital, and a lot of money which actually comes from the government orders, they get delayed, and there are delays in project execution. So this also has an impact on their working capital, and then that working capital management for smaller companies becomes a lot more challenging than for larger companies. So from that perspective, while the company is doing well, one needs to be a little careful about, how the working capital is being managed, what kind of impact, these large orders are going to have on the financials of the company, its borrowing, and its ability to be able to service them, with on a cash flow basis. So that's very crucial to evaluate. Given this company's background, it trades at a multiple which is a little higher at this point in time.
Well, thank you, sir. Thank you for joining us and explaining and giving us your perspective on the stocks that we discussed. Well, with that, it's a wrap on this edition of Small Cap Bazaar. Stay tuned and keep watching NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग, जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
हम नेक्स्ट जनरेशन GST रिफॉर्म लेकर के आ रहे हैं ये दिवाली के अंदर।
I think it will have a very positive impact on the GDP.
A landmark reform, a new economic chapter, a nation rising together. NDTV Profit presents the GST Conclave with Finance Minister Nirmala Sitharaman, policymakers and industry leaders reflecting on GST 2.0 and charting the road ahead. NDTV Profit GST Conclave, reforms for a resurgent India. Only on NDTV Profit.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Hello and welcome to NDTV Profit. You're watching India Market Close, an interesting day of trade for the markets and for India Inc. at the GST Conclave at NDTV Profit. And that's what will stream from 3 p.m. onwards. But before that, very quickly, 0.3% higher in terms of Nifty 50. Let's just look at the intraday chart first right now, because that will tell you the story as to what's happened. You know, no major moves, no major swings. That consolidation phase has continued, but we're trying to inch and stay steady above the 24,800 mark. 24,850 is what you're tracking so far in terms of Nifty 50. Bank Nifty, it dipped into the negative as well, and that's where it continues. It's trying to make its moves to come back into the positive, but completely failing that attempt, and that is what is the concerning area from a market's perspective. Let's quickly look at the contributors or the heat map in terms of Nifty 50 to see where the strength is. It is IT. Infosys, you know, the Harsh and I were just having a laugh over it in terms of the kind of up move that it's seen, 4.5%. And if you have to actually calculate that, and Harsh is right now doing that as well, in terms of the quantum of buyback, if you have to correlate those two numbers, it's going to be interesting. 7,000 crores, 25,000 crores is the number that you're tracking in terms of the market cap increase, versus if you have to look at the buyback quantum. Let's see what that number comes up to be. But that is taking a rub-off effect on a Wipro, Tech Mahindra, HCL Tech as well. What's losing out? Trent, Eternal, GFS, that's Geo Financial Services, Titan, Bajaj Auto, taking a beating. In fact, your auto pack is seeing profit booking today, and this is after almost 7 to 8 consecutive sessions, Harsh, in terms of the declines that we've seen. Interesting is VIX, 10 to 11, which is absolutely comfortable in terms of the number. A marginal uptake in terms of the percentage terms, but 10-11 comfortable over there. Let's just quickly look at the broader markets, and then Harsh will take us through in terms of sectors, because broader markets, Harsh, clearly last couple of sessions have been outperforming the benchmark indices.
Well, yes, not so much today, as is visible. It's been a tough day. The Nifty mid cap and small cap both have been struggling, more the mid cap than the small cap. The small cap has still, in some sense, traded with a positive bias pretty much all through the day. And largely the Nifty 50 though, there is a clear outperformance visible there, and I would reckon that is largely due to IT. Let's pull up the contributors for one, and thereafter look at sectors, and that will give us some texture.
There you go.
Infi is 57 points, Hiral, is what is driving the Nifty up by 57 points. If not for an Infi, you'd be up maybe just about 30 points. And that's where really the differential lies. Nearly half the gains clocked in on the Nifty, but all the gainers combined is just Infosys. So that's the extent of the impact that Infosys is making today. Let's look at sectors as well. And within that sectors, you'll see IT, of course, standing out nearly 3% higher. Pharma doing okay, and Hiral spoke about that. I won't go too deep.
The only interesting on pharma and FMCG is that it was somewhere on a flattish footing.
Correct.
As we started off the day, that has seen some bit of a recovery. So if you'll see an intraday chart of pharma and FMCG, you'll see that uptick that has come in.
But Hiral, all the others, you know, if I were to maybe pick out everything from rural all the way till realty, there's no sectoral index anywhere here. Maybe media, if I were to exclude. Is very, very tight, right? There's been no major movement on either side. So it's IT, and which is why you're not really seeing that much zing when it comes to the mid cap and small cap index.
Absolutely, because none of your other sectors which are concentrated in that space are contributing. But the big talk of town today is with regards to NDTV Profit GST Conclave, which is happening in New Delhi right now. It starts at 3 p.m. So we're just an hour away from that. The 60 minutes countdown has already started. We have Honorable Finance Minister Nirmala Sitharaman, who's going to be present. You have Piyush Goyal, who will be present as well. And industry stalwarts will be there. In fact, let's head across to Neeraj and Tamanna right now, who are right there at the Taj Palace, at the venue right now. Over to you, Neeraj and Tamanna, to tell us what's happening over there.
Hi, welcome to the preview and a sneak peek of the GST Conclave, the NDTV Profit GST Conclave Reforms for a Research in India. This is an exciting morning that we've had in Delhi, Neeraj, and looking forward to this power-packed panel we're going to see on the grand stage. It's looking empty right now, but it's going to be packed with the movers and shakers of the national capital, Finance Minister, Commerce Minister, CBIC Chairman, Chief Economic Advisor, top industry voices. Couldn't have asked for more.
Couldn't have asked for more. It won't be wrong to say that all roads lead to Taj Palace in Delhi. What is the one thing that you are wanting to hear from the Finance Minister? Let's say, Tamanna.
Yeah, you know, the thing is, the fact is, when it comes to taxes, dil mange more. Yes, we've had 2 slabs. Can we see further cuts? So many items have gone into 0%. There's still 40% on many. And the one thing, when you look at the fine print, things like detergents, cosmetics, and a few other items are still at 18. I think, I'm not just because, you know, cosmetics is something that, you know, I use, a lot of people use, but I think some things can really be put into a lower bracket. These have become mass things. I think the definition of luxury has changed over time.
Okay.
So,
from my perspective, I think this is the first of the really big reforms since the corporate tax cut. And it'll be lovely to see how the government is thinking of doubling down on further reforms, because that is something that both the economy and the equity markets would really look forward to. So keen to hear a lot from the Finance Minister, the Commerce Minister and others about what is more to come from here on. But if you wanted to know all of this, Tamanna, frankly, this is the place to be at.
absolutely. So 3 p.m. onwards on NDTV Profit, on the NDTV network. Watch out for those fantastic panels on the NDTV Profit GST Conclave. And yes, there's a special surprise when it comes to NDTV Profit as well. But that's something you need to tune in to know about.
All right, Neeraj and Tamanna, thank you so much for bringing us those details. In fact, a special surprise. I think I'll be waiting for that for sure. And viewers should also tune in for sure from the 3 o'clock mark till the conversations go ahead, and especially for the... Stay tuned. In fact, stay tuned. Keep watching NDTV Profit is the takeaway from that, because there's going to be interesting conversations around, and that will give you a perspective as to what exactly does GST 2.0 mean for a common man like you and me. All right, with that, let's also bring in our guest for the day, Kush Bora, founder of kushbora.com, joining us now. Kush, hi. Good afternoon to you. Your view on the markets today?
Hi, Mahima. Very good afternoon to you and to all the viewers. You know, the entire setup for the conclave looked so beautiful. For a minute, I thought, you know, I wish I were in Delhi, but perhaps next time around. So kudos on that. Now, as far as Nifty is concerned, I think, you know, it's holding in good stead. You know, what we're not realizing is that the moves that we saw day before, in fact, even yesterday for that matter, and now what we're seeing today, the magnitude might not be great, but the direction is certainly up, and that's a healthy sign. First resistance for the Nifty was actually at 24,850. We've not been able to, you know, mark a lot of time above that, but for now we're holding that ground, and that's a good sign. Next milestone is actually 25,000. Once that is taken out, I think the near-term trend could change. But my suggestion is, up until that happens, the broad range of 24,400 to 25,000 will still keep acting up. You know, you don't want to buy closer to the resistance. You might as well wait and let the market, you know, cross the resistance levels, cross the hurdles, and then buy. That's for a positional trade. For the trend of the day, you could take, you know, an intraday trade. But as far as the positional trades go, I think once you see a range breakout, that's when you should consider one.
Kush, what about your picks for the day? What are you going ahead and buying?
Given the mild caution that, you know, that's there in the market, you know, it's prudent to go with a long and a short idea. So I'm going with, you know, a mix of a long and a short. On the long side, I've got Parak Engineering. 3 days ago, the stock had a very big move on the back of fairly decent volumes. But for the last 2 sessions, you've seen a fairly decent follow through. Still some distance away from overheated territory. It's not a bad idea to consider this as a positional trade. The targets on this one are 620 and 635, 590 is your stop loss. On the short side, I've got a continuation trade. It's on MCX. We initiated a short position on MCX close to the 77.50 7,700 mark. And the first target on that one was 7,500 and 7,450. It came very close to that second target of 7,450. The low of the day 7,480. Point being, the pressure on MCX is still apparent. The decline is gradual, but it's still a drop nonetheless. So for targets of 7,450 and 7,300, with a stop now around that initiation price of 7,750, you could hold or initiate a short on MCX.
So those are the topics coming in from Kushbora. But let's quickly pull up a Mastech on the screens. IT has been talk of the town today as well, with the kind of moves that are coming in on the back of Infosys buyback. But Mastech, that stock slightly under pressure, 0.5% downtick coming in there. We're joined by Umang Nahata, CEO of Mastech, to discuss about the latest NHL digital transformation deal that we are looking at from here on. Umang, welcome to the show, and always a pleasure to speak to you as well. In terms of Mastech, the recent announcement that has come in where the arm has been named as a supplier of digital tech clinical support framework, and the agreement has been given by NHS London Procurement Partnership. The company will aid the NHS and public healthcare bodies. Now, taking this deal into consideration, what does it mean for a Mastech from a size perspective?
Thank you. First of all, thanks a lot for having me on the call. It's a pleasure talking to you too. See, healthcare and NHS, specifically the healthcare in UK, is a key part of our growth that has been there for the last few quarters and will continue to be an important part of our growth going forward. This is a framework which is the NHS, digital and clinical, services framework. It's not an order. It's a framework that gives you the right to hunt within that framework. It's a £800 billion framework, which allows not just the NHS, but its affiliated bodies and even the trusts, which are the hospitals in UK, to procure from using this framework. And this framework will have a variety of different IT services that will get procured across various lots. And Mastech now has been onboarded in this framework. It's step one to being a part of the NHS procurement. So we're looking forward to a lot of new things happening on this framework. NHS is the key for really reviving the government's image. A lot of active spend and focus is on reviving NHS. And a lot of that revival is through digital ways and means. For example, creating a single unified digital ID or patient ID that could be across all NHS trusts, and digital health or telehealth, data-driven healthcare, preventions program, which is preventing patients from getting into the hospitals, and so on and so forth. So a lot of spend is due on NHS. A lot of investment is going to happen, and these are procurement vehicles that allow the NHS to buy from. And Mastech continues to be a key partner. And now we also are on the framework that will allow us to be a part of these investments that the government will make.
Point taken, Mr. Nahata. This is Harsh joining in. Give us a perspective on the size of the deal, because you're currently at 3,500 crore. In that context, in terms of top line, what's the impact going to be like?
See, the framework overall is £800 billion framework over the next 4 years. Most of the contracts that the government signs within this framework is a 3+1 year kind of contract. Healthcare continues to be a key part of our growth engine. We've doubled the healthcare portfolio, especially our healthcare portfolio in UK. Last year, we continue to look at a very high growth in that segment in this year and in the following years to come. I don't have a specific number for you, but it's an area which is going to be the highest growth area for us, amongst all the sectors that we operate in.
Hi, Mahima also joining in. Just want to understand because this is my understanding as to how NHS London works, because some part of it will be spent by the government as well and some part will be spent by you. What is that ratio and what is the approximate amount of investment that you're looking at?
So a lot of the spend is with the government. Of course, the government works with partners like ourselves, especially in the new AI and digital wave. It looks forward for partners like us to come out and deliver new concepts, new ideas, new POCs. So, for example, a lot of work that we're doing today is around data-driven using Databricks and using AI as a technology to deliver some proof of concepts. But a big block of the investment is going to come from the government. The investments that partners like Mastech will make are more around demonstrating how these technologies could be applied in the government's context.
Umang, another question I have, which is overall from a business perspective, right? Because currently we're talking about issues in hiring trends that have continued for IT as a sector. There is no clarity in terms of the client budget spends. No major positive trigger that is coming in for IT as a sector in the month of September because AI investments are still at an infancy stage. And there's a possibility that the FI churn may be seen in the counters from here on because the FI position, stakes in IT as a sector is at the lowest right now. If you have to take all of these aspects into consideration, where do you see the sector currently and in turn Mastech, and are you seeing a revival?
So it's a great question and a lot piled into the same question. But see, what is happening is our industry is an industry of waves. A lot of technology revolutions really drive the changes and disruption that the industry goes through. AI clearly is a significant disruption in the way we used to do business earlier, especially the IT services side of it. A lot of productivity gain on the technology side, on all the engineering work that we do, from software development to testing to maintenance to everything else that was being done. A lot of AI is being introduced in that kind of work. And hence there is, efficiency gains anywhere from a 10-20% to 50-60%, depending upon the kind of programs we are executing. And therefore, it is right for the customers to ask for those kinds of efficiency gains out of their partners who are operating. What it also allows for is there were various areas of their business that were not digitized, where we were not monetizing the data and newer revenues. So I see this wave in two parts. The part one is where we will have to demonstrate efficiency in the piece of work that has already been assigned to us. Demonstrate that those efficiencies, and that will give us the right to ask for more and bigger pieces of work with our clients. And step two is when newer pieces of work, when everything else that the client uses, all of their applications, all of their softwares will also have to be automated for AI in it, is where the real big hype and growth for the services will come in. So in the short term, it is going to be demonstrating efficiency gains in our estate and therefore creating advantages and asking for more. Step two is when the larger changes will come up.
Got it. Mr. Natha, really short on time. So give us a perspective, because you have such a large footprint in Europe in terms of your overall revenue, that you have a very good pulse also of how Europe is behaving at this point. There's obviously a larger focus with regard to spending, government spending that's happening in Europe. Are you seeing that translating to more business interest, better quality of business?
So, our business is largely UK. A large portion of the Europe is UK right now. And UK government is one of our biggest customers. So currently the trend is the UK government is also looking at, while they are spending a lot more on NHS and healthcare and defense and a few other critical sectors, there is a lot of efficiency asked in most of the other sectors. A lot of that is driven by AI. From the sizing and position where we are, we believe that the government's focus on AI and adoption will increase very rapidly in the short term, which might lead to, like I said, demonstrating some of those efficiencies in the piece of work that we have. But that and the strength and the trust that we have created with the government will really allow us to take a much bigger piece of pie, based on the efficiency that we're able to demonstrate in the small estate that we have with them today. So government will look at efficiency asks. A lot of spend will happen on digitization, but it will be also based on a lot of efficiency, both in terms of government processes, also in terms of their engineering spend.
Good opportunity to look at as well. But thank you, Umang, so much for joining us on the show and sharing the perspective with regards to the deal and how big this space could be for you. But staying with the IT space, Infosys is mulling a buyback, and this is on the 11th of September. That's the date that that they have discussed so far. Let's quickly look at the details. A proposal that will be considered for equity share buyback on the 11th of September. This is actually the first buyback that Infosys is looking at in 3 years, and October 2023 was the last buyback. If you see in terms of the buyback trend as well, what is interesting over here is the average premium is around 25%. So that is what you can take into consideration currently. And apart from that, if you have to look at the cash and cash reserves, that's the next one, that is standing at 45,200 odd crores. Now in 2017, as a percentage of cash, the buyback was approximately 31%. So you could look at that number, taking into consideration the cash levels are the same this time around. On an average also, Infosys spends around 30% of the cash on buybacks, which is almost coming up to around 13,560 odd crores. And to be noted, on the back of this news, the stock has seen an uptake of almost 25,000 odd crores, if I'm not mistaken, and I remember the number correctly, what Harsh gave us. Let's quickly look at the net worth. 95,350 odd crores is what Infosys is sitting on, and this is the current one as per the first quarter. And this is the highest that we've seen also since 2017. On an average, if you talk about the maximum limit, Infosys buyback is 14 to 15% of the network. Again, that number is coming to around 13,800 odd crores. If you talk about the maximum limits as per the Sebi rule, 25% of your net worth at around 23,840 crores is what Infosys can do as per the Sebi norms. And 10% of the net worth is at around 9,500 crores. And if it's less than 10%, more than 10%, special resolution is also required. What it could mean, this will actually provide some support as well in the environment that we are seeing right now, and that is clearly visible with the kind of uptick that we've seen in the stock price. Now, will buybacks in IT come back is the story from here on. If you talk about analyst views as well, consensus target, the highest is a 45% upside. Consensus is at 21 to 21% upside from the current market price. Very lastly, if you have to look at valuations, 12-month forward is 20 times, 5-year average is 25 times. That is clearly telling you the stock is also reasonable. So that's the story in and around Infosys buyback. But with the kind of upside that we've seen today, let me take the question with Kush. Kush, let me come to you. The 4.5% upside on the buyback, would you still say it's a buy at current levels?
So here that depends on the horizon. If it's a pure momentum play, I would say not, because despite the stock actually holding onto the ground, that it's gained and also inching closer to the high point of the day towards close, which is actually a very healthy sign. There are supply pressures, evident at the 1550, 1525 mark, which is not too far from the current level. So risk reward ratio from a very near-term perspective, not favorable. But if you have a 12-month kind of a horizon, maybe a little longer, then I think there's a solid base that the stock is made near the 1425 mark. So with that as your stop loss, or higher levels of 1575, 1625, you could still consider. So more of a positional bet, not from a near-term perspective. If you do have a position, no harm in holding up.
All right, so Infosys more of a positional bet is what Kush is saying right now as far as the charts are concerned for the counter. But the other counter that's been in focus since the past 3 days is Prime Focus, continuously hitting that upper circuit of 10% mark. And this is because marquee investors are making entry into this counter, and 3 straight days of large deals as well where Prime Focus is concerned. Now, just a brief about the company. It's an integrated media entertainment services provider, basically gives you services ranging from post-production, digital intermediate, visual effects, 2D, 3D, etc. And also is present in 18 odd cities. Now, the large deal that has been in focus today, around 20 lakh shares exchange hand at the price of 187.61. Yesterday's block deal also, investors like Marina Horizon and Marina Ivy sold around 1.8% in the company, and Augusta Investments owned another 2% in the company, and the entire stake of 3.87% was bought in by Kraft Emerging Market Fund. Day before yesterday, we had seen marquee investors entering the counter. Names like Madhusudan Kela bought in around 2% stake in the company, Utpal Seth bought in around 0.6%, and lastly Ramesh Damani also bought in around 0.3% in this company as well. In terms of the recent updates as well, the company has recently raised funds via preferential allotment by way of private placement. The company approved around 46.27 crore of equity shares at 120 per share, and the total consideration was around 5,500 odd crores, and this was funded by cash consideration by way of a swap. And the deal entirely here is that this is made for investing in their arm, which is DNEG, and the overall acquiring value was around 43 crores in terms of shares swap, and the remaining 3.25 crore shares was for 390 crores in terms of consideration. Now, in terms of the stake in the DNEG arm that I'm talking about, the company is basically a material step-down subsidiary of the company, and post this acquisition, it will hold around 88.28% stake in the company, which overall has a valuation of another 5,000 crores, and that's a big deal for Prime Focus, and that could also be one of the reasons as to why the stock has been buzzing since the past few weeks as well. If you take a look at the stock performance of Prime Focus, 5 days it's up 33%, 1 month it's up 27%, and the past 6 months it's given around 91% returns to their investors. So this is the overall view of what is happening in the counter and why the stock is buzzing, has been buzzing in fact in trade. Kush, I'll come to you on this one. Prime Focus, do you think the momentum is still there with respect to where charts are concerned?
Mahima, irrespective, it's the third day when the stock is locked in an upper circuit. There is no way you would be able to get your hands on it. But no, I think from a near-term perspective, this trade is done. The risk-reward ratio absolutely not favorable. If you have, you should continue to hold, because as I said, 3 days locked in upper circuit, you would have already made crazy returns. But because it's still locked in upper circuit, you might want to continue to hold up to this one. As I said, I mean, even if you want to, you wouldn't be able to get your hands on it, and the risk-reward ratio not favorable. So don't initiate fresh positions.
Fresh positions right now, absolutely strong volumes. Stay with us, Kush. We'll quickly slip into a short break. Up next, we'll be actually talking about the chatter behind the dealing rooms in our segment Heard on Street with Soumit Sarkar. Please stay tuned to NDTV Profit.
हम नेक्स्ट जनरेशन जीएसटी रिफॉर्म लेकर के आ रहे हैं ये दिवाली के अंदर.
I think it will have a very positive impact on the GDP.
A landmark reform, a new economic chapter, a nation rising together. NDTV Profit presents the GST Conclave with Finance Minister Nirmala Sitharaman, policymakers and industry leaders reflecting on GST 2.0 and charting the road ahead. NDTV Profit GST Conclave, reforms for a resurgent India. Only on NDTV Profit.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The
Markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Call us from
Thanks for being with us here on NDTV Profit. Slew of stocks buzzing and of course we'll have heard on the street very soon, but Varsha to start off with to join us with that list of stocks that are buzzing in trade. What's on your list, Varsha?
Well, thank you so much for that. Let me start with Glenmark Pharmaceuticals, wherein they've received an upfront payment of $700 million. Now this is on the back of their licensing agreement or licensing deal for one of their lead asset, that is ISB 2001. Now the payment is according to the contractual agreement that they did. Company will also receive, or rather is eligible for $1.22 billion payment in development, regulatory and milestone. Next on the list is Morpen Lab, wherein they've signed JV they've signed a JV agreement with a UAE based company. Now the JV will actually manufacture and sell the medical devices and related products. Last on the list is Morgan Stanley note on the apparel retailer, wherein they've upgraded overweight from equal weight for AB Fashion, and they've initiated with overweight for AB Lifestyle. They think that these are at the cusp of improvement, rather the fundamentals will improve. This on the back of profitability and also sees opportunity for valuation re-rating. So these are the three stocks, rather four stocks I would say, which are buzzing on the back of news flow.
Thank you so much, Varsha, for those, and absolutely buzzing on the back of news. In fact, let's get in Vineet Bulunchkar, Head Research at Ventura Securities as well. Vineet, good afternoon and welcome to the show. From the four names that Varsha has been talking about, two on the back of a brokerage note, Morpen Laboratories on the back of a JV, and the $700 million that was known that Glenmark has now received from AbbVie as well. Anything that you would recommend investors to look at or buy at current levels?
I think I'll go with Glenmark because the intrinsic valuation and follow-through is going to be very strong. I believe that Glenmark is well suited to rally further from here, given the traction that they're getting from the team.
Okay. Kush, any view with regards to where Aditya Birla Fashion is concerned? I'm not sure if the Aditya Birla Lifestyle has enough data on the charts, but ABFRL, what are the charts indicating? Further upside is something that you're seeing?
Sure. Just a quick word on Glenmark. I actually do agree with Vineet. I think there's a good upside which is possible. Plus, if you look at it technically, there was a gap around the 1930 mark that was created, when that good news pop came. Precisely, that's the area where it's failed, taken support, and it's now rebounding. So I think a good, entry point for a positional trade on Glenmark. Now to the question on AB Fashion, very interesting moves on this one as well. For the past 12 odd sessions, if you see, there have been at least 3-4 sessions where you've seen above average volumes, and the price action has actually gone from 77, 78 to up until 90. So the momentum is already underway. If I were to bet on one of the two at least, I would definitely bet on AB Fashion. And you're right, AB Lifestyle doesn't really have too much data, so I'll skip it.
Okay, so those are the picks coming in there. But because Glenmark is one stock that both the technical and the fundamental analysts that we have are positive on, let's look at another healthcare company which is listed today on the bourses. Amanta Healthcare. Let's just pull up that stock on the screens and see what the counter is doing in trade. Its debut today, 12.5% up move is what we are seeing in terms of the stock. In fact, the subscription itself, Harsh, was so strong on this counter, and the up move probably was absolutely warranted as well. I think a quick question with Vineet on this one. Vineet, would you be a buyer with a 12.5% upside on a Amanta?
I don't track it too much, so difficult for me to comment on that, but definitely something in the works for us.
Anything in the healthcare space, Vinit? Anything that you like?
See, there is one small counter called Sakar Healthcare. They're doing some very good development in terms of generic and anti-cancer drugs. I think that company should be looked at. They just did a 25% YOY growth in the last quarter, and we're expecting some very strong numbers coming from there. So it's a very under-owned stock, a value buy, and can surprise on the upside.
Okay, and Vineet, your take with regard to IT, because the move that Infosys has made today, can't help but ask you that question.
Yeah, so when you have very bad negative trends in the stocks, and most of them are at their supports. Any kind of good news that comes, like a buyback, we've seen the stocks move up. But beyond that, I don't think there is much to be made out of this. We need to see how the IT space will move in relation to how the US markets are performing, and expected cataclysm that we expect out there. So I think it's a flash in the pan.
And IT. But Sona BLW, the saga has now taken a new turn. That is what your flashes are indicating right now. The stock is at the day's lowest levels. You have Karishma Kapoor's kids who have moved the Delhi High Court for a share in Sanjay Kapoor's estate. That's the latest that we're picking up. The children have accused Priya Sachdev of forging the will. So that's a new turn that the Sona BLW saga has taken after the promoter's untimely death. The children have now been accusing Priya Sachdev of forging the will, and now they are actually asking in for their rights. They've moved the Delhi High Court as well in the same for the same. That stock is down 2.5% as we speak. But the bull versus bear segment is another highlight. Ujjivan Small Finance Bank, an interesting stock, at the day's highest levels, gains of nearly more than 7.5% coming in there, and hence that becomes our bull versus bear candidate. Our colleague Vansh is with us to tell us more. Vansh, what are the bull cases? What are the bear cases as well? And I think then Harsh will be there to weigh in as well.
Well, yes, so let me start off with the bull case scenario first. Now, what we can see is the loan, if I talk about the loan book, now the bank is expecting the loan book, to triple the gross loan book portfolio in the next 5 years. So this is a big positive for the bank. But if I talk about the bear case scenario, now the bank has been able to double their entire loan book from FY21 to FY25. That's a 21% CAGR. But this was on the lower base. So it would be interesting to watch out for, like, if the bank is able to triple its gross loan portfolio with a higher base from here on. Moving on, let's also look at the secured book. Now the secured book is expected to be 65 to 70% of the entire loan book of the bank. But if I talk about the bear case scenario, now the increase in the secured book will obviously drive down the margins, and it is the unsecured part that enables the bank to fetch that higher margin mark. Moving on, let's also look at the ROA of the bank. Now the bank aims to maintain a steady ROA of about 1.8 to 2%. However, the bank is however, the ROA of the bank has been inconsistent, and in the last 5 quarters, in fact, the ROAs have been declined, and they are trading below 1% as well. Lastly, next what we have is the credit cycle. Now the credit cycle is expected to turn positive in its second half of FY26, followed by the boost in consumption. However, the credit cost of the bank has already gone up by 2.5% since the last 3 quarters. That is again a negative to watch out for this particular stock. Lastly, what we have the valuations. Now the bank is trading at a valuation price to book of 1.5. Now this looks reasonable given the strong growth guidance from the bank. However, if we look at the 5-year average of the price to book, it stands at 1.3. So what we can clearly look look is that we are trading at the above mark in above end in terms of the price to book for this bank as well. Lastly, if we look at the analyst recommendations, we can see 14 buy calls, 1 hold call and 1 sell call with expected return potential of about 18%. So this is what the overall picture is looking like for a Ujjivan Small Finance Bank.
Well, thank you so much for that, Vanch. Very well put. But when you're looking at the way in which the stock has moved, it's 7.5% up in trade as we speak. Vineet Bolinchkar, Ujjivan Small Finance Bank in particular, would this be on your radar? And do you believe that this tripling of loan book by FY30 likely?
It can be possible.
Okay.
It can be done. You just need to get your act together. Execution is a key out here. And they've come back with a reasonable performance. Not extraordinary to think that they will do the tripling of the book. Valuations are factoring in the recent performance. They are reasonably valued. I think a northern arc, which is going to grow at about 20-25% over the next few years, and having a very low price to book with very decent de-risked product, offers greater value at current levels.
Okay, all right. So that's with regards to where Ujjivan Small Finance Bank is concerned, and of course where charts are concerned. But with regards to this counter precision camshafts, Kush, your view, the stock has gained over 45% in the past 5 days, and the kind of momentum that has picked up in the past 5 days is quite impressive. Do you think the momentum still stays going forward?
The volume action would suggest, yes, it could, continue from here on as well. So you're right, the stocks actually had a phenomenal run. Today, the volumes are multifold of the past 20-day average. So I think there is definitely, accumulation happening. And yes, while the momentum can take the stock northwards of, 270, 280 as well. From a near-term perspective, that trade is done. It's already hit overheated territories. So no point buying now. The best strategy on this one would be to hold, or perhaps buy on declines closer to 240 levels.
Right. In fact, coming to the small finance bank, we've taken a fundamental view from Vineet. Kush, what would you have to say? Because all your small finance banks, from Utkarsh Small Finance Bank, Suryodaya, ESAF, Equitas, Jana, Capital, all of them have underperformed. You've seen cuts to the tune of almost around 16 to 55% at various stages, all of them. Taking the commentary from Ujjivan into consideration, and if you have to apply a similar technique that fundamentals will turn around for the other names as well, would you be a buyer at current levels of any of them?
Not really, Hiral. I wouldn't paint the entire sector with the same brush. A lot of names aren't showing that kind of exuberance or enthusiasm that Ujjivan is. But if I talk specifically about Ujjivan, definitely an interesting move. And I'm not just saying because of the move that it's making today. It's had 28 sessions of consolidation where, 42 to about 44, 44.5 if I'm pushing the range. That's where it's consolidated. It's had its spurts and, spurts in volumes as well. Today, it's finally broken out of that range. The 50-day moving average also taken out. So I think it's got a few factors going for it, from a technical standpoint. I won't be surprised to see the stock actually hit 48.550 and maybe even higher levels in the current rally itself. So amongst the entire pack, Ujjivan stands out. So if you do want to trade in this particular space, you should consider Ujjivan. Now the resistance level of 44.5, that will act as a support, and that should be your stop loss.
Okay, so that's the take with regard to all small finance banks. But, a little bit more on that. And really the argument is that they've underperformed. And can there be a change in terms of the next 12 months in terms of performance? And we've tried to break down the data and try to kind of say as to why that has been the case. You look at the sharp underperformance that we've seen from some of these counters. It's been very, very painful. And there are reasons for that. Let's pull out the reasons. One, you have a poor asset quality cycle primarily. The margins are shrinking because of shrinking loan yields. There's been a shift from higher yielding to more secure products as the cycle has gotten difficult. There's been a rise in credit costs. There's been asset quality pressure, obviously, as a result of that. And all of this is pressuring the ROA. Both the margins and the credit costs are what's pressuring the ROA. And you'll see what has played out in terms of margins. There's been a sharp shrink across the board. Let's roll the slide forward, get the balance banks as well, and that is the sense you'll get on the way in which the margin shrink has been. Let's talk about credit cost, and that one has gone up. You look at the band in which they've traded, all of these are now at a point where they are playing with the highest end of the band where credit cost is concerned. This is, of course, the last 3 years data where you're looking at the credit cost over the last 5 quarters, how they've inched higher from 2.7% 5 quarters ago. Credit cost currently sits at 8.8% for something like an Utkarsh, a higher end of the band even for some of the others. When you're looking at growth, and yes, you will see certain pockets where growth has been there, but you look at some of the very, very fast growing banks over the last 4 years, the growth has all been back-ended. The last year or so, growth has been sluggish and tough to see for most of them. On a small base as well, you're seeing just an 11% growth that Ujjivan has clocked in this year over the last 12 months. So even growth has been subdued. Now, what to look forward to? Banks having the ability to bounce back quickly will likely do better, of course. The pain in the microfinance and unsecured segment is likely to taper starting Q3. Growth may return in favor of certain banks. Certain banks will be able to bounce back faster, and margins may remain depressed. You want to look out for commentary where all some of these guidances have been made better, because that could well be the opportunity. Credit costs may reverse with likelihood of recoveries also coming through. A lot of this is not being priced in, and that is suggestive of the way in which the analysts are viewing the sector or the segment of lenders. And you'll see very, very strong returns is what they're penciling in. Vineet, you spoke about Ujjivan in particular. Are there any other banks within the small finance bank space that you seem to like, especially from a fundamental perspective? Because there's just so much bullishness that analysts have in terms of upside, but that's not translating at this point.
I think Suryodaya is better positioned. Here you need to take a risk to reward ratio. You need to see the valuations. I think the valuations of Ujjivan Bank are quite reasonable. Suryodaya is quite cheap. I also spoke to you about Northern Arc Limited. I think Northern Arc is got a very well diversified portfolio. Fees coming, not only are they throwing their balance sheet at work, but they're also having a lot of cash flows coming from fee-based income, which are very, very strong. So I believe that, Northern Arc is very well placed to grow from here.
Okay, so that's with regards to where, small finance banks go. Northern Arc Capital, an interesting 1.5% up move coming in on that stock. But now we've actually gone past that 245 window for Herd on Street. My colleague Somit Sarkar joins in with all the chatter from the dealing room. Somit, what are you picking up? And one more, I have a follow-up in the morning that we spoke about Voltamp as well. Any indication of what the, taking the deal size of 7% into consideration, I think it exceeded, and I think it was 8% if I'm not mistaken. Anything that you've picked up?
Well, not much of a detail that has come in on the subscription numbers or who have been the major subscribers for Voltamp Transformers so far. But other stocks that remain in focus, firstly Star GVK and Nykaa. There's a buzz of a potential block deal in both these counters very soon. In Taj GVK, the seller could be Indian Hotel is what dealers are indicating, and do remember that Taj GVK board meet is today to consider some urgent business matters. So keep that counter in focus. HUDCO is another counter that remains in focus. Dealers are indicating that there are buy flows at lower levels on institutional desk. For PTM, the stock has been under pressure of late, but dealers are now indicating that the selling is likely to get over soon for this counter. So keep an eye out for PTM as well. Ramco Industries buy flows on large HNI desks. Positive development is something that dealers are expecting here. For Trent, there are sell flows seen at higher levels. Weak sales growth number is one of the concerns that is emerging up for Trent, and that's the reason we are seeing such kind of a sell flows for Trent currently in trade. And lastly, it's a Cello World and Axicates. Both this counter, dealers are expecting a fundraise via QIP announcement to come in anytime soon. So keep an eye out for both the counters as well.
Right. In fact, another one, a follow-up I have for you is Kotak Mahindra Bank.
Right.
This morning you had that on your radar as well, and I think there is some
Yesterday
buying
itself we had it.
Yes, there is some buying interest coming in there as well. Any updates that you're picking up?
So most likely the seller is a Japanese investor, that is Sumitomo. That is what is pretty much known to the street right now, and what I'm hearing is that the block deal might happen in the block window. So not much of concern of leakage of any shares, and hence the shares are not reacting to that blockage.
Okay, so Amit, thank you so much for bringing us those details. Vineet, I'll come to you on trend specifically. What Amit said was that there's anticipation that the numbers could be, the sales number could be weak going forwards, and this is something that he is hearing despite of the GST reform coming in. A trend could be a possible beneficiary because a lot of items that trend sells is below that 2,500 mark. Your view with regards to where fundamentals are concerned for this counter, because they are also having huge expansion plans for FY26.
Yeah, so what was very noticeable is in Q1 their deceleration was there in growth. Okay, because of which we've seen the counter tank, and if you pencil in all the growth that they're talking about, we're getting a fair value in our view at about 4,800. So there could still be more selling pressure, and the stock could underperform over the next couple of quarters, given that the valuation already factors in this entire of the extreme strong growth prospects.
Okay, so that's with regards to trend. The stock is at the day's lowest levels. So let's quickly pull up a Metro as well, that we're talking about the consumption pack right now. We did speak to the management, and the commentary that we heard, that's actually taken the stock to the day's highest levels with gains of around 4% coming in there. In fact, we spoke to Nissan Joseph, the CEO of Metro. Let's quickly listen into what he had to say.
I think it's the positive revenue is really the increase of demand that comes when you lower price points. So that's where the positivity comes from. As far as clearing out the old inventory, it's not a question of old versus new, right? It's a question of what is tagged. So we can instantly start giving them the benefit of the GST discount right away. And then the new products would have that rolled into the price. So it's not new versus old. It's really a new price point that we're trying to get, but we can reach it a couple of ways. But the bottom line is we plan on turning all those GST savings back to the consumer in all of our banners. No, we don't see a distinct difference between, a product that might be at 5,000 rupees versus a product that's at 2,000 rupees. Our sourcing structure, our margin structure remains pretty constant. So we don't see that, and I think you mentioned inflation. Inflation is always going to play a part of it. And as inflation comes up, you try to reduce some other costs. So you try to get operating leverage to try and maintain that trajectory of that 15% or the mid-teen PAT numbers that we guide to.
All right, so that was the management of Metro Brands and one of the counters that is set to benefit from GST 2.0. Kush, I'll come to you on the charts for Metro Brands. Attractive enough to make an entry?
Afraid not. I mean, this is the fourth time that the stock is attempting the 1240, 1260 zone resistance. And, we've seen rejection from those levels a couple of times in the past. So once that level is taken out, do you consider an uptrade? If not, you might want to just hold on to your position. So 1260, perhaps even 1265, that's the range that you want to watch for. Above that, it could start a new trend.
Okay, Vineet, how would you play consumption at this point? You've already seen a very strong rally in auto, and on the core consumption side, would it all something like a Metro Brands feature?
Metro Brands is very well valued. And it has always commanded premium valuations because they've got a very strong business model. I think that there is room for growth, and we could see new highs coming in the in the recent days. It could be one of the biggest beneficiaries of the consumption theme.
That's with regards to where Metro Brands stands. In fact, the footwear space that has been in focus since the GST 2.0. But let's shift focus to the significant order wins for counters like Vari Renewable, Railtel, as well as John Cockerell and Quality Power Electrical. Anushi joins us with more details. Anushi, lots of orders coming in for Railtel in specific.
Well, yeah, absolutely, Mahima. We've seen about 5 order wins just coming yesterday for RailTel Corp, and today also we saw about a 15 crore of an order again. So now just talking about the order wins that we've seen so far, now this totally amounted to about 713 crore, and if we take the 15 crore in consideration, it roughly adds up to around 728 crore or so that we are looking at. So significant orders that we are looking at, and this orders, multiple of these LOAs that have been signed are from Bihar Education Project Council that we are looking at, and this pertains to procurement and installation of smart classrooms at government middle school, along with supplying other facilities like ICT labs as well. If you take the order execution in consideration, that is to be executed by March 26, like majority of these at least, and order book positioning, if we see, that stood at around 7,197 crore as of the first quarter end. Now talking about Vari Renewable, now this is the recent one which came today. They have signed a LOA worth about 1,250 crore for a solar power project, and this is a EPC contract that we are looking at for connected ground mount solar power project to be executed by FY27. Now what is interesting is the company's order book as well. Now currently, if you look at their unexecuted order book, that stands at 3.15 gigawatt peak. This is to be executed between 12 to 15 months period that we are looking at, and they have a bidding pipeline of around 25 gigawatt of peak as well. So Vari Renewables, another stock in focus. But coming to some of these smaller counters as well, let's shift our focus there as well. We have John Cockrell in focus. Multiple orders that we are looking from here. They've signed a prestigious award in terms of their JFE Electrical Steel Nasik Private Limited, awarding them a major contract. This is for high temperature tunnels furnaces that we are looking at. The order effect playing out in FY27 as well. Along with that, they've also received a 50 crore of an order from Godavari Power. The last one in focus is something like a Quality Power Electrical Equipment, and this in this the step down subsidiary has received 2 international orders which amount roughly up to 75 crore, and this is to be delivered over the next 1 year period itself. So these are the handful of stocks that are in focus on the back of order wins.
Okay, so on the back of order wins, quick names that are in focus. But, one question I want to take with Kush is on his topic between ITDC, which is seeing strong moves. Precision, we've already spoken about, so I'll skip that one. Sula Vineyards is seeing a good day of trade. IOL Chemicals, last 2 to 3 sessions have been pretty strong. And a GSFC. If you have to look at these 4 counters in trade today, Kush, anything that you would advise for a more momentum pick perspective?
So I think from a pure momentum trade perspective, IOL Chemicals actually is doing rather well. It's had a good session yesterday as well. Today you're seeing some follow through. While there is some profit booking from the higher levels of 120.5, I think the momentum could take it higher to about 125 watt levels. Keep a strict stop loss near the 114 mark. So good momentum, good traction, and a follow through of yesterday's moves, puts it in a good state.
Okay, so that's with regards to IOL Chemicals, but we'll quickly slip into a short break. We have lots more lined up on the other side, where GST 2.0 is going to be called a landmark reform, one that redefines the way India does business. But what does this mean for industry, for markets, and for you? How will this actually shape the growth story for a Viksit Bharat? From reforms to real impact, from policy to people. Every question that matters will be answered today at the NDTV Profit GST Conclave with Finance Minister Nirmala Sitharaman, who will lead the crucial conversation. But first up, let's get in Tamanna and Neeraj, who is at the Conclave, to get us a wipe check. Who are you also joined by? We have NDTV's Vishnu Som, Gauri Dwivedi and Vedika Sood. Tamanna, what's the mood check looking like?
All right, hi guys, we're all set for the GST event this season. Yes, we're all counting our pockets on how much we're saving after the GST cut, but the GST conclave is where it's all at, and we have the star cast across the NDTV network and on NDTV Profit. Vishnu, what is the one thing that you're hoping to hear from Finance Minister, the one question in mind?
I want to know how much the common person is going to actually save and if this is going to spur consumption.
I think people are going to spend more than save now that they think they have extra pennies. What is the one thing that you are going out to buy? Have you looked at car models yet, Vedika?
I need a fridge. It's been a while, though there's no real discount on fridges. I've realized I just have to go get it. But there's a lot of excitement because there are a lot of family members who've been waiting for GST 2.0, and I think they were just waiting and waiting to get to this point, 22nd September, to go out there and get their stuff. So friends and family very excited.
I wonder if people will upgrade to more expensive stuff. Gauri, what's going to be the highlight for you?
I think I wish I had the same kind of bucket list that all of you do in terms of purchases.
40%. 40%.
I am in the bracket.
So look at the higher end cars where the GST has come down. Yeah.
I think it's more like I want to save the extra money that I'm getting.
So
How much I'm going
savings,
to save?
savings.
How much am I going to save is the key question, and I think that's going to be equally important.
You know, I think Tamanna, that happened with the income tax cuts, right? The savings happened. Now is the time to spend. So the economy needs it. Go out and splurge. But I think one thing that I look forward to is hearing what's next after this first set of GST reforms have happened, because everybody's talking about whether this is setting the stage for further reforms in India. Is this the first big one, and then do the others happen? Any thoughts, anybody on
I
that?
think that one nation, one tax that everybody's been talking about.
Light years away?
Is there? Yes. But probably this is the best time to talk about it. I mean, if at all we're going to get anywhere close to it, I think this is the time to speak about it.
Any thoughts, anybody else?
So I just want to say that all of this is great as long as people end up spending less for what they wanted to actually buy. In other words, all of this needs to translate onto the common consumer.
I think it needs to be the reverse. People need to spend more, and then people need to also save more in terms of mutual fund inflows, if at all. If you're not spending, then at least put it in the right way to save. But I think people are going to upgrade. If you're going to buy a small car, maybe you look at a sedan. If you're looking at a sedan, maybe you look at an SUV. That's what the hope is.
Now we know what Tamanna is going to do.
Profiteering. No secret profiteering is my point. I know they've spoken
This is
against
why the
it.
markets are down, because none of this is going to be margin accretive.
Yeah. So
People are worried that in the long run, all manufacturers are somehow or the other going to find a way to pocket the profits, which is their birthright.
Exactly.
But there is an anti-profiteering intention over here. How much will that work?
And that's a
But
question
can we-
we
I mean,
should
that's my
ask the
question.
stakeholders today.
Can we
Is it going
actually
to pass on
implement
to
it?
the consumers or not? Are you going to, like he said, pocket it, or is it going to pass on to the Aam Aadmi?
Okay, look at the glass half full as we wrap this. It's a major reform undertaken. Let's just see what's next in store. But for today, let's just get the nuts and bolts of this one being done. So tune in 3 p.m. onwards on the NDTV network, across the NDTV network, for the GST Conclave.
हम नेक्स्ट जनरेशन जीएसटी रिफॉर्म लेकर के आ रहे हैं ये दिवाली के अंदर.
I think it will have a very positive impact on the GDP.
A landmark reform, a new economic chapter, a nation rising together. NDTV Profit presents the GST Conclave with Finance Minister Nirmala Sitharaman, policymakers and industry leaders reflecting on GST 2.0 and charting the road ahead. NDTV Profit GST Conclave, reforms for a resurgent India. Only on NDTV Profit.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real review.
Welcome back. You're watching India Market Close here on NDTV Profit. Let's bring in both our guests, in fact, very quickly before we speak more. I mean, we obviously have a view coming in with regard to an Ambuja on CLSA, but before that, I was just looking at the BSE 500, and one of the big movers in trade is an East India Hotels. 6.5% is what it's fallen from the day's high. So you pull up the intraday chart with regard to an East India Hotels, you'll see the kind of fall that we've seen on that stock. So sharp fall that we've seen from the top of the day, of course. Kush, do you have a view with regard to this one?
I think it's a round of profit booking. The stock actually had a bit of a run up from those 390 odd levels all the way up until 434 that it moved today, and this is in a very short span of about 8 odd sessions. So some profit booking. Would I enter now? Not really. Some negative RSI divergences popping up, and the fall is also on the back of fairly decent volumes. So you might want to wait. Once again, around the 395-400 mark, the 20-day moving average support also comes in. So if the stock settles around that level, it might make for an interesting entry. Not yet.
Okay. Now the other one really is an Ambuja, and Hiral, we've spoken so much about the fact that cement pricing could improve. And now that we're at the fag end of the rainy season or the monsoons, likely that might spur some amount of demand. In fact, we had CLSA maintaining its outperform, target price 665. So positive with regard to an Ambuja. They believe realizations likely to have a positive impact. Premiumization and reduction in indirect tax likely to have a better impact on demand. Near-term demand impacted by monsoons. They're saying there's already been a deferral of purchases, partly due to monsoons, partly due to GST, and over the medium term, they believe that Ambuja could grow 7 to 8% faster than some of the others.
And in fact, recent also, I think Puneet had only taken us through a dealer check, which was indicating that there was a potential for a price hike that could be taken in the month of October. But on the back of GST cuts, when we spoke to a couple of managements as well, Birla Soft as well as Shree Cement, what they indicated is that they're not negating a complete price hike right now in spite of the GST cuts that have come in. They will look at some portion as well. So this sector is going to be in focus from here on. But if the capex is a downer this time, then that could be a negative.
That, as well as the fact that maybe government spend getting curtailed, either of those, and we spoke about that earlier in the newsroom. But yeah, I mean, likely Ambuja to be that outperformer is what CLSA surely believes. 665 is obviously a decent upside from here. Vineet, do you have a view with regard to cement and Ambuja in particular?
Now Ambuja in the cement pack along with JK Lakshmi Cements. I think Ambuja is doing a lot of rationalization of cost. Acquisitions have been done in reasonable markets where there is growth, and this GST impetus is only going to make real estate affordable, prolong the life of the real estate cycle, and Ambuja is definitely going to benefit from this.
Okay, do you, Kush, have a view with regard to any of the cement counters?
I think Dalmia Bharat is shaping up very well. It's had a good run. It's holding on to its ground. A lot of the other names starting to see some profit booking, but I think this is just setting up for the next leg of up move. So JK Lakshmi Cement, Ultratech, some of these names could actually well see an up move from here on. But I think that Dalmia Bharat still holding in good state. So if you want a more steady kind of a trade, then Dalmia Bharat is just on.
Okay, now the other piece is with regard to Swiggy and Zomato. The Competition Commission has ramped up scrutiny on quick commerce platforms. What has led to this, and what's the impact of this likely to be on both the Zomatos, Swiggies of the world, but also some of the Kirana stores? Agni takes a closer look at this piece. Agni, what are you hearing?
So the Competition Commission of India is looking into alleged anti-competitive practices by quick commerce players. Now this petition has been filed by a distributors body with the competition watchdog, and they are looking into players like Instamart, Blinkit and Zepto to decide what kind of practices are these companies pursuing, which forces Kirana stores to shut shop. Now Kirana stores across Mumbai we talked to have voiced a common idea where they are saying that deep discounting is something that really affects their business, where they can't compete against these giants which are backed by a lot of money and are into a cash burn business. Here's one such Kirana store operator whom we interacted with.
Happens is they have the data with them and they play on it. Also, they are funded companies and their aim is to grow by 10x, 20x over a period of 2-3 years, or every year they have a challenge. They have a target, so they burn a lot of cash. They are not really that's what something that we can do. Yeah. They have a lot of data, they have a bigger team, they can spend so much, and that becomes it's an issue for us. But it's a part and parcel of doing business. So what I know for sure, that even they know, the founders know that what they are doing is not good for this generation. Basically, they are spoiling the habits of the younger generations. The alpha, beta gen which is coming and will be growing with things around like these quick commerce apps. They will never know how to schedule or plan. It's very random for them. It's very spontaneous for them. Manu hua to manga liya.
Now sources tell us that Instamart, Blinkit and Zepto are in the process of filing their responses to the CCI within the next few weeks, though there has been no official request from the CCI. Now, while we do not know what the contents of these responses will be, we do know that they will be centered around addressing allegations of violation of certain provisions of the Companies Act. Now, while this case draws on, while this probe draws on, and as the companies go to court and decide who's right and who's wrong, ultimately it's the Kirana stores and their owners who end out losing on revenues and a base that took years to build. For NDTV Profit, this is Agnidev Bhattacharya with Prahlad Shinde.
Okay, Agni, thank you so much for bringing us those details. Now, shifting focus to the auto space, Morgan Stanley has come out with a note and hiked prices for a lot of stocks, and Puneet joins us with more details on the rationale and of course what counters are the prices being hiked for.
Well, thank you for that. So 8 counters that they have, either hike prices or actually reduce prices. 7 of them have actually seen an increase in price, with Maruti Suzuki being one of the main focal points in this particular report. Target price now over 18,000 rupees for this one. For a prolonged period, over 6 quarters, Maruti was between 12 to 13,000 in terms of price for its share price essentially, and seen a meaningful upgrade now. Someone like a Hyundai has also seen an overweight rating now. Target price is now 3,066, while something like an Ashok Leyland has also seen meaningful upgrade in its target price. Hero MotoCorp has been upgraded to an equal weight from an underweight earlier, and now target price for this one is 5,900 versus roughly 3,700 earlier, while something like an Eicher Motors is the other one which has seen some form of reduction in target price, while Bajaj Auto has also seen that one as well. Overall, 3 key points they are making in this particular report. Auto upcycle is finally here is what they say. They've also mentioned that the GST rationalization may drive price cuts of a magnitude that's not been seen ever before previously as well. When you look at the other points they're making, monetary easing as well as the 8th pay commission will also support the demand starting January of 2026 and will be visible in the demand for these prices. And finally, they mentioned that in the past cycles that auto multiples peak largely around when the margins are at its upper end, which isn't the case as of now. So they're mentioning that incremental margins could actually surprise on the upside, and you may see earnings upgrade for a lot of these counters, especially in the OEM space coming in. but we've also seen some stock price increase in a lot and a bunch of auto ancillaries as well. So largely a very, very positive note on autos and increasing the earnings estimates essentially for a bunch of players, with Maruti being the central focal of the report.
Well, it's all about auto. Some prices going up, which is target prices. Some prices coming down, which is the price of the automobile itself.
Should you be a buyer of the vehicle, or should you be buyer of the stock because of the run-up that you've already seen? And that's the question we should be taking. Thanks, Puneet, for that one. Kush, with the run-up that has already come in, little over 8% is the kind of uptick in the month of September itself for the auto index. Companies have seen a good uptick. Would you still be a buyer at current levels? And if so, which one would it be?
Here, assuming one was an investor in some of these stocks or a trader in some of these stocks, I think this is a double bonanza for you, because now you can book profits in those stocks and buy the auto or the vehicle that you want much cheaper. So that's how I would go about it. That's on a lighter note. But on a serious note, all of these stocks have actually had quite a bit of run up. I was suggesting a buy on Mahindra & Mahindra despite the kind of gap up that it had 4 sessions ago, and it still continued to do well from 3450 to about 3700 odd levels. But now even that is starting to see some profit booking. While a lot of these names are doing well and will continue to do well, it will be with some sort of a pullback. The auto index itself has gone into overheated territory, so of course we can assume safely that a lot of components have, and they have. So I will wait for a pullback. The only one that hasn't really moved up quite sharply as the others is Tata Motors. But we know there are a lot of things going for it. So for a positional trade, that still makes sense. But otherwise, be it passenger vehicles or 4-wheelers or other 2-wheelers, you still want a pullback of anywhere from 5 to 7%, maybe a little more, for these to become an interesting or or a viable trading opportunity.
In fact, Vineet, any one pick, if you had to, from the auto pack, which one would it be?
Go with M&M. I think they've got very, very good product portfolio, and it is gaining market share. And I believe that the company's other investments in other subsidiaries also add to these companies. They're all in the capital goods space. So definitely M&M will outperform from here.
Okay, so outperformance with regards to M&M is what we are looking at so far. But apart from this, just a couple of other names right now which actually are looking pretty strong if you have to see from the broader markets. We did speak about RailTel on the back of an order win. Titagar is another one which is seeing good strength. The question over here is Railway going to make a comeback right now? Because last few months, order wins that have started to come in for railway companies.
Absolutely. Vineet, how would you play this space? You have government spending, whether on infra, whether on railway in particular. Is there any pocket which is looking good to you from that perspective?
I think the railway security platform Kavach looks very good. Here we like HBL Engineering. I think that stock is doing really well. Apart from doing Kavach, they've got very strong order book. Probably good for another 2 years. They've got also other verticals which are really firing. And investors should just take a look at his Q1 numbers, and you will understand why the stock has moved almost 30% since the results were declared.
Okay, some of the other stocks which are really buzzing, and Kush, let me come to you on this one. Lakshmi Organics, from the lows of the day, the stock is up 11%, 9% up, but from the lows, you've really seen this stock make a move. Do you have a view with regard to this one?
So, Harsh, I think this is now very close to a rounding bottom formation breakout, but that comes above the 235 mark. So, if you have a position, continue to hold. For a fresh position, you might want to wait up just one more day, see if there is a follow through for this trade as well, because previously also it's happened that the stocks had a big move on the back of good volumes, but then it's given way and slipped low. So for me, 235 is a key level. If that is crossed tomorrow, then I think this momentum could continue. If not, I think you will find the stock available at lower levels of 220 to 225. It should be a good entry point.
That's Lakshmi Organics. But as promised, here is the event we have been all waiting for. NDTV Profit GST Conclave, which is live from New Delhi, and those are live visuals that we are picking up with a full audience. I think this is actually telling you the strength and the interest that people have to understand what a GST 2.0 would mean for the economy, what GST 2.0 would mean for the industry, what GST 2.0 would actually mean for all the investors as well. And that's 100% attendance that we're seeing. Let's tell you what the summit is all about. Over to you.
Here at the NDTV Profit GST Conclave. Well, if you want to truly understand the impact of goods and services tax 2.0, there is no better place to be than right here. Today, we bring to you some of the brightest minds, architects of GST 2.0, policymakers, economists, and industry leaders to dive deep into every aspect of this transformative journey and reform. I'm Vedika Sood, and I'll be your MC for the day, guiding you through what promises to be a series of insightful and impactful conversations. To set the stage, it is my pleasure to invite my colleague, NDTV Profit's Managing Editor, Tamanna Inamdar, to deliver the welcome address. Tamanna, over to you.
Thank you, Vedika. Thank you to all of you, and a very warm welcome to each one of you to the NDTV Profit GST Conclave, Reforms for a Resurgent India. Today, we gather at a pivotal moment in India's economic journey. The goods and service tax, introduced as a landmark reform, has redefined how India does business. It has unified markets, broadened tax bases, and has brought transparency into the system. But as India aspires to become Viksit by 2047, the conversation does not stop at what has been achieved. It extends to what more can be imagined, innovated, and implemented. This conclave is not just about tax, it's about reform, resilience, and resurgence. It's about creating a business environment that is seamless, efficient, and globally competitive. And above all, it's about how India can continue to power inclusive growth through policy innovation. We're privileged to have with us today some of the most respected voices. Of course, the architects of GS 2.0, industry veterans who are impacted the most and benefit the most, and the economic view from the top. On behalf of the organizers, I extend our deepest gratitude to our partners, speakers, and all of you in the audience, policy thinkers, entrepreneurs, and change makers who make this conversation truly meaningful. It's going to be a packed day of powerful conversations, and of course, we'll have the Honorable Finance Minister Nirmala Sitharaman joining us soon. We will be speaking and hearing from state finance ministers. We're going to be listening to the Union Commerce Minister, Shri Piyush Goyal, the CBIC chairperson. We have every point of view today through the event. Each session has been designed to not only inform, but to also inspire action. So let's explore how reforms can fuel resurgence and how a resurgent India can set benchmarks for the world.
Thank you, Tamanna. Let's begin with the first session of the day, titled GST 2.0, Matters of States. States, as we know, are the pillars of India's federal structure, and their vision is critical in shaping how GST evolves. This session will dive deep into the challenges, the opportunities, and the reforms needed to strengthen both state revenues and national growth. We are honored to have with us a distinguished panel of leaders representing state perspectives. May I call on stage Shri Harpal Singh Cheema, Honorable Finance Minister, Punjab, Shri Radha Krishna Kishore, Honorable Finance Minister, Jharkhand, and Shri Manjinder Singh Sirsa, Minister for Industries, Food and Supplies, Delhi. Joining them today, my colleague Gauri Dwivedi.
Thank you for that, Vedika. And thank you so much for everybody to be joining in on this GST Council meeting. In fact, this summit that is extremely apt, well-timed, comes as we explore and talk about the reform agenda that lies ahead for India and the resilient India that lies ahead in the wake of these major changes that have taken place. We will be joining with, in fact, Mr. Sirsa will join us very shortly. And as we await him, let's quickly tell our viewers that we will try and cover as much ground here and also talk about the state's perspective. जब हम GST की बात करते हैं, GST की बात तभी पूरी हो सकती है जब हम प्रदेशों की बात करें, क्योंकि ये जर्नी दोनों की साथ की मिलके होगी. और GST एक ऐसा विषय है जो जितना आर्थिक है उतना ही राजनीतिक भी है. इस विषय के दो पहलू हैं और इस विषय के और इस ग्रोथ जर्नी के भी दो पहलू हैं. केंद्र सरकार और राज्य सरकार, दो वित्त मंत्री हैं मेरे साथ और सिरसा जी भी हमें जल्दी ज्वाइन करेंगे. पहला सवाल मैं आप लोगों से ये पूछना चाहूँगी, आप सब लोग GST काउंसिल में साथ में थे, वो डिसीजन जो है वो कंसेंसस से हुआ है. कितना बड़ा और कितना इम्पॉर्टेंट रिफॉर्म एजेंडा है जो इस निर्णय से, इस डिसीजन से हुआ है, और आपको क्या लगता है कितना बड़ा रिफॉर्म ये आगे होगा और क्या ग्रोथ ट्रेजेक्ट्री जो है वो देश के लिए इस निर्णय से आगे बढ़ती है?
सबसे पहले मैं NDTV का बहुत बहुत धन्यवाद करता हूं कि आपने ये हमें मंच प्रदान किया. और GST जो अभी रिसेंटली रेट रिडक्शन हुआ है उसका हम सभी लोगों ने, जितने GST के मेंबर हैं, सभी स्टेटों ने वेलकम किया है. हमने भी वेलकम किया है क्योंकि हमारी ये डिमांड थी कि रेट जो है वो 4 स्लैब्स में उसको कम किया जाए और जो इसको थोड़ा सरल किया जाए ताकि आम लोगों को ये समझ आ सके. क्योंकि अभी तक 8 साल की जर्नी में, क्योंकि GST की 8 साल की जर्नी में बहुत सारी कॉम्प्लिकेशन जो हैं वो स्टेटों को, सेंटर को, सभी राज्यों को झेलनी पड़ी, तो उसको सिंप्लीफाई किया जाए. सो इस स्टेप का हमने वेलकम किया, स्वागत किया. पर लेकिन जो हमें लॉस हो रहा है, जो स्टेटों की इकॉनमी को लॉस हो रहा है, तो उसको कैसे कंपनसेट किया जाए, ये हमारी सबसे बड़ी डिमांड जो है सभी, लगभग सभी राज्यों की थी, चाहे वो अपोजिशन स्टेट हो, चाहे वो मैं समझता हूँ BJP के स्टेट हो. क्योंकि लगातार बहुत सारे राज्यों का जो रेवेन्यू लॉस है वो कंटिन्यू अभी तक जारी है. जब 2017 की बात करें, जब से जर्नी स्टार्ट होती है, तो गवर्नमेंट ऑफ इंडिया ने ये कमिटमेंट करा था कि हम GST जिस स्टेट का भी कम होगा तो उसको हम कंपनसेट करेंगे. ये इस थ्योरी के साथ कंपनसेशन सेस जो है वो लगाया गया था इनिशियली 5 ईयर के लिए. अब 5 ईयर खत्म हो गए, 2022 में वो कंपनसेशन सेस जो है वो भी खत्म हो गया. और उसके बाद जो स्टेटों की इकॉनमी का कंटिन्यूसली लॉस हो रहा है, तो उसको कैसे कंपनसेट किया जाए, ये बहुत बड़ा सवाल मैं समझता हूँ देश के लोगों के सामने है.
5 साल का ही टाइम था ना कंपनसेशन का, तो वो 5 साल 2022 में पूरे हुए, तो उसके बाद ठीक है, हम 2025 के इस GST के जो रेट्स घटे हैं और उससे क्या स्टेट्स को इम्पैक्ट होगा उस पर 1 सेकंड में आएंगे. और सिरसा जी से भी पूछेंगे कि क्या जो BJP रूल्ड स्टेट्स हैं, क्या उनका क्या व्यू है कॉम्पनसेशन को लेके और स्टेट्स के रेवेन्यू लॉस को लेके. बट एक चीज़ चीमा जी मैं आपसे ये पूछना चाहूँगी कि 2022 से 2025 का ये जो 3 साल का पीरियड है जिसमें आप कह रहे हैं स्टेट्स को, प्रदेशों को लॉस बना हुआ है, तो वो तो 5 साल की विंडो पूरी हो गई जो GST के लॉ की थी.
देखिए, आपने कंपनसेशन सेक्स जो सेस का एक्ट है उसको पढ़ा होगा. उसमें लिखा जब तक स्टेट स्टेबलाइज नहीं होते, जबकि उनकी जो इकॉनमी है वो स्टेबल नहीं होती स्टेटों की, तब तक ये कंपनसेशन सेस कंटिन्यू रहेगा. इसका मतलब हम डिमांड इसीलिए कर रहे हैं क्योंकि स्टेटों की इकॉनमी स्टेबल नहीं हुई, अभी तक स्टेबल नहीं हुई. 5 साल का जितना कंपनसेशन सेस था वो बिल्कुल, उसमें कोई डाउट नहीं है, वो हमें मिला. हम उसके लिए सेंट्रल गवर्नमेंट का धन्यवाद करते हैं. पर लेकिन अब जो उसके बाद लॉस हो रहा है कंटिन्यू, क्योंकि हम प्री GST की बात करें तो हमारा हमें कलेक्शन कितनी होनी थी, मैं इन टर्म्स ऑफ करोड़ बता दूं आपको. पंजाब की एट द रेट ऑफ CAGR 2000 उस समय हमारी CAGR 13% 11 थी, 13.11 थी, तो उसमें उसके हिसाब से हमारी कलेक्शन 2025 तक होती 2,37 करोड़ 530, यानी 2,37,530 करोड़ रुपए की हमारी कलेक्शन हो जाती इफ हमारा बैट जो है बैट सिस्टम वो कंटिन्यू रहता. तो GST आने के बाद हमारी कलेक्शन कितनी हुई, 1,26,000 करोड़. तो इसका मतलब लगभग अप्रॉक्सीमेटली 1,11,000 का लॉस जो स्टेट को इन 8 साल में हुआ, पंजाब की मैं बात कर रहा हूं, तो इसमें से लगभग 61,000 CR जो है कंपनसेशन के रूप में हमें मिल गया, इसमें कोई दो राय नहीं है। पर लेकिन जो अभी भी हमारा लगभग 50,000 CR का लॉस है, वो हम कहां से पूरा करेंगे, कहां से उस लॉस को अमीर करेंगे, ये बड़ा सवाल है। इसका मतलब स्टेटों की इकॉनमी जो है वो डिस्टेबलाइज हो रही है कंटिन्यूसली, चाहे वो बीजेपी की राज हो चाहे कोई भी राज हो, क्योंकि हम कोऑपरेटिव फेडरल स्ट्रक्चर की बात करते हैं तो उसको प्रोटेक्ट करने की जिम्मेदारी यूनियन गवर्नमेंट की है और स्टेटों की इकॉनमी को भी स्टैब्लिश करने की जो जिम्मेदारी है वो सेंट्रल सरकार की है। हम अपनी तरफ से कंप्लायंस की बात है, जीएसटी की कंप्लायंस पंजाब की देश भर में सबसे आगे है। हम पहले 3 राज्यों में रहते हैं जहां जो हमारी कंप्लायंस सबसे ज़्यादा होती है, तो जहां कंप्लायंस भी हमारी पूरी 100% हो रही है तो फिर भी हमारा कलेक्शन, हमारा नुकसान हो रहा है, हमारा लॉस हो रहा है, तो इसका मतलब अभी भी हमें कहीं ना कहीं सिस्टम में कोई ना कोई खामियां है। अब तक बात करूं 27 टाइम, अब तक जब से जीएसटी आया है सिस्टम 27 टाइम इसमें एग्जम्पशन हो चुका है और 15 टाइम जो है रेट रिडक्शन हो चुका है। जब जीएसटी की जर्नी की बात करते हैं, जीएसटी काउंसिल का आंकड़ा मैं बताता हूं, तो ये भी मेरी डिमांड भी यही थी मैम गौरी जी, काउंसिल भी मेरी डिमांड यही थी कि सभी राज्यों की इकोनॉमी को कहां खड़ी है, जीएसटी से पहले क्या था और जीएसटी के बाद क्या है, ये सामने आंकड़े होने चाहिए। पर लेकिन गवर्नमेंट ऑफ इंडिया ने नहीं दिए, क्योंकि उनकी वहां मेजॉरिटी थी, तो उन्होंने वहां, अब आपके पास भी नहीं होंगे, तो वो क्या है, वो डाटा क्या है कि मान लो झारखंड क्या है, कहाँ खड़ा है, दिल्ली कहाँ खड़ा है,
पूछते हैं, झारखंड दिल्ली दोनों का पूछते
वेस्ट
हैं,
बंगाल कहाँ खड़ा है, उत्तर प्रदेश कहाँ खड़ा है, वो देश के सामने होना चाहिए और उसके बाद रेट रिडक्शन होना चाहिए। हम इसके पक्ष में हैं, हम इसके खिलाफ नहीं है, पर लेकिन स्टेटों की इकोनॉमी को भी ध्यान रखना होगा। स्टेटों की डिफरेंट स्कीम्स हैं, एक अलग अलग स्कीम जो है स्टेटों की चल रही है, उस स्कीमों को भी हमने कंटिन्यू करना है। लोगों की वेलफेयर की स्कीम है।
ऐसा करते हैं, झारखंड और दिल्ली का भी पूछ लेते हैं। और जहां तक हम बात कर रहे हैं आंकड़ों की, आप कह रहे हैं 50,000 करोड़ का नुकसान हुआ पंजाब को। अगर हम ये पुरानी जीएसटी जो अभी तक जो चली उस रिजिम का हम बात करें और अब के जो रेट रिडक्शन है उसकी हम बाद में बात करते हैं, पर एक चीज मैं ये पूछना चाहूंगी और ये मैं किशोर जी से पूछना चाहूंगी, वो ये कि जीएसटी काउंसिल में तो निर्णय सारे मिलके हुए, सारे कंसेंसस के साथ। झारखंड का भी एक व्यू ले लेते हैं इसमें। किशोर जी ये बताइए कि सारे निर्णय जो थे वो तो जीएसटी काउंसिल में एक साथ ही बैठ के हुए, कंसेंसस के साथ हुए।
बिल्कुल।
तो उसके बाद अगर ये मतभेद है जो बाद में निकल के आ रहा है, इसको आप कैसे फिर
और देखिए
एक्सप्लेन करेंगे?
ये मतभेद जो बाद में निकल करके नहीं आ रहा है। जीएसटी काउंसिल की जब बैठक हो रही थी तो भारतीय जनता पार्टी जिन राज्यों में शासन में नहीं है, ऐसे कुल 8 राज्य के लोग हम लोग बैठे थे और हम लोगों ने ये कभी नहीं कहा कि आपके जो प्रपोज़ल आ रहे हैं हम उसका विरोध कर रहे हैं। हम लोगों ने यही कहा मिलकर के, 8 राज्य के फाइनेंस मिनिस्टर और जो भी आए लोग, हम लोगों ने मिलकर उनसे यही कहा कि आपके इस जीएसटी रिफॉर्म्स के बाद जो लॉस होगा स्टेट को, उसकी भरपाई आप करिए, वो कर दीजिए, हम कहाँ इसका विरोध कर रहे हैं। एक चीज़, थोड़ा मैं वक्त ज़रूर लूँगा, लेकिन ये कहना चाहता हूँ कि जीएसटी 2 ये तो प्रमाणित हो गया कि 2017 में आदरणीय राहुल जी जो कह रहे थे कि ये बहुत जल्दीबाजी में लाया जा रहा है, और उन्होंने ये कहा भी था कि इतने बड़े देश, इतनी बड़ी जनसंख्या, जब इसको लागू करना है तो सभी राजनीतिक संगठनों से बात कर लीजिए, आम लोगों से बात कर लीजिए, उसके बाद कोई एक फैसला लीजिए। अब इनको 8 वर्ष के बाद ये बात समझ में आ रही है भारत सरकार को कि नहीं, दर घटाना चाहिए। किस पर दर घटाना चाहिए? पिज़्ज़ा पर, पनीर पर, परोठा पर और ड्राई फ्रूट्स पर दर घटना चाहिए। तो ये बात तो है कि 2017 में जो जीएसटी लागू हुआ था वो प्री मैच्योर डिसीजन था गवर्नमेंट ऑफ इंडिया का। ये सेकंड रिफॉर्म्स जो आया है जीएसटी 2 का, तो इससे ये प्रमाणित हो रहा है।
आप ही से मैं ये पूछूंगी, और जैसा मैंने कहा शुरू में कि जीएसटी जो है विषय जितना आर्थिक है उतना ही राजनीतिक है, आपसे मैं ये पूछूंगी कि तब भी तो निर्णय सारे सर्वसहमति से हुए थे, तब भी तो जो कॉन्स्टिट्यूशनल अमेंडमेंट पास हुआ था सबकी सहमति के साथ ही तो हुआ था, तब से लेके आज तक।
मैं एक बात आपको बता दूं बहुत स्पष्ट तरीके से कर्नाटक के फाइनेंस मिनिस्टर कृष्णा देवेगौड़ा जी जब उन्होंने एकदम ठान लिया कि हम किसी कीमत पर सपोर्ट नहीं करेंगे, तो उठ करके मैं उनके पास गया। हमने कहा कि हम लोगों ने अपनी बात रख दी और ये एक फेडरल सिस्टम है हमारे देश का। हम ये मैसेज नहीं दे सकते हैं कि आप वोट से फैसला करिए। हम लोगों को जो कहना था हम लोगों ने बता दिया। झारखंड के संदर्भ में तो हमने कहा कि ऑटोमोबाइल के क्षेत्र में और सीमेंट के क्षेत्र में इस जीएसटी के निर्धारण से 2000 करोड़ रुपया हमें नुकसान होगा। आप दे दीजिए। अगर आपको लगता हो कि हम राजनीतिक दृष्टिकोण से ये बात कह रहे हैं तो आप केंद्रीय वित्त अधिकारियों की एक टीम भेज करके देख लीजिए कि ये लॉस हो रहा है कि नहीं हो रहा है।
केंद्र की तरफ से कोई आश्वासन, कोई आपको रिस्पांस मिला है जब आप लोगों ने बोला कि लॉस हो रहा है? आपने बोला कि आपको सालाना लॉस 2000 करोड़ का है, पंजाब को सालाना लॉस उन्होंने कहा कि 4000 करोड़ का है। आपको केंद्र की तरफ से क्या इसमें रिस्पांस मिला?
आश्वासन मिला होता तो हम लोग भी खुशी खुशी पंजाब और झारखंड गए होते। लेकिन एक चीज़ जो भारतीय लोकतंत्र का तकाजा है कि ये मैसेज नहीं जाए कि राज्य ने राजनीतिक कारणों से विरोध किया है। हम लोगों ने कहा कि मैडम हम लोग अपनी बात रख चुके हैं, अगर आपको नहीं है तो आप जो निर्धारण कर रहे हैं जीएसटी 2 वो साथ में, देश साथ में आपके, लेकिन ये लॉस तो हो रहा है। अब ये हम जानना चाहते हैं आपके इस कॉन्क्लेव के माध्यम से कि आखिर अगर हम बहिष्कार कर देते, बाहर निकल जाते, तो ये भी एक अच्छा संदेश नहीं जाता। लोग कहते कि सत्ता पक्ष और विपक्ष बटा हुआ है। हम लोगों ने एकदम बहुत साफ तरीके से कहा कि जिस स्टेट को लॉस हो रहा है आप उसकी भरपाई करिए।
तो ये पूछ लेते हैं बीजेपी रूल्ड स्टेट से कि क्या व्यू है रेवेन्यू लॉस को लेके, और क्या सरकार को, केंद्र सरकार को कुछ एक भरपाई करनी चाहिए, एक कॉम्पनसेशन का फॉर्मूला एक लगाना चाहिए अब जो जीएसटी 2.0 आया है? सिरसा जी।
धन्यवाद जी। देखिए, पहले तो जीएसटी अपने आप में इस देश का सबसे बड़ा रिफॉर्म है। ये आपको मानना होगा कि 70 साल के इतिहास में इससे बड़ा रिफॉर्म कोई देश में नहीं आया। एक जब आया तब सर्वसम्मति से आया और सबके लिए नया था, तो केंद्र सरकार ने 5 साल का पीरियड रखा कि अगर आपको कोई लॉसेस होते हैं तो गवर्नमेंट ऑफ इंडिया बेयर करेगी। जीएसटी की खूबी क्या है कि सभी के लिए बराबर है। अब चाहे झारखंड हो, चाहे उत्तर प्रदेश हो, चाहे पंजाब हो या हरियाणा हो। हरियाणा पंजाब कभी एक होते थे, झारखंड और बिहार कभी एक होते थे। अभी क्या अगर कोई ऐसी परिस्थितियां हों को कोई स्टेट अपनी मर्जी से 1% बढ़ा रहा हो, दूसरे को ना बढ़ाने दिया जा रहा हो, तो हम मान सकते हैं कि किसी के साथ ही अन्याय हो रहा है। अभी इन्होंने कहा कि हमने जीएसटी के अंदर अपनी बात को रखा, तो अभी सब लोग सुन रहे हैं, तो आपको बताना चाहिए कि आप क्या चाहते थे कि जीएसटी बढ़े या जीएसटी कम हो। आप चाहते थे कि 5% की दर 5% रहे, आप चाहते थे वो 8% हो, 10% हो। आपको बताना चाहिए कि 18% की दर को आप क्या चाहते थे, 18% रहे, 25% हो, 28% हो। और अगर आप चाहते थे कि 18% की दर ही ना हो, सभी ही 5% से हो, तो फिर आपके स्टेट का 2000 करोड़ का जो आप लॉस बताते हैं, तो आप कैलकुलेट करके आएंगे कि उसकी भरपाई कैसे होगी जब आप उसको कम करना चाहते हैं। देखिए, स्टेट्स को ये कांट बी सिलेक्टिव कि कम करिए और कम करिए, और जो हमारे को पैसा चाहिए वो केंद्र दे। ऐसा दो चीजें नहीं हो सकती। दिल्ली स्टेट
आप कह रहे हैं कि अगर बेनिफिट मिल रहा है और प्रदेश में सारी चीजें सस्ती हो रही हैं, तो प्रदेश सरकारों को फिर उसका फिर कहीं ना कहीं एक मैकेनिज्म निकालना पड़ेगा।
तो मैं तो कह रहा हूं कि अगर आप अभी भी कह रहे हैं कि जो आपने बात रखी थी, तो अभी भी बताना चाहिए कि आप उसको जीएसटी कम करना चाहते थे और ये बढ़ाना चाहते थे। और अगर बढ़ाना चाहते तो लोगों के ऊपर बोझ है, और अगर आप उससे भी और कम करना चाहते थे तो इसका मतलब कि आप अपनी स्टडी करके नहीं आए कि आप अपने स्टेट के रेवेन्यू का कंट्रीब्यूशन कितना होगा केंद्र सरकार के रेवेन्यू के अंदर। जीएसटी एक ऐसी चीज है, आपने कहा रिफॉर्म्स कैसे आते हैं। आपको याद करना चाहता हूं सब लोगों को, जब मोबाइल फोन आया था तब अगर आप सबको याद हो तो 16 रुपये कॉल होती थी, और वो 16 रुपये कॉल केवल शाम को 6 बजे तक होती थी। 32 रुपये कॉल हो जाती थी दिन में। क्या वो 32 रुपये कॉल होनी गलत थी? उस हिसाब से वक्त तब वो भी ठीक थी। आज वो 32 पैसे भी कॉल नहीं रहेगी। जब आप इंटरनेट लेके आए थे तो आपको एक पैक जो मिलता था, जो 5,000 रुपये में मिलता था डेटा जितना, उतना आज आपको 399 रुपये या 299 रुपये मिलता है। ना तब का गलत था ना अब का गलत है। ये रिफॉर्म्स है, इसी को रिफॉर्म्स कहते हैं। इकोनॉमी के अंदर रिफॉर्म्स आएंगे, ये देश जिस तरह से तरक्की में आगे बढ़ता जाएगा उसी तरह के रिफॉर्म्स आते जाएंगे। आज ये कहना, आज देश के अंदर एक कितने अच्छे रिफॉर्म्स क्या आए, आज एग्रीकल्चर के बहुत सारे प्रोडक्ट्स के ऊपर एग्रीकल्चर बेस्ड इकोनॉमी है देश की, उसको 5% में ले आए। हेल्थ सर्विसेज के अंदर 0% जीएसटी कर दी, लाइफ सेविंग ड्रग्स के ऊपर 0% जीएसटी कर दी। ये चीज़ों की भी जरूरत है, टाइम के साथ हो सकता है आज 18% की स्लैब जो है ये और रिफॉर्म्स आने वाले दिनों में आए तो और बेहतर होते जाएं। लेकिन अगर कोई स्टेट अपना राजस्व नहीं बढ़ा पा रहा, उसका केवल एक ही कारण है, दूसरा कोई कारण नहीं है। उत्तर प्रदेश भी 5% और 18% की स्लैब के ऊपर काम करेगा, दिल्ली भी 8, 5 और 18 पे ही काम करेगा। फिर उसका कारण क्या हो सकता है कि कोई स्टेज लॉसेस में है? क्योंकि अपने स्टेट के अंदर इंडस्ट्री को नहीं ला पा रहा, अपने स्टेट के अंदर कारोबार नहीं कर पा रहा, उसकी अपनी लोकल पॉलिसीज ऐसी हैं कि देश उनके वहां से स्टेट छोड़कर दूसरे स्टेट में फैक्ट्री जा रही हैं, उनके लोकल हालात ऐसे हैं कि लोगों का कॉन्फिडेंस लेवल नहीं है। दिस कुड बी द ओनली रीजन कि जब आप लॉसेस में आ जाएंगे। तो मेरा ये कहना है कि हमें आंकलन ये करना चाहिए, हम बेटर रिसोर्सेज प्रोवाइड करें, हम बेटर कोऑर्डिनेशन लोगों के लिए प्रोवाइड करें, हम लालच विताशाही खत्म करें, हम स्टेबल गवर्नमेंट रखें, हम अपनी पॉलिसीज को स्टेबल रखें ताकि ज़्यादा से ज़्यादा लोग इन्वेस्ट करेंगे, आपकी जीएसटी बराबर हो जाएगी। ये केंद्र सरकार के हाथ में नहीं है कि किसी स्टेट की जीएसटी रेवेन्यू को बढ़ाया जा सके या कम किया जा सकते। ये लोकल गवर्नमेंट ही अपनी जीएसटी को बढ़ा सकती है, अच्छे कारोबार करके, अच्छे रेवेन्यूज के एवेन्यूज खोलकर, और वही कम करती है तो जब स्टेट स्टेबल ही रहता है।
आप ये कह रहे हैं कि राज्य सरकारों को इसे एक मौके की तौर पे देखना चाहिए कि वो कितने रिफॉर्म्स इस वक्त इस मौके पर खुद अपने एंड पे ला सकते हैं।
सामने ही है ना, हरियाणा भी पंजाब से निकल कर गया है। अगर हरियाणा सेल्फ सफिशिएंट हो रहा है, इट मींस कि कोई कमी है जो हमें ढूंढने की जरूरत है, बजाय कि हम ठीकरा दूसरों पे जाकर फोड़ें। हम ये ढूंढें कि कौन सी ऐसी कमी है जिसके कारण मेरे स्टेट के अंदर इंडस्ट्री जा रही है, मेरे स्टेट में इंडस्ट्री कम हो गई है, मेरे स्टेट में बिजनेस कम हुआ है, तो वो ढूंढना पड़ेगा कारण। बस वही कारण है जिसके कारण हमें दिक्कत आ रही है, और इन चीजों को हमें ठीक करना होगा। लेकिन अगर पॉलिटिकली एक दूसरे पर फोड़ना है तो हम ना स्टेट का भला कर पाएंगे ना लोगों का भला कर पाएंगे।
बिल्कुल चीमा जी, ये भी तो एक सच है कि अगर हम ऋण की बात करें, डेट की बात करें, तो पंजाब जो है इस देश में सबसे ज्यादा उसमें डेट है। 46% जो है वो डेट टू जीडीपी का रेशो है, स्टेट जीडीपी का रेशो है। तो ये भी एक सच्चाई है कि कहीं ना कहीं राज्य सरकारों को भी इस विषय पे काम करना पड़ेगा, कैसे वो अपने रेवेन्यूज आगे बढ़ा सके।
गौरी जी, आप डेट और जीएसटी को एक साथ नहीं देख सकते। पंजाब एक एग्रीकल्चर स्टेट है, ये पूरा देश जानता है। देश की फूड बाउल में सबसे ज़्यादा कंट्रीब्यूशन किस स्टेट की है? वो पंजाब स्टेट की है। पंजाब में एक परचेज टैक्स लगा हुआ था, परचेज टैक्स जो है वो सब्स्यूम हुआ जीएसटी में। मैं अकेले एक टैक्स की बात करता हूँ, एक टैक्स सिस्टम की बात करता हूँ, उसमें से एनुअली हमारा कितना लॉस हुआ है? 4,000 करोड़ रुपया, 4,000 करोड़ रुपया हमारा एनुअली जो है परचेज टैक्स में लॉस हुआ, क्योंकि पंजाब एक एग्रीकल्चर स्टेट है। पंजाब का लगभग 550 किलोमीटर का एक लंबा बॉर्डर जो है वो पाकिस्तान से लगता है। अभी रिसेंटली वहाँ पे आपको देश को पता है सबसे ज़्यादा जब पाकिस्तान के साथ टेंशन पैदा हुई तो पंजाब आगे खड़ा। तो ये बात में हमें ध्यान में रखनी चाहिए, ये नहीं कि किस स्टेट की इकॉनमी कैसे चलती है। जहाँ प्रोडक्शन स्टेट है, जहाँ प्रोडक्शन स्टेट है, कर्नाटक प्रोडक्शन स्टेट है, पंजाब है प्रोडक्शन स्टेट है, जहाँ पे प्रोडक्शन होती है, जहाँ पे ज़्यादा इंडस्ट्री है, उनका जीएसटी कम हो रहा है। जहाँ पे ज़्यादा कंजम्पशन है, क्योंकि जीएसटी जो है वो कंजम्पशन बेस्ड टैक्स है, डेस्टिनेशन बेस्ड टैक्स है। डेस्टिनेशन कहाँ है? डेस्टिनेशन वहाँ है जहाँ पॉपुलेशन ज़्यादा है। डेस्टिनेशन कहाँ, कंजम्पशन कहाँ है? जहाँ पॉपुलेशन ज़्यादा है। इसका मतलब क्या है कि जहाँ प्रोडक्शन होती है उन राज्यों का जो जीएसटी वो कम हो रहा है, जहाँ कंजम्पशन हो रही है उन राज्यों का जीएसटी बढ़ रहा है। बेसिक थ्योरी पे हमें उसको चेंज करना होगा, उसमें हमें बड़े बदलाव की ओर बढ़ना होगा। क्योंकि मैं पहले बोल चुका हूँ कि हमने 27 टाइम कंजम्पशन दे चुके हैं 8 साल में। 8 साल में 27 बार जो है कंजम्पशन मिल चुकी है, और 15 बार इससे पहले, ये 16 टाइम है, 15 टाइम पहले रेट रिडक्शन हो चुका है डिफरेंट स्लैब्स में, तो क्यों नहीं अब तक स्टेटों की इकॉनमी स्टेबल हो पाई? मैं पंजाब की बात नहीं करता, आप हरियाणा की देख लीजिए, क्यों नहीं गवर्नमेंट ऑफ इंडिया ने हमारे सामने डाटा रखा कि हरियाणा का ये है, उत्तर प्रदेश का ये है, झारखंड का ये है, महाराष्ट्र का ये है, अपना कर्नाटका का ये है, दूसरे राज्यों का डाटा हमारे पास रखते ना कि प्री जीएसटी हमने बिल्कुल जीएसटी काउंसिल में हमने ये डिमांड रखी थी कि चर्चा करने से पहले 2017 के पहले क्या व्यू था स्टेटों का, उनकी इकोनॉमी कहां खड़ी थी, क्या वो ग्रो कर रहे थे या उनकी इकोनॉमी डिक्लाइन हो रही थी, उसका डाटा जो है वो प्रेजेंट कीजिए। और 2017 से लेकर 2025 तक कहां को आगे बढ़ पाए जब पीछे हो गए, तो ये उसके आने के बाद ही हम किसी कंक्लूजन पे पहुंचते ना कि जीएसटी में आने के बाद हम प्रोग्रेस कर रहे हैं या हमारा स्टेट कर रहा है या हमारा देश कर रहा है। अब बात सिंपल सी है कि आप बता दीजिए मेरे को 2017 में बासमती का रेट क्या था 1 किलो का? 1 किलो का क्या था? 60 से लेके 80%, 60 रुपए या 80 रुपए। अब कितना हो गया? 120 रुपए 1 केजी का, 1 केजी का। तो रेट आम लोगों को क्या फर्क पड़ा? जो आम लोग हैं देश के, जो आम जनता है, उसको जीएसटी का रेट रिडक्शन का फायदा हुआ या नहीं हुआ? सबसे बड़ी बात तो यह है, अब भी फायदा होगा या नहीं होगा? रेट तो मैं पिछले 8 साल की बात कर रहा हूं, 8 साल में 40 से लेके 50% तक
अब जाके अगर रेट कम होंगे, अब रेट कम होंगे तभी तो फायदा होगा। अब रेट कम होंगे तभी तो फायदा होगा।
मैं वही बात आपके सामने रखना चाहता हूं कि क्या आम जनता को फायदा होगा या नहीं होगा।
तो ये किशोर जी से भी पूछ लेते हैं।
पिछले 8 सालों में तो मेरे को फायदा नहीं दिखा कि आने वाले समय में फायदा होगा, हम ऐसी अपेक्षा कर सकते हैं।
बाकी दोनों मंत्रियों से भी पूछ लेते हैं। और अब मैंने बाद में आपसे फिर से ये पूछा कि क्या आपने इतनी गर्मजोशी से जीएसटी काउंसिल में ये सारी बातें बोली जो आप यहाँ कह रहे हैं, क्योंकि वहां तो सर्वसहमति से सारे निर्णय हुए और फिर ये लग रहा है कि बाद में आके सारी बातें की जा रही है।
अपनी बात बिल्कुल वहां जीएसटी काउंसिल में हमने भी रखी, हमारे
किशोर जी से पूछ लेती हूँ मैं, वो ये मैं ये कहना चाह रही हूँ, आखिरी सवाल है मेरा आप दोनों से।
आपके मन में जो शंका है
जी, मेरे मन में कोई शंका नहीं है, मैं तो पूछ रही हूँ।
नहीं, आपने कहा कि कहीं ऐसा तो नहीं कि वहाँ आपने विरोध नहीं किया और बाहर मौका मिला है तो आप बाहर विरोध कर रहे हैं। जी नहीं, 11 बजे से जो मीटिंग चली है वो रात में 8 बजे तक मीटिंग चली है।
अच्छा,
हम लोगों ने तार्किक दृष्टिकोण से अपनी बातों को रखा है, अपने पक्ष को रखा है, अपने राज्य की समस्याओं से
आपने पहले ये बोला कि मिलके हम लोगों ने इसलिए निर्णय लिया साथ में आने का क्योंकि फेडरलिज्म में भी ये होना चाहिए कि सब लोग एक साथ हैं, जीएसटी के निर्णय पे सब लोग एक साथ हैं। तो जब सब एक साथ हैं तो फिर आगे की बात होनी चाहिए कि किस तरह से ये मैं आपसे एक सवाल पूछना चाहती हूँ, वो ये कि अब राज्यों के स्तर पे ये कैसे इंश्योर किया जाएगा कि जो प्राइस कम हो गई है किसी एक गुड्स की, वो कैसे एंड कंज्यूमर के लिए वाकई सस्ती हो जाए, ये कैसे राज्य सरकारें इंश्योर करेंगी?
पहले तो मैं अपने प्रिय मित्र के बातों का जवाब दे दूं। इन्होंने कहा कि सारी बातें निर्भर केंद्र पर होंगी, राज्यों को भी अपने पैरों पर खड़ा होना होगा, अपने राजस्व को बढ़ाना होगा। अगर आप ये मानते हैं कि सभी राज्य अपने में सक्षम थे तो 2017 में जीएसटी लागू करने के साथ ही यह निर्णय आपका था कि जो मैन्युफैक्चरिंग स्टेट है उनको हम 5 वर्षों तक के लिए कंपनसेशन देंगे। आप तो मानते थे कि ऐसे भी राज्य हैं इस देश में जिनको इस जीएसटी से लॉस होने वाला है। ये जीएसटी 2 लागू करने के पहले आपको केंद्र को इतना देख लेना चाहिए था कि क्या 5 वर्ष जो कंपनसेशन मिला उन राज्यों को जो मैन्युफैक्चरिंग स्टेट है उन वो कहाँ इस्टेब्लिश कर रहे हैं।
ऐसे कितना कंपनसेशन देना चाहिए? 5 साल और 5 साल और 5 साल और हमें कितना टाइम तक ये रोड मैप बनाना चाहिए जब तक राज्य अपने पैरों पे ना?
मैंने वित्त मंत्री जी को कहा है उसी बैठक में, जीएसटी काउंसिल की बैठक में, कि आप तब तक दीजिए,
तब तक देते रहिए जब तक वो
पहले मेरी बात सुन लीजिए। आप तब तक दीजिए जब तक कि आप आकलन न कर लें, आपके वित्तीय अधिकारी इस बात की समीक्षा न कर लें कि अब झारखंड को, अब हिमाचल को पैसे की जरूरत नहीं है, आर्थिक सहयोग की जरूरत नहीं। अब चाहे वो 10 साल लगे या 15
साल हो, चाहे 20 साल हो,
हाँ,
सरकारें आए जाएं,
बिल्कुल।
फाइनेंस कमीशन 16 के बाद 17 आए,
बिल्कुल। इसलिए मैं कह रहा हूँ इस बात को थोड़ा सा समय हम और लेते हैं। आप बतला रहे हैं कि अभी दर हम लोगों ने कम कर दिया। ये 7-8 वर्षों में 1,24,000 जीएसटी जो प्राप्त किया केंद्र, तो आज जो दर कम कर रहे हैं, ये 7-8 वर्षों में वही उपभोक्ताओं से जो आप पैसा ले रहे थे, ये बेईमानी था कि नहीं था? ये गलत
ऐसा करते सिरसा जी से ये सवाल पूछते हैं, ये
मैंने
उनसे
तो आपको
बोलते हैं।
बताया कि
पर
कांग्रेस
एक
की
मैं
सरकार
सवाल और
में-
ऐड करूंगी आपसे,
सुनिए,
क्योंकि
इनके मैं एक
मेरी बात
जवाब
समाप्त-
एक सवाल
कि
आपसे
जो
ऐड कर
32
देते हैं,
रुपए
फिर हम
कॉल
wrap up
मिनट
करेंगे इस
देते
चर्चा
रहे,
को। बहुत
जो
ग्रुप
32
है।
रुपए मिनट देते रहे, क्या उनसे बेईमानी हुई? और हुई तो उसमें पार्टनर रहे, ये तो इन्हीं को उसी का जवाब देना चाहिए। मंत्री भी रहे हैं सरकारों में, तो उसी से शुरुआत कर देनी चाहिए। और अगर हुई तो उसको पैसे को लुटाने का ये क्या प्रोसेस अडॉप्ट करेंगे? देखिए, पॉलिटिकल स्टेटमेंट्स अलग होती हैं, पॉलिटिकल मंचों के ऊपर पॉलिटिकल स्टेटमेंट्स ठीक लगती हैं। जैसे आपने कहा कि जब जीएसटी काउंसिल की बैठक होती है, उसके अंदर सर्वसम्मति के अंदर सब लोग आते हैं, क्योंकि अंदर जब वहाँ पे डिटेल डिस्कशन होती है, तब आंकड़ों के साथ होती है, तब आपकी इंडस्ट्री ग्रोथ क्या हो रही है, तब आप क्या आपकी कंजम्पशन कितनी, वो सबके साथ ग्रोथ, तब आप ये चैलेंज नहीं कर सकते। लेकिन आज टीवी चैनल पर हम आके कर सकते हैं।
जी, क्योंकि हम बात कर रहे हैं, ये जैसा मैंने कहा, ये चर्चा के 2 रूप हैं, इसके आर्थिक और राजनीतिक दोनों रूप हैं। एक सवाल मैं आपसे इसलिए पूछूंगी कि ऑपोजिशन के सारे नेताओं ने ये बोला कि इसकी टाइमिंग क्या, हम तो बहुत समय से कह रहे थे कि रेट कम होने चाहिए, हम 17 से कह रहे थे जब से शुरुआत हुई कि रेट कम होने चाहिए, तो अभी ही क्यों हुआ, इसकी टाइमिंग क्यों इस वक्त ही हुई, इसका जवाब दीजिए।
देखिए, जीएसटी के दायरे में जैसे जैसे लोग बढ़ते जा रहे हैं, जैसे जैसे कारोबार बढ़ते जा रहे हैं, और उसी तरीके से उसकी अमाउंट बढ़ता जा रहा है, उसकी स्लैब्स को नीचे आएंगे स्वाभाविक तौर पर। अभी जब देश के अंदर 1% नंबर ऑफ परसेंटेज आज जीएसटी के साथ कनेक्टेड है, और हो सकता है आने वाले दिनों में इसकी ग्रोथ रेट जैसे बढ़ेगी और इसके साथ जीएसटी के उपयोगिता बढ़ते जाएंगे और कम होते जाएंगे। ये तो एक रिफॉर्म्स हैं जो ऑन गोइंग हैं। मैंने आगे शुरू करते हुए फिर से कहता हूं, जब 32 रुपये कॉल फोन करते थे तभी यही मोबाइल फोन था, और आज वो कॉल करते करते 10 पैसे पे आ गई है, तब भी वही फोन है। तो चीजें तो बदलेंगी, जैसे जैसे रिफॉर्म्स आएंगे, इसी को रिफॉर्म्स कहते हैं। देश कहां से चला था, आज आप देखिए, आप आज से 10 साल पहले अगर आप ट्रैवल करते थे तो जो एयर फेयर की अगर आप कैलकुलेशन करें तो उससे 20 गुना होना चाहिए, लेकिन नहीं है, वहीं पर चलता आ रहा है, क्योंकि हर चीज एक दूसरे से कनेक्टेड है। जैसी उसकी ग्रोथ है, ग्रोथ के साथ हर चीज कनेक्टेड है, और इसी तरह हमारे देश की ग्रोथ है, ग्रोथ की स्पीड इतनी ज्यादा तेज है, उस ग्रोथ के साथ साथ चीजें बदलती जा रही हैं। अगर हमें देश की ग्रोथ ना हुई तो अच्छी बात नहीं है। मुझे लगता है हम सबको इस बात की बधाई देनी चाहिए कि शायद जो कल्पना नहीं की होगी इतनी जल्दी हम रिकवर कर पाएंगे, हमारा ग्रोथ रेट इतना बढ़ रहा है, उससे देश के अंदर एक जल्दी तरक्की आ रही है और हमारे स्लैब्स कम हो रहे हैं, लोगों को सस्ती चीजें मिल रही हैं, तो मिलनी चाहिए और सस्ती मिलनी चाहिए।
जी, चर्चा को यहीं विराम देते हैं। इस चर्चा के बहुत प्रारूप हैं और हम ये चर्चा आगे भी करेंगे।
प्लीज विराम मत दीजिए।
बहुत प्रश्न हम भी
थोड़ा समय दीजिए, हम लोग बहुत दूर से आए और बहुत उम्मीद से आए। सरकार से तो उम्मीद नहीं है, केंद्र सरकार से, लेकिन
क्यों आप तो वहां बैठे हुए थे, आपने वहां पे बोला है, आप कह रहे हैं इतनी गर्मजोशी से तब भी बोला है।
एनडीटीवी से बहुत उम्मीद है, कम से कम ये बातें पूरे देश की जनता तक जाएगी, पहुंचेगी ये बात। क्या बात करते हैं? आपने कहा मैडम 1 मिनट, आपने कहा, हमारे मित्र ने कहा कि राज्य को अपने पैरों पर खड़ा होना चाहिए, कॉन्स्टिट्यूशनल क्या प्रोविजन है, केंद्र और राज्य में
मेरी बात को 2 मिनट, मैंने ये नहीं कहा,
केंद्र और राज्य।
मंत्री जी मैंने कहा,
आप जब बोल रहे थे तो मैं नहीं बोल रहा था,
मैंने बोला नहीं है।
मान्यवर मुझको कह लेने दीजिए, उसके बाद आप बोलिए। आपको अपने पैरों पर खड़ा होना चाहिए था, अपनी इकोनॉमी को स्ट्रॉन्ग करनी चाहिए थी। तो क्या ये जो संवैधानिक व्यवस्था है कि केंद्र राज्यों से जो कर लेगा और उस हिस्सेदारी जो राज्यों को देगा, ये व्यवस्था आप समाप्त करना चाहते हैं क्या? केंद्र सिर्फ अपने आप में है,
मेरे को बोलने को मैंने कहा ही नहीं
रहेगा क्या?
मैंने कहा कि बाकी राज्य जो हैं वो आपके बराबर ही है, अगर ग्रोथ रेट बाकियों की बढ़ रही है हमें भी बढ़ानी चाहिए।
बात मैं कर रहा हूं,
इसमें कुछ गलत नहीं है।
झारखंड की बात मैं कर रहा हूं। आप करों को कम करके ये बताना चाह रहे हैं कि हम सुधार कर रहे हैं। एक तरफ तो 8 बरस उसी जनता से 1 करोड़
तो बढ़ाने चाहिए, करिए, कम करने चाहिए, कम से कम ये तो क्लैरिटी आ जाए।
बोल लेने दीजिए,
नहीं, मैं आखिरी मान गया
जब आप बोलते थे,
आपने मेरा नाम लेके कहा तब मैंने बोला,
हम एकदम चुप रहते,
आपने मेरा नाम लेके बोला, मैं तब बोलने को मजबूर हुआ।
मैडम की तरफ मैं इशारा करता हूं कि मुझको बोलने का अवसर चाहिए, मैं बोलना
चाहता हूं। ये चर्चा जो है हम मंच के बाहर भी कंटिन्यू करेंगे, क्योंकि बहुत प्रश्न हैं अभी भी, जो अभी मैं उम्मीद करती हूं, और यही इस पूरी कॉन्क्लेव का उद्देश्य है कि जितने हमने प्रश्न उठाए हैं, इन प्रश्नों का ही उत्तर मिले।
मैं आखिरी 2 पंक्ति कह रहा हूं। देखिए, केंद्र सरकार, वर्तमान केंद्र सरकार की एकदम मानसिकता बन गई है कि जिस स्टेट में उनकी सरकार नहीं है उनके साथ सौतेला व्यवहार किया जाए। झारखंड को 1,40,000 करोड़ रुपया कोयला के ऊपर बकाया है, ये पैसा नहीं मिल रहा है। अनुदान की राशि झारखंड को सही समय पर नहीं मिलती है। केंद्रीय करों में झारखंड की जो हिस्सेदारी है वो सही समय पर हमें नहीं मिलती है। और आप बात कर रहे हैं कि साहब केंद्र और राज्य केंद्र जो निर्णय ले रहा है राज्य आपके साथ खड़ा हो जाए। पर वहाँ झारखंड की स्थिति अलग है। हमारे यहाँ जो गरीबी रेखा से नीचे रहने वाले लोग हैं मैडम, वो महुआ खाती हैं, वो मकई का घाटा खाती हैं, वो पिज्जा बर्गर और पनीर परोठा नहीं खाती है। उसका क्या होगा?
मैं मंत्री जी का जवाब दूंगा तो फिर पीड़ा हो जाएगी। अब आपके अगर आपके आईएएस के घरों से 100-100 करोड़ रुपए मिलेगा, अगर एक आईएएस के घर से 100-100 करोड़ मिलेगा तो लोग बेचारे मजबूरी हो जाएंगे मुआ खाने के लिए। बताइए मैं ठीक कह रहा हूँ गलत कह रहा हूँ? तो आपको देखना चाहिए कि एक मंत्री एक घर से 100-100 करोड़ रुपए आईएएस के घर से ना मिले, पॉलिटिकल करप्शन खत्म हो जाए तो ये सारी ठीक चीज हो सकती है। ये आपको उसके ऊपर रोक लगानी होगी। मैं तो वहां जाकर नहीं लगा सकता, ना ही केंद्र सरकार लगा सकती है। तो मेरा ये जरूर आपसे आग्रह है।
इसी पर चर्चा कर लीजिए, इसी पर चर्चा हो जाए कि कौन लोग बैंकों से हजारों करोड़ रुपया लेकर के बाहर भाग गए।
देखिए हम जीएसटी से कौन सी चर्चा में चले गए हैं?
इन्होंने कहा, इन्होंने करप्शन की बात,
जीएसटी की चर्चा पे एक बात कहना चाहता हूं कि जो
करप्शन की बात
नहीं चर्चा चाहिए और ये पूछना चाहिए कि लोन देने
इस चर्चा को यही विराम देते हैं। इस चर्चा को यही विराम देते हैं। प्रश्न बहुत है। अभी तो मैंने ये भी नहीं पूछा कि क्या इतनी गर्मजोशी से, क्या इतनी बहस वाकई जीएसटी काउंसिल में हुई, या ये सारी ऊर्जा आपने बाहर के लिए समेट रखी थी?
पूरा आदर्श,
हमने पूरा वहां पे अपनी बात रखी।
आदर्श और गरिमा
इस चर्चा को विराम देते हैं। ये सारे प्रश्नों के उत्तर हमें शाम तक मिलेंगे। शाम तक मिलेंगे। निर्मला सीतारमण जी हमारे साथ जुड़ेंगी। And it is expected that these questions that are being raised by the states in terms of their finances, the roadmap that lies ahead, and questions with regard to devolution of tax revenues between the center and state could be some of those part of those answers that the finance minister will give when she shares her roadmap for what lies ahead in India's reform agenda. Thank you so much for being part of this. Thank you so much.
हम नेक्स्ट जनरेशन जीएसटी रिफॉर्म लेकर के आ रहे हैं ये दिवाली के अंदर।
I think it will have a very positive impact on the GDP.
A landmark reform, a new economic chapter, a nation rising together. NDTV Profit presents the GST Conclave with Finance Minister Nirmala Sitharaman, policymakers and industry leaders reflecting on GST 2.0 and charting the road ahead. NDTV Profit GST Conclave, reforms for a resurgent India. Only on NDTV Profit.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that.
Co-powered by National Stock Exchange. Innovation partner Veka, India's largest selling UPVC window. Technology partner Tally Prime, India's favorite business software. Brought to you by Apar Suraksha, जिस पे देश करे भरोसा.
And it's very rarely that you get a brand name that in itself is evocative of what the market sentiment ought to be. I mean, I don't think there's anybody in the market who's here for losses. I think we're all here for profit, right? So fundamentally, what we said is that let's understand what the word profit means. It's always been, I mean, if you really look at it, it's a dirty word, right? It's what people used to say, that for the longest time, profit has always been like a dirty word. It has been always seen as the privilege of the few. But if we have an aspiration to be a 5 trillion sort of an economy, then can profit really remain exclusive, right? if you really look at it, I mean, I'd like to quote a bit of Arthashastra, right? And it's very important. Whenever I've been in doubt, I've always gone back to the scriptures, right? They always say that profit is essential. I mean, there is nothing, we always say, dharma, artha, kama, moksha. So, profit is as important as the dharma is, right? And it says wealth is to be pursued, but in a way that it sustains the society and the state. So there's this beautiful phrase which is all about mansa, vacha, karmana. And this was at the center of everything. I know if three of these things really come together, then I think profit is not, ceases to be that slightly exclusive, dirty word. Right? This triad basically means thought, word and deed. In the dharmic framework, mansa is about the intention behind the wealth creation, the transparency, which is vacha, the honesty in contracts, and then of course karmana, which is the ethical conduct. Where, so when three of these things come together, this becomes the essence of where profit is, right? So profit is achieved in alignment with these three, and that is supposed to be shuddha, right? Even in our civilization thought, profit was never just a number, right? The Arthashastra showed us that the profit must always be aligned with the mansa, vacha, karmana, right? And in this pursuit, when, with this clarity, when we move ahead, profit becomes more than a private gain. It becomes an opportunity for all to get. It's the same shot that we all get to take, and this is the true democratization of profit. And I think we're living in the age of democratization, right? I mean, I think the ministers here really spoke about the fact that reforms are going to be continuous. It is always going to be, there's always, nothing is inevitable but change, right? Things will keep on changing, and I think, democratization is going to be at the key of everything. So Bharat and profit in the age of global turmoil. I mean, we are living through an incredibly interesting time, right? It's better, it's more exciting than most of the thrillers that we see. But if you really look at it, at the ground level, today a shopkeeper in Jaipur can sell nationwide on e-commerce. A young investor can buy shares even for $100. A woman entrepreneur in Kochi can scale a startup just through the understanding of the market, right? In the last 10 years, if you see, our democracy has also been sort of democratized, right? Nowhere is it clearer than in the equity partnership, participation that you see. So in 2025, if you really look at the numbers, 2.4 crore demat accounts were opened. And strikingly contrasting in 2025, that trickle has become a flood. 19.2 crore accounts, 17 crore new investors have been added in a whole decade, right? In FY25 alone, it's like record 4.1 crore accounts in a single year. That's more than the population of most of the, many countries in the world. Every month, nearly 4 million Indians join the market, and every minute, 100 new accounts are opened. So, and this is where the whole old guard is going. And I was really amazed to know that 75% of these accounts are being opened by people under the age of 30, right? And this is a generation that would rather sort of own than really observe. It's no longer, profit is no longer the privilege of a few people who played the market in the olden time. It's today everybody, whether you're sitting in your living room, whether you're really sitting as an entrepreneur, whether you're a housewife, right? Every bit of that matters, right? Now, 25% of these investors are women now. So 1 in 4 women are, investors are women. Brilliant, right? Even, this was quite interesting. I saw a very interesting research which says that 84% of homemakers, and they are not a part of the workforce, homemakers are involved in investment decision, right? So now, does that mean that, does this change the landscape of how a news channel must sort of speak to the audience? It's going to be speaking to it's not going to speak to the few, it's going to speak to the new, right? So this was at the crux of what we wanted to build when we started looking at NDTV Profit. Even GST has been simplified, right? It's broke down the straight barriers and brought millions of small players into the formal foray. So everything is sort of structuring itself to a democratized infrastructure. And today, everyone is in the system and everyone has a chance to benefit. And today, this is where the whole take has been that from Dalal Street to every street, democracy is now demat, right? And they are all here for one thing, profit, right? Profit is no longer the privilege of the few. It is the possibility of the many. NDTV Profit is here to make that a probability and possibility real, right? And this has been at the crux of the communication that we want to put out as well. And I think there can't be more exciting time. You know, when you're really reinventing a business news channel, this is going to be the channel that translates a lot of policies. It's going to include new audiences. This is going to be a very exciting time for us, and we are very excited to be a part of this journey. This is where, you know, every business, I mean, I'm sure the agenda is to sort of step up and really bridge the knowledge gaps, highlight the opportunities a lot more, and make profit a shared possibility. So not just for a few, but also for the new. This is where we are. I'm going to play a short video which will leave you with the new line, the slogan that we have all arrived at, which with much more unanimous consensus than what I saw in the last one. But very excited to sort of showcase this. Here we go. So that's NDTV Profit 2.0 for you, right? So amazing. Thank you very much. Very exciting journey. Thank you, Rahul, Gaurav, Tamanna, and team. Really amazed and really a lot of congratulations on this new journey.
I'll need you to stay on stage. Well, that's a wonderful and exciting proposition, Rajan. Thank you. Please stay with us on stage. I'll also request Tamanna Inamdar, NDTV Profit Managing Editor, and Neeraj Shah, NDTV Profit Markets Editor, to now join us on stage.
Raj, first of all, thank you. Thank you to Raj and Creative Land Asia. This was just amazing. The ability to distill our conversations and our editorial thought into this is just brilliant, the way you've put it together. And I think it truly talks about how the will and the aspiration to grow is so democratized. It's not in the hands of a few. You'll be surprised how many of our viewers, and we're an English channel, are outside the top 6 or top 8 cities. What was the thought that came to your mind when you saw the product, heard the brief, and the concept of a business channel?
So, in fact, when we started the journey, we always look at the truth about the society and where it is, the truth about the brand, and when there's a sweet spot, then we have a great idea. So the product and the brand spoke to us, right? And there is a renewed energy, right? I can also see the kind of shows that you're putting together. And there are segments, there are things for entrepreneurs. I could see the way you're also moving into a lot of bite-sized content as well. There is a certain connectedness, which is, today you have to be seamless from the TV to the web, all of those sort of things. And then when we look at the aspiration of the society, I mean, today more and more, in most of the boardrooms that I sort of venture into, there's always a conversation of the young India. Right, and I was astonished to see that. I mean, when I looked at the numbers, at 75% of the new guys are all under 30. That's incredible. And right, today, a lot of the online platforms have made it so easy for a lot of these people to come in. So there needs to be a new language. And when I saw that intent in the meetings that we had, when I saw that there was this serious intent, I mean, this is finally the product is in the editorial, right? And it's one thing for us to sit down and say that, okay, this is what the image has to be as far as the marketing is concerned, but this was a beautiful sweet spot where we saw that the product aligned beautifully well with the sentiment of the society, and it's just onwards and upwards.
Yeah, I mean, and I'm guessing when you saw the channel as well, in a conversation that you had told us, that seeing the product as it comes out makes you believe that we are not talking down to any investor, right? We're making the guests talk to the Aam Aadmi as they stand, for everybody to be able to profit from it.
Absolutely with you. In fact, this is a statement that I used in one of the meetings, and I know it's politically incorrect to say that, but I've always felt that business channels have become like one of those silent thing that runs with tickers everywhere, right? And that's what I'm saying. It's all about the intent. Finally, at the end of the day, the fact that you're saying that we don't want to talk down, right? What we want to do is we want to have a conversation, and that is intent that I see, and that malleability today is very, very important, right? And I know that. I mean, and I wanted to actually turn the table and also sort of ask you a question. What is your view on, I mean, today a lot of people get a lot of their views out of the finfluencers and and I've always wanted to ask this, and sorry I'm putting you on the spot right on the stage, because this is always a debate, right? Even in my head. So what is your view as somebody who's sort of,
I'm glad you asked that, Raj, because we keep hearing this about news, and we keep hearing this about business news as well. And anyone you talk to, they say कि हम तो TV नहीं देखते हैं, हम news नहीं देखते हैं. But somehow everyone knows what's happening on the news. So clearly they're watching it somewhere, maybe not on a box, but on a website, on a YouTube stream, on a platform. The thing about finfluencers are they have done a great job in part in bringing information to people in a simple language. But can you trust what they are saying? When we're talking about this young audience who has to have the right information, they need to be protected. When we put something out, it is with a 10 feet thick wall of guardrails. We're journalists, there's credibility, there's regulatory action, there's corporate governance. We think about everything. I mean, you go to a finfluencer and look at the kind of crackdown that Sebi has had, regulators have had. So my point is that we are here to provide a safe, smart, and simple space for you to grow. And yes, we want for you to profit.
It's amazing, and I mean, just a really interesting program idea right now. Bring in a few influencers and debate this with them. It'll be brilliant, right? Because I agree, and I really like the fact that there are a lot of, because this is our path of least resistance, right? And they are there. It'll be quite interesting to really sort of put them on the spot, just like you do with.
No, not to run down anyone or what anyone is doing, but we are here. NDTV Profit is for your profit, so we are here in any form that you need.
Yeah, and just that last point that I'll add here, I mean, what we are trying to effectively do out here is responsible journalism, talking to the audience who wants to hear us, and we're thinking of the audience and what every minute of the audience spending on a television channel or across our social media handles, what do they get out of it? Are we doing work enough for that? That is the question in the newsroom every single day.
No, really incredible. In fact, one of the other things that I wanted to ask you was that, 84% of non-working force in this country are participating in financial discussions. How are you gearing up to talk to that audience as well? Because they're a very interesting bunch of people out there. I mean, the homemaker at home, how do we make that more relevant?
No, we are speaking to everyone. We are speaking to everyone, whether you understand what EBITDA is or not. You don't have to. You don't have to know what ARPO is, but we'll still tell you what a telecom stock will do. You don't need to know what is RBOP. We will tell you what a hospital stock will do. That is what we are here for, and hopefully we will get all of more and more viewers to join in on our journey. We have to wrap it up. I have that in my ear, but thank you again, Raj. This has just been a brilliant distilling of what we stand for.
Thank you very much. I love that. No jargons.
No jargons.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI.
Co-powered by National Stock Exchange. Innovation partner, Veka, India's largest selling UPVC window. Technology partner, Tally Prime, India's favorite business software. Brought to you by Apar Suraksha, जिस पे देश करे भरोसा.
No better guest to do this panel than Shri Sanjay Kumar Agarwal. And Mr. Agarwal, thank you so much for taking the time out and being with us here. Well, the question that comes to mind is, ye dil mange more, and what more can come in? But you would have heard the first panel out here, and obviously there is a lot of conversation, debate, arguments, and discussions around whether this is the best form of ushering in GST 2.0, or are there some chinks in the armor that can be resolved or conversed upon? What are your thoughts here? Because you would have received a lot of feedback from all parties concerned.
Yeah, let me begin with what was the philosophy behind this entire reform. In fact, GST has completed 8 years of its journey. GST as a tax system has stabilized, and the revenue growth from GST was quite robust. In fact, last year, total GST collection was to the tune of 22 lakh crore. So this is the right time to carry out this transformational next generation reforms. And in this exercise, whatever was being criticized about GST, that it has led to a lot of complexity and there is uncertainty and instability in the mind of taxpayers because of the many disputes which were arising because of multiple rates, 5%, 8%, 5%, 12%, 18% or 28%. So it was thought that simplification, yes, is required, and therefore the thought was to bring one standard rate and one merit rate. Apart from that, lot of process reforms have been carried out in it. And it's a journey. In fact, on rate part, lot of rationalization has been done. Goods have been put either on 18% or on 5%, depending upon the merit of the goods. As far as processes are concerned, the two processes where every taxpayer is involved is first to come into the GST ecosystem, they have to take the registration. And on registration, we were receiving lot of complaints about that delays in registration. So it was thought that in GST process, the registration process was tightened because of the entry of lot of fake entities who were there to pass on fake ITC. So it was thought that entities which are not concerned with passing of ITC were issuing mostly B2C invoices. Why in their cases cannot be a simplified registration process? That was a thought to bring a very simplified GST registration scheme, and where on the basis of their opting for not passing on more than 2.5 lakh as per month as GST, ITC. So they are granted a simplified registration within 3 working days by the system automatically. Similarly, processes have been simplified for granting the refunds. But lot more is in pipeline on the processes front. On rates, I will not say, because rates, we need stability. That was one of the major asks of the industry. So, but on processes, yeah, lot more things are in pipeline on return filing, so that the mismatches may not happen. And because if a mismatch happens, then naturally to resolve that mismatch, lot of work is to be done, which leads to compliance burden on taxpayers. So that is next in pipeline.
I would like to ask, sir, that you rightly mentioned about the revenue. This rate cut would have some impact on the revenue collection, at least for the near term. Is there any estimates here, and how confident are you to meeting the budget estimates?
Shrimi, on this I would like to mention that a lot of estimates are coming. And as far we are concerned, our estimate is 48,000 crores. On the basis of consumption pattern in 2023-24, for which the complete data is available. But it is very difficult to estimate exact revenue implication because of the complexity which is involved when the rates are cut across the board. So it is difficult to say, but I would like to mention, whenever rate cut happens, it leads to more consumption. And if there is more consumption, because this, whether it is 48,000 or maybe some other figure, it remains in the hands of people. And when it is in the hands of people, they will spend it. That will lead to more consumption and further stimulus to GST collections. But one important thing is there. The benefit of these rate cuts should be passed on to the last ultimate consumer. Then only the money will come in his hand. That will lead to consumption growth. So it is very important that the benefits are passed on by the industry to the common man.
But how will you ensure that, because a lot of skepticism around that, whether the end consumer will get the rate cut benefit or not. Also, will there any plan of reviving the anti-profiteering to deal with these issues?
So starting with the anti-profiteering provisions in GST law, the provisions are there, and when the GST was introduced in 2017, rate cuts have happened in 2017, 18, 19. And we have found that not many complaints have been filed under anti-profiteering provisions of GST law. So, and the amount involved was also not very big. So that gives us confidence that this time also the benefits will be passed on to the ultimate consumer. But what measures the government is taking to ensure that it is getting passed on to the ultimate consumer, I would like to mention that we are doing the price monitoring. So pre-cut and post-cut. So we have already instructed our field formations to take the data, and so that we can analyze whether these cuts are being passed on to the ultimate consumer or not. In fact, you might have also seen that in the print media, full page advertisement have happened from the industry segments where the cuts have happened, and they have pledged to pass on these cuts benefit to the ultimate consumers. So that again gives us more confidence that these cuts will be passed on to the ultimate consumer, and that will lead to increase in domestic consumption and will lead to better revenue growth.
Sir, I'm supposing that by this you are saying that you are fairly confident that there will not be any mishaps around anti-profiteering, etc. because of this, so that's taken on board. The feedback that we got from some of the companies that we were talking to outside was that there is still some debate around the inventory and the treatment of inventory in this transition period. Maybe they want some more time, maybe some industry bodies might be saying we do not need time. Maybe when the GST was announced, it should have come into effect not from September 22nd, but from September 5th. Any thoughts on that?
Yes, I would like to say that it was the industry's demand, because when the Honorable Prime Minister made that announcement on 15th of August, and there was quite an expectation from everyone that there will be GST rate cuts. And after that, we started receiving representation from trade that this exercise may be completed quickly, because that was leading to people postponing their purchases. So it was the industry demand, and that therefore the GST Council meeting was preponed and a decision was taken by GST Council, made their recommendations so that this effect can take place in the minimum possible time. So it will now be from 22nd September. Now, regarding the issue which you have mentioned about the stocks which are in the supply chain. Yes. So in such cases, actually this is not the first time the rate cut has happened. In past also rate cuts have happened. And in the supply chain, at whatever rate GST has been paid, that entity in supply chain is entitled to take full ITC. And when they further supply it, then in that case, naturally there is some value addition by them. Those are the margins and certain value addition if it happens. Then in the monthly returns, they have to make the payment, GST payment. So they make the payment either by utilizing the ITC, or the balance portion is paid by them in cash in their monthly returns. Now what will happen that if ITC availability is more, they may make the payment from ITC. So the cash payment liability will get reduced to that extent during the transition period. But I don't see any kind of problem, because people keep on talking about that their credit notes will have to be issued. But I don't think that will be a case, because this benefit will get passed on.
Mm-hmm. And just a follow-up question on that, as we all know that rate cut is across the auto sector, in the small category, in the luxury segment. But one issue is concerning it, especially for the auto dealers, is about accumulation of compensation cess, because that will go lapse after September 22nd. So is there a mechanism in work? Are you considering that issue? How they are going to recover that, unsold credit on the compensation cess, sir? Any mechanism there?
Yeah, you have raised a very pertinent issue. That concern is being flagged, and we keep on receiving representation regarding that. Let me say that cess is imposed for a particular purpose. Cess can be for the purpose of, say, health. Cess can be for the purpose of agriculture. Cess can be for the purpose of education. Compensation cess, again, is a cess. And it was imposed for a particular purpose, that was compensating the state in the first 5 years to ensure there is a certain percentage growth in their revenues on year-to-year basis. And that 5-year period was over in June 2022. After that, the compensation cess which is being collected is for the purpose of repayment of loan and interest thereon, which was taken during the period of COVID, because there was dip in revenue collections during that period. So I think in 2020-21, a loan of 1.1 lakh crore was taken, and in subsequent year, 2021-22, a loan of 1.59 lakh crore was taken. For repayment of that loan, this compensation cess was taken and being collected. So whenever cess is discontinued, in past also, cesses have been discontinued. So what happened in those cases? Actually, in those cases also, what was lying in the books could not be utilized, because the levy itself has gone. Same thing has happened in case of automobiles also, or maybe wherever cess has been discontinued. It is not only automobiles, it is in case of aerated water, it is in the case of coal also.
Right.
So once the levy has gone, whatever credit is lying, it will remain lying in their books.
Sir, most of the people, right, last question or last couple of questions, most of the people that we've spoken to in the last 4 days have, like I said, I started off the conversation saying, "Ye dil mange more," everybody's saying, what's next? Now, I read about your comments that India will move to a single structure when income parity comes across. Now, that is maybe light years away. So between then and now, what else can be expected?
Yeah.
Not on the process, please, on the rates.
Presently, in this restructuring exercise, now it is 2-rate structure, 18 and 5. 5 has been kept a merit rate because our socio-economic conditions are such that for common men use items, we have to keep a lower rate. Once there is no need to keep a lower rate and only a standard rate is required, at that time, definitely another reform can be carried out by doing away with merit rate and having a standard rate. But I think that can happen, as I mentioned earlier also, that is there in some developed countries, not in all developed countries. So once we are in that position, that we can say for sure that everyone can afford goods equally, then we can have a single rate. In fact, single rate will lead to another benefit. Then there will be no inverted duty structure, because till the time we have to keep some goods at merit rate, we will have inverted duty structure in those sectors. So that is inevitable.
Speaking on the inverted duty structure, do you think these measures which we have taken under GST 2.0 is going to resolve fully with the sectors like textile, fertilizers?
As I mentioned that till the time we have to keep certain goods, maybe textiles, maybe certain other goods at merit rate of 5%, their inputs all cannot be brought, because inputs can be used across different industry segments. So the inputs have to be kept at 18%. And if you want to keep everything at one rate, as I mentioned, that inverted duty structure will go for all commodities once we have single rate. But that can be only in future, depending upon the socio-economic conditions in the country.
Last question, sir. I had to ask this about the additional levy, lot of chatter around it, over and above the 40% special rate on tobacco. Is there any talks on that? Is there any measure under consideration?
The central government stand is that on the sin goods, tobacco products, the tax incidence will not be lowered. So the room which was available under GST law was that 40% can be the maximum rate. So up to 40% GST Council has recommended on tobacco products, sin goods. Beyond that, yes, there will be a levy under the constitutional provisions, so the tax incidence does not come down.
Sir, I must say, on behalf of a lot of people who look at markets and economy very closely, they are lauding this as one of the most landmark reforms that have happened. So kudos on doing this the way you have, and thank you so much for coming to the GST Conclave and talking to us.
Thank you, Neeraj. Thank you, Shriman.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI.
Co-powered by National Stock Exchange. Innovation partner, Veka, India's largest selling UPVC window. Technology partner, Tally Prime, India's favorite business software. Brought to you by अपार सुरक्षा, जिस पे देश करे भरोसा.
Conversation is my colleague Vasudha Venugopal. Welcome on stage.
Good evening and welcome to this special conversation. India has taken a massive leap with GST 2.0, but what do these reforms really mean for the economy, for businesses, and most importantly, for the common man? At a time when India has just undertaken the biggest rehaul of the GST, we have with us a special guest, Sanjeev Sanyal, a member of the Prime Minister's Economic Advisory Council, a person who wears multiple hats, but I'm going to stick to economy today, and also a historian, somebody who's read widely, somebody whose work has brought fresh perspectives to India's past and also present. Mr. Sanyal, thank you so much for
Pleasure to be here, Vasudha.
Yeah. Mr. Sanyal, I saw your interviews and you have used this word process reform for GST 2.0, and you say that this is not to kickstart or boost consumption, but it is to put in place an efficient system. How are you so sure that it's going to bring tangible benefits to the common person in the country?
So what you have to understand is the distinction between a structural reform and what a process reform is. You see, everybody loves grand structural reforms, introduce the GST. That was a structural reform. Or the original reforms of 1991, we changed from a socialist system to a market-based system, or introduce the insolvency and bankruptcy code, or shift our monetary policy to an inflation targeting system. Now, those are all structural reforms because you have changed the structure of whatever that activity was. So when you introduce GST, you fundamentally change the structure of indirect taxes in India. Here, that's not what we are doing. We are taking the system, but we are doing a process reform in terms of making the existing system more efficient. So what have we done? We have basically, first of all, taken all the slabs, first of all, reduced them to 2. But very importantly, gone back to first principles and taken all the items and slotted them in what is a more logical place for them to be. For example, we used to have cement at 28. Now everybody argued, why is it there? Well, the reason it was there is not because of some great thinking that was done, but simply that it equated to whatever existed in the pre-GST period. Yeah. You slotted it in just because it was the least disruptive way of moving to a new system. But because you had this not necessarily sort of worked out way of putting things in various slabs, first of all, you had lots of slabs, and then you would end up with these rather arcane debates about what to tax salty popcorn vis-a-vis sweet popcorn and things like that. Now, these debates will happen because the system is not set up logically to equate to anything but what existed pre-GST. Right. So what we have done now is taken the system and rationalized it. Now, even if you didn't know, you didn't have the booklet which tells you what is in which slab, by just from common sense, you would broadly be able to tell what item is in which bucket, right? Now that is a major efficiency gain. To a large extent, it gets rid of the inverted structure problem as well, not entirely, but to a large extent. And very importantly, we have done a whole bunch of process changes as well. So for example, in a creeping sort of way, a sort of Inspector Raj had come back into the registration process. We understood that, so a new process system has been created by which at least 97% of the registration should happen within 3 days. So all of this is taking the same framework and cleaning it up. Right. And while doing this does mean that you may get a one-time boost in sales because the rates have by and large come down, it does, the real benefit to it is not about this one-time boost. The real benefit is from the fact that you made the whole system less friction, having less friction and made it more productive. Because the game really is to get the whole system to work faster, become more buoyant, become more efficient, let the economy grow faster, and consequently, therefore, to be able to fill up some fiscal hit we may take in upfront.
Right. So then, Mr. Sanyal, how do you look at this criticism, especially by the opposition, that this has come too late and it's too little? Would you agree with the fact that we've also lost some time, some precious time, in bringing about these changes in the original design?
Well, I mean, one can always argue we should do it earlier. I mean, those who are making this case should have then done it in their own time. Fact is that it was done in 2017, now 8 good years ago. It took about 2 years to stabilize the system. And by the way, India is one of the few countries where it stabilized that fast and didn't end up causing a regime change, by the way. Then, having stabilized it by 2019, we then went through 2.5 years of fair amount of economic trauma because of the COVID shock. Then at the end of that, we were recovering from it. So again, don't disturb it, please. So it's only in 2024 that we began to feel confident that, look, let's go for it. And you will remember the late Bibek Debroy also on publicly making the case that, look, we need to have fewer slabs. And I have also publicly stated before that we need fewer slabs. So it's not some new thing that we didn't know we had to do. The question is when to do it. So about a year ago, we began to look into this seriously, and here we are. We have reduced them to 2 levels. We can always argue we should do it earlier or whatever, but here we are and we have done it. And those in the opposition who think it should have been done earlier and that this has been done because of their advice, I hope they remain in the opposition and keep giving us good advice.
Mr. Sanyal, revenue losses seem to be a point that a lot of these opposition states are making. We just had the Punjab finance minister making the same point. What would you suggest to the centre to ensure that states don't get shortchanged?
Look, when you reduce rates and rationalize them, there would have been a one-time reduction in taxes. This is one of the reasons, incidentally, why we didn't do it as quickly as possible, because we were unclear whether coming out of COVID, fiscal systems were strong enough to do it. So you can't claim that it should have been done earlier and then say, oh my God, you are going to cause us a fiscal loss. There will be a fiscal loss if you rationalize downwards, which presumably is the plan. Nobody was arguing for rationalizing upward, I'm assuming. So if you're rationalizing downward, you will see an upfront cost. The idea, of course, is that the economy becomes more efficient, grows faster, and that you then make up for the one-time loss with the momentum of the economy and the buoyancy. So that's basically what we are arguing for, and I don't think anybody is arguing that this is consequently a bad thing.
Mr. Sanyal, you've been highlighting the compliance aspect of GST 2.0. Compliance would mean faster registration and also these partial refunds. Who would this benefit? Would it benefit the exporters and also MSME? And what kind of tangible benefits?
So generally speaking, it benefits everybody. Making the system making it friction-free benefits everyone. But typically, this sort of thing hurts the MSMEs most. Because typically you're dealing with somebody with one company which is just about getting registered, he can't even get going, whereas an existing large company already has a phalanx of chartered accountants who do this sort of thing, and even if things are delayed somewhere, they probably have a subsidiary somewhere else where that can get things going. So really the benefit happens to be the greatest to MSMEs, right, but everybody benefits.
So talking about MSMEs, I come from Tamil Nadu, and there's a lot of uncertainty amongst manufacturers, especially garment manufacturers. Similar concerns have been raised by shrimp farmers and the diamond merchants of Gujarat, and this is all to do with the US tariffs. How do you expect India to navigate the situation? I know that the rhetoric has toned down in the last few days. We also saw the Prime Minister respond to Donald Trump's tweet, but do you expect the situation to get better in the coming days?
So look, as we emerge as a global power, you have to get used to the fact that other countries, existing powers, including those who purport to be our friends, will be uncomfortable about it. So first thing we need to do, if we genuinely believe in being a world power, we first of all need to develop a bit of a thicker skin. And as you have seen,
in this particular episode, we have not escalated the matter, but we have stood our ground. And I think at some point in our history, we will have to do this. Now, if we cannot do it at a position when our economy is growing at least in the first quarter, by 7.8%, there's no particular emergency, our banks are in good shape, inflation is in decent shape, oil prices are in decently low. If in this moment in history we are unable to stomach a punch or two, then we'll never be able to do it. So if there is any moment in history we could have sort of stood our ground, this has got to be it, so we have done so. And I think we have done the right thing. Now, that does not mean that some parts of our system will not take some heat. And let me say, wherever possible, we will provide them support. We do have the fiscal and monetary space for doing it. This GST change also helps some of them. For example, the textiles guys some of their inversion has been removed. So let's see, as things pan out, we will provide whatever support is to be needed.
Right. Mr. Sanyal, talking about China, it looks like we could be normalizing ties with China soon. What kind of impact would that have on Indian economy, considering that our trade deficit with China remains quite significant?
So the trade deficit with China has been an issue for a while. And of course, we have things like Press Note 3 and so on, various restrictions we had put in place after Galwan. So we will have to see how this pans out. Fact is that while as a country we may not want to join things like RCEP, it also is true that we cannot wish China away. They are the world's largest industrial power. Even if we want to become an industrial power, a lot of the inputs will come from there for the time being, and maybe even into the longer future, there'll be segments where there will be an important supplier. I mean, we can be a great generics manufacturer of medicines, but, the inputs come from China. So, and this idea that we can protect everything and manufacture every single thing at home may not quite work out. Even if we may want to, at least the key chokeholds we may want to protect, you cannot wish away China from the equation. So a normalization with China over time is in our interest as well.
Also, sir, well, in that case, given that there have been global headwinds and there have been these shocks that we've been getting, and many countries are witness to this, what kind of policy framework does India need so that our economy becomes quite resilient to adjust and adapt to these kind of shocks?
Well, you could spend the whole evening discussing various things, but I think you can put them in the general bucket of ease of doing business and ease of living. Basically, what has happened is that while we can still do some very large structural changes which we can discuss, and particularly you need to probably do major structural changes in the judiciary and speed that system up. But on the government policy front, the bulk of the big structural changes are probably done. There are some more that we can discuss, and I have some ideas on that. But a lot of what we need to do is really getting rid of friction. And so therefore, I keep talking about process reforms all the time, to the irritation of other people maybe. But I do want to make sure that the point is, we may need to do maybe half a dozen large structural reforms, but the real game is doing the thousands of process reforms. And when I say process reforms, what am I talking about? I'm talking about, some act, rule number 43C, subsection D, 3 words have to be changed. Now, the economy at large may not care about those 3 words, but there's some sector that does care about those 3 words. Right. And somebody has to do this excruciating business of going there and pulling those out. I have signed up to doing this, as you may be aware, so I have been working on this, but the good news is now it is getting more institutionalized. Just a couple of weeks ago, the government announced that a committee has been put in place for deregulation with former cabinet secretary, now member of Niti Aayog, Rajiv Gaubaji, in charge of that. So, a systematic effort towards doing these myriad process reforms is being made.
Right.
And there are other things that need to be done as well.
Talking about committees, there was a task force that the Prime Minister announced on Independence Day. This is to expedite bureaucratic reforms, to streamline bureaucracy. You've had some radical views on that, and a lot of us agree with you on the fact that the bureaucracy needs a lot of changes. What kind of governance changes do you think the country needs at this point of time?
So this is a huge topic. We could spend the whole evening talking about it, but at a very broad level, there are a few things we need to do. First of all, I think we need to think through the structure of the government in the following way. I have been doing some work on this, and my preliminary findings is that perhaps the Union Government of India is not as bloated as people think. My own sense is that it may in fact be too small. The problem is that the distribution of that bureaucracy is wrong. There are some very major areas of the government where we have too few people. For example, we have not enough people in, say, things like cybersecurity or food safety or even archaeology and museum protection. Municipal services, of course, that's not a central government activity, but still, if you're taking a more local government, not enough people in municipal government. So, in fact, the Indian government may not be too bloated, but it's all in the wrong place.
Right.
Meanwhile, we may have way too many people in certain other areas. I mean, I discovered that we have some 3,600 gazetted officers in the Geological Survey of India. Now, I have nothing against geological surveys or geology, which I think is a very useful thing. But one could argue that having 3,600 gazetted officers, and plus there are many non-gazetted officers as well, may be a bit too much for an institution that should be relatively slim and trim.
Right. One of my last questions to you, Mr. Sanyal. You've spoken about the demographic potential of the country, and you sound concerned, and this is something that's been echoed by a lot of chief ministers, experts. What should India do to get this right? Because we've seen the examples of several countries who are facing the challenge of aging population.
So we haven't aged yet, but we need to begin to think about this, because while we are in the demographic dividend phase for the next 25 years, do remember what this actually means. The reason we have just entered this demographic dividend phase is because 25 years ago, we had the peak in the number of children born. Since then, the number of babies born in this country has actually declined. I think if I'm not wrong, we had 29 million kids born in India in 2001. That was the peak. Today, that number has fallen to about 22 million. So, dramatic decline. We have a total fertility rate of about 1.9 and still declining, which is below the replacement rate. It is only at 1.9 because a couple of states like UP and Bihar happen to still have reasonable high birth rates, but even those are declining. But there are parts of the country where birth rates look like East Asia. And those states have begun to complain about the fact that they are seeing demographic changes because of migration from the north. But let me say, it may not last very long because those declines in fertility are also happening in the north. So rather than complain about this inflow of workers from the north, I think the south and the west as well, but in fact, interestingly, West Bengal too, which happens to have almost Korean birth rates in urban Bengal, you need to begin to think about how to at least ramp up birth rates. Now, let me warn you about one problem here, that no country in the world which has seen a decline in birth rates has been able to bring it back ever up past replacement rate. So, if we manage to do it, we'll be unique. But at the very least, we need to shut down all these population control programs which still seem to hang around in our bureaucracy. In fact, since you mentioned in our earlier question, what are the things to shut down in the government? Well, every kind of population control program in this country needs to be shut down now.
Are they still working across the country?
Yeah, they are all embedded in various ways in the system. You see, it's like this. Once you create a bureaucracy, it stays alive. We are now 30 years into being a market-based economy, but half the things I'm fighting are all structures that were, and laws and rules created in the socialist period, some even in the colonial period. So once you create a bureaucracy, it stays alive. This is not true of just India. The one-child policy was removed in China relatively recently. This is 30 years past when it was obvious they had to do it, and almost half a century past their peak in the number of children. So even in China, once the bureaucracy, you had given somebody targets to reduce birth rates, they kept doing it till well past where it made any sense. And every economist and demographer worth their salt was screaming that, look, this makes no sense. Why are you continuing with a one-child policy?
Right.
But it still went on for 2 extra decades. So you have to go into our systems, and we go into our medical systems, for example. We have actually still all kinds of incentives for doing hysterectomy, tubectomy, and all kinds of birth control things. I am okay with women making fair choices about it. But if we have a government program that actually promotes it and particularly gives incentives to doctors for carrying out these things and encouraging it, then, then at the very least, you should get rid of them.
Absolutely. Thank you, Mr. Sanyal. On that note, thank you so much. That's something to think about. Sanjeev Sanyal, on the importance of making policy that touches people's life and benefits them. Thank you so much, Mr. Sanyal.
Thank you.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Co-powered by National Stock Exchange. Innovation partner, Veka, India's largest selling UPVC window. Technology partner, Tally Prime, India's favorite business software. Brought to you by Apar Suraksha, जिस पे देश करे भरोसा.
Company. Whenever there is a tax cut or a GST reform, it's not just a cut in taxes, it's actually a growth and consumption accelerator. India is the only large economy in the world where 63% of our entire GDP is domestic consumption, so it's huge. More money in the pocket, reduction in complexity, it's fabulous. It's easy to file taxes, it's easier to pay for them. However, I think our industry, for some reason, does not get to experience the benefit of input tax credit. Now, we are the second largest employer of human capital in India after agriculture. 10 million people directly employed, another 10 million through ancillary means. We also contribute between 2 and 3% to the country's GDP. And we are now compounded annually growing at a rate about 11%. When the GST regime came about in, I think, June of 2017, the compounded annual growth rate was 22%. So it's come down to half for the organized sector and about 8% for the disorganized sector. That being said, I think we're very happy about some of the changes that have been incorporated now. So it's not all gloom and doom, it's very good. I think any reduction in complexity, any reduction in tax rates will put more money in the hands of the consumers, and that'll funnel its way down to us. The good thing is, and this is good trivia for you all, Indians love eating out more than any form of entertainment. The Indian F&B sector is 40 times larger than Bollywood, and Indians spend almost 40% of their gross disposable income on eating out. So we will probably be a direct beneficiary of added money in the hands of consumer. We'll also be a direct beneficiary in some of the input costs that we're going to face, no doubt about it. Ghee, bread, milk, meat, cheese, dairy products, parathas, as somebody mentioned before me, or ACs, utensils. So there'll be a fit-out cost benefit that we'll face, and they will obviously face a benefit in input costs, which happens to be our highest cost. But the problem is some of the key things that affect us are still not fully, the benefit is still not fully accruing to us because we don't get input tax credit. For example, and my dear friend Pushpa is sitting next to me, after food, the largest cost for the restaurant sector is occupancy cost. Occupancy cost is still charged at 18%, which means I'm technically paying a fifth higher in rent and I cannot get a credit. So in essence, when I measure per square foot rates, 500, 400, 300 rupees, it's actually not. 400 is actually 480 rupees.
So you're listening to that, huh?
Yes, no, she's my dear friend. So we have this banter on a lot of these forums, and we enjoy each other's company.
For the government.
Yes.
However, the lack of ITC for an industry like ours that is already plagued with razor-thin margins, and also, please understand, the morbidity rate of the food business, the restaurant sector, is the highest in the world. 9 out of 10 restaurants shut down within a month, and 9.6 out of 10 shut down within 18 months. So the margins are very thin. It's not a high-profit sector. And it's also an industry. I really feel that we don't have the industry status yet, but we're big enough to be called an industry. And I think it's very important for us to kind of get the benefit of that. Like I said, any kind of enhancement in consumer spending will funnel its way to us, which will happen because people will now be paying less for some key instruments. However, the full benefit is still not fully accruing to us. And it's so we at the NRI, I represent the NRI, which is India's largest restaurant body. We have about 5 lakh members, and we have an incredibly robust set of driven people that are sending out these reps and warranties to the government, and we're very hopeful. I think now the time is right. There are other hotels and restaurants in hotels that get input tax credit. We don't get to enjoy that yet.
I'm going to come back to you. Let me give Pushpa a chance as well to come in here. Pushpa, I want to understand from you, Zorawar just spoke about, more money in the hands of consumers. From a retail perspective, do you expect shoppers to stay cautious and focus on essentials? Or is this a push towards aspirational lifestyles and purchases?
Good afternoon, everyone. Well, before I answer that question, you should grant me that I sit opposite Zorawar and negotiate with him on rents. That must be a tall order, right?
Yeah, that's what I was referring to back then, yes.
She's a tough negotiator, very tough.
Anyways, well, as far as the, the way I look at it is that I represent both CII as well as the shopping industry. And couple of things are very good and few dil mange more. One is, of course, the fact that, yes, there's a general sentiment where people are understanding that there's going to be more cash in their wallet. Discretionary income and spends would increase, and that is a natural fallout of this. The timing is really good from a shopping industry point of view because it's festive season. That's when 60% of our consumption happens during this belt of October to December, January. This is when 60% of our sales happen. So the timing is absolutely bang on. One of the things that I'd like to point out is that while the simplification is highly welcome across sectors. I've been talking to all of my retail tenants. They all say that the simplification and making it just 2-tier makes it super simple, and also the back-end calculations become that much more simple. However, the 2,500 for apparel currently is, and footwear. These are the two high consumption items in shopping industry, and that has been given an additional levy from 2,500. If you shop for 2,500 rupees, it is 12%. Anything above 2,500 rupees is 18%. Well, that as Mr. Sanyal was sitting here, I wanted to walk up to him and say, why 2,500? What was that magic number about? Because I do think that any of us who go shopping, 2,500 for an apparel is going to make it value-centric, but not really aspirational. So one would want that 2,500 number to be relooked at, perhaps, and that would be a request from the shopping industry. However, the fact that there would be an overall sentiment boost, and also the fact that there will be I think, more money in people's wallets, and that will definitely boost overall consumption.
But are you seeing that already in terms of footfalls in malls? Are you waiting for 22nd September to see that huge footfall in malls?
Well, again, I think like the earlier panels were talking about it, there is a lot of, at this point in time, I wouldn't call it confusion, but a certain query on how will the inventory, current inventory, be tackled. They are waiting for that. But beyond that, and I'm sure there'll be clarity given by the government, the shopping period, which really starts from 22nd September, we do think that there will be some more value given, some more value-added discounts passed on, and hence we do expect much more in terms of our sales during the festive period overall.
You know, Zorawar, a lot of people go out when they have more money in their wallets, right? You've seen that in your restaurants as well. But once GST relief makes eating out cheaper, do you expect families to step into these restaurants more often, or will caution continue in terms of discretionary spending?
You know, it's incredible that you say that. Like I said, we are the #1 form of entertainment in the world, and whenever there is a affordability in India, and this is an important statement, affordability in India is the gateway to aspiration. It's an absolutely integral element. We are going to add, by 2030, 75 million people into the middle class and 25 million people into the affluent class. So what are these people going to do? They're going to go and eat out. They're going to buy clothes, you know, above 2,500 and below. They're going to go buy luxury cars. I believe some SUVs have faced a reduction in price. They're going to go and buy more air conditioners. I found air conditioning has come down cheaper. I better change the air conditioners in my room. They've been giving me some trouble. Overall, I think whenever there is more money, people will go towards, will funnel their energy and money into things they really want and they desire. Now, that's in a way for us as an industry, we're no longer just a want or a desire, we're also a need. Yes. Somebody who does not have a kitchen at home, a single person living in Gurgaon, you know, he doesn't have a wife, he's alone, he doesn't have a cook, he's sitting alone. What's he going to do? He's going to order food in? At that point in time, it stops being a want or a desire. It becomes an absolute need. But if I might just
interject there, is it cheaper for me to reach out to your restaurant and call for food home directly now? Or through platforms like Swiggy and Zomato? It's going to cost more then, isn't it? Isn't that something you should be happy about, given the morbid statistics you've been giving us till now?
You know, I wish the platforms would let us do our own pricing. They always ask for parity, or, you know, both the platforms don't sell food yourself cheaper. No, I think it's the prerogative of the restaurant. The restaurant should get to decide. If I want to give you an extra little voucher for a free cocktail or a free starter next time you come, I should be able to do that. So platforms don't necessarily allow that. But I'll tell you this, it is cheaper for you today to order food in than to make it yourself. The delivery side of India is not competing with restaurants. It's competing with your home kitchen.
All right. So I've been told that the finance minister is on her way and I have to wrap this up. But very quickly, before she gets here, what is your message to her from your sector and yours as well, Zorawar? Let's just keep it all ready for her to know before she enters the hall itself.
Well, the one message is thank you. I think this was something that we were all waiting for, a simplification and as well as boosting the economy. This would definitely boost in the larger sense. And where the shopping industry is concerned, we, as Zorawar said, we are looking at generating employment. We are the second or third largest employment generators, and we want an industry status sooner than later. So that's something that we would like to talk.
Great insight there. Your wish list, Zorawar,
so
in a
firstly,
minute.
thanks. I think every time there's a GST slab cut, their complexity is reduced, people have more money, that'll funnel towards us. So that's great. Our humble submission to the powers that be, please restore ITs for us. We're one of the very few industries that don't get it. It means the difference between survival or death. I cannot harp on some of my friends are over here, and the restoration of ITC could be the difference between your favorite next door restaurant that you've dined at for a decade whether it's there for another decade or not.
All right. Thank you so much to our panelists. Well, thank you, Pushpa and Zorawar, for those insights. What we've heard today is that GST reforms and rate cuts can bring festive cheer, but obviously we also need to see whether that benefit is passed on to you, the consumer. Thank you so much for joining us.
Thank you.
Thank you.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
Co-powered by National Stock Exchange. Innovation partner Veka, India's largest selling UPVC window. Technology partner Tally Prime, India's favorite business software. Brought to you by Apar Suraksha, जिसपे देश करे भरोसा.
Well, good evening, everybody, and thank you very much for being with us. I've had the opportunity, the privilege really of interviewing all of the gentlemen on this stage in the past as well, more than on one occasion for most of them. And I think they represent some of the best in industry. Chandrajit Banerjee is somebody I've interacted more than the others. The Confederation of Indian Industry has been wonderful with us at NDTV, and it's great to have this panel, which represents not just CII, but some of the finest voices in India on this topic. GST 2.0 is a revolution. How does it impact different sectors? That's what we really want to look at today. Dr. Trehan, I must come to you first. As you sip that glass of water, there's that sin tax, right? For you as a doctor, that must be incredibly important. The fact that we have a sin tax, tobacco products are taxed very heavily. It saves lives.
So there are actually three categories in which you can classify or break it down. First is the fact that removing GST on insurance premium, which was 18%, made the insurance premiums almost unaffordable at the level that you want it to be. Because when you want to buy a plan which gives you good security for you and your family, 18% on top of that was a killer. So I think that's a great job the government has done in recognizing, and it'll help public at large. The second thing that's happened is that there are some life-saving drugs that have been put to zero. Mainly also cancer drugs, which was, as it is the newer cancer drugs are expensive. And GST on top of that was also a very big burden for patients who already are bearing the burden of a very sort of deadly disease and also being able to afford it. So that's the second big benefit. The third is or it's part of that is the pharmaceutical industry. So it's all been brought down from 12%, 18% to 5%. That also will be a big relief to be able to afford treatment. On the other hand, for the providers, our input costs will be reduced because most of the our inputs, which like consumables, like medtech stuff, attracted 12 to 18%, and it's all been brought down to 5%. So these are all things that have really helped our sector. Now it'll make it more affordable. We can pass on the savings in the consumables to the public at large. So I think from all fronts, this has been a very favorable move by the GST Council. I'm sure the finance minister, the prime minister and all that have had a major role to play in it. And I think it's a big relief to the public. So it's a public-facing sort of change in policy. What has not happened, which is still on the agenda, is that we don't get a set-off for whatever we pay at GST. That is one part which we have been actually putting forward to the government, that would also give us more relief and we can make delivery cheaper. The whole idea is whatever benefit we get, we should pass it on to the public. So that has not happened yet. So we are stuck between the fact that we do pay GST, although it's going to be reduced now, the burden, but we still don't. And the other thing that's important is that any room more than 5,000 rupees attracts GST.
Right.
5% though. So that also is an added burden on the public. So I think these are the two things left which can be actually moderated, and then people will really benefit from a lower cost of healthcare.
No, but in terms, Dr. Threyan, of passing on the benefits to people who, for example, visit your hospital in rooms beneath a certain price point, is there any statistic that you can share with us? I mean, for a hospitalization of X period, the average room cost would come down by X amount, or the average cost of treatment, and you can name one of the treatments, might come down to this extent. Is it possible to do that?
The back of the envelope calculation would say somewhere around 5 to 7%.
Across what?
Across the room rents and also in the consumables. So that would be helpful, no question about that. But the actual calculation is yet to happen because we don't know what the other end is going to do, the supply side is going to do to us. So once the supply side settles down, then we can actually calculate and pass on the benefits to the public. That's the intention. And I think we should all as providers live up to that intention.
Mr. Mewani, for the longest time, GST has been meant to be, or the ideal was one nation, one tax. It didn't really happen that way. It was a complex web. Compliance was an issue. We've now come down to 2 slabs. To what extent does that help the entire compliance structure? Do you believe it's that simplicity or the relative ease which exists now as opposed to the past, which might be one of the game changers in this?
Yeah. No, thanks, Vishnu. I would just say differently. When GST got passed in 2017, I think it was a very far-reaching change, and it was one nation, one tax. If you looked at it before that, it was completely broken. So it was one nation, one tax. I think India was venturing into something new at that time. You also had to give assurances to states that you were taking away their autonomy, so give them confidence that you will be able to collect revenue. So the government was rightly conservative, and also they were worried that credits will be misutilized or invoices will be there. So I think lots of controls were put in place, and the tax sort of rates was on the higher side. Having said that, over a period of last 7, 8 years, the revenue neutral rate has come down by 3 to 4%. And so I would still say that GST is one of the most biggest tax reforms that happened in 2017. And similar to that, I think what the government has done this time is very path-breaking. I think reducing the rates to the extent, the manner in which it has been done, the speed at which it has been done, and the smoothness with which they have done it, and the thought process behind it is really fantastic. So I think we must give compliment to the government. It's not an easy change, especially when the change is not just one government. You have to include a lot of state governments. You have to bring them and get their consent as well, and it was done unanimously. So I think we must give credit both to the central government definitely for pulling this off, but also for the state government. Compliance disputes were mainly of 2 or 3 kinds. One of them was around classification, because we had a 4-tiered structure. I think the government has now come up with a 2-tiered structure, where they very clearly defined the principles of what applies to 5% and what applies to 18%. And also a very small list of goods which are in 40%. So I think to that extent, as far as classification disputes are concerned, they will come down significantly. I think they've made the registration process much easier. There is also a very, for a lot of areas, you can get provisional credit. So earlier you had blocked input credit, but that in many cases now has been unlocked, at least to the extent of almost 90%. So that is easy. But there are some areas which may not have any financial impact, but procedurally, at some stage, I think it will be good if the government can look at it, and one of them being obviously decriminalization. I think we must look at that, because that often is not the intent of the government, but the way it's applied on the ground. Sometimes it does create challenges, especially for MSMEs. And secondly, another area which is not easy is the number of audits that are done. So if you're operating, if a company is operating in 10 different states, for the same year, 10 different audits happen. And you may have a situation, or in many cases you do have a situation, where different people take different interpretations. Now, those interpretations will get much lesser, because classification disputes will get much lesser. But if we can come to a point where there is 1 or 2 audits, then I think it will make life much more easier. And there is an SOP which the central government has already issued, on the basis of which audits are done. So you suddenly don't have some extravagant notices. But the basis of a lot of this was classification disputes. So in many ways, the government has done a great job of eliminating that and laying down very simple principles on the basis of where 5% and where 18% will be applied.
Mr. Banerjee, how does GST 2.0 compare with, let's say, global best practices?
We have got much closer to the best in the globe. We have 2-tier now, and that's what you see the developed nations do. If more mature economies practice that, we will move towards perhaps even a more streamlined fashion. Rajiv was talking about a lesser burden of compliances. That also actually is a very important subject, and that compares so strongly with global benchmarks. And today, if India is looked upon as a investment destination, one of the things that one would look at is how do you resolve disputes, and this dispute resolution mechanism which has come in is going to be a great, again, not only compares with the best of global benchmarks, but it is going to be something which will trigger a lot in terms of inward investments, attraction towards India. The other, global benchmark that you see that's very critical to appreciate is how you are creating a sort of a trust-based sort of a economy. And that shows maturity in the economy, that shows a two-way system working, and I think that's again a very critical feature of GST 2.0. Going forward, I would think that we see more of these trickling into other areas of work. So today it is taxation. 8 years ago we saw GST 2.0 come in. So and more of trust even within the states of India and the center. That's also a very critical thing, and that's also putting it at global benchmark, because that's going to be very critical for India to establish not only between the consumer and or the businesses and the government, but also within the system to take forward other reforms. So, be it labor, be it land, and so on and so forth. So we are really looking at how a mature Indian economy is getting into.
Mr. Kambata, I think everybody over here has grown up on Rasna at some stage or the other. And sort of the original Rasna man over here with us. Aerated drinks, of course, have now been taxed up. Does that benefit the Rasna manufacturer, the Rasna king, as it were? and have your input costs actually likely gone down as a result of all of this?
See, I'll take it in three parts. Number one is I think I should congratulate the whole government, all associations. We are all wanting this to happen, and this has happened. I think it's a big ticket reform. And I should congratulate the Prime Minister especially, because when we are looking at India at the global stage, we have to make India a consumer market, and we have to rely on ourselves. And honestly speaking, we need everybody to have a toffee, everybody to have a soft drink, and this move actually enables that. And on behalf of industry, I think the first commitment we should be making, and on a platform like this, is that we pledge to pass every bit and paisa to the consumer. I think that is what we owe to your consumers who are probably going to watch this show. Are they really going to pass on, or are they going to pocket it? And let me tell you, all people, at least I have met, we are fully committed to passing every naya paisa, maybe more, to the consumer.
That's why I was asking Dr. Trehan that same question.
Yeah, we want that big Diwali dhamaka, because I'll tell you why we want it. Not because of any law of anti-profiteering. No, not because of that. Industry knows how to get around laws. We are good consultants for that. Because we do believe, honestly, because we do believe that getting the prices down will get more consumers to buy our products, and we need that India. We don't want to rely on a foreigner. We want that India to grow. India can be 4 Americas put together, if you ask me, if it grows. So that's why we are going to invest. Now, coming to the second question, is there are few anomalies there. Now, some people will say, if you have juice with carbonation, the tax is this, soft drink. But I think this is something in progress. I'm sure the government will look at it. I'm also sure that government will understand that if you put something at a higher tax, doesn't mean consumption goes down. Just look at alcohol. It has a higher tax, but people still consume. So I think somehow or the other, I don't think taxation can be used as a consumer preference tool or to change consumer preferences. There are better ways to do it, I believe, but that's a separate issue altogether. Third point, which is more important, which I personally believe, is that in the food category, almost everything is at 5. Hardly anything is at 80. So I think it is a very big move, because mostly there were a lot of classification disputes. For example, toffee is 80. You put chocolate coating on top is 28. Yeah. If you just have a hard-boiled candy, it is 5. Same for popcorn, same for idli mix. Now all that is gone. I think it's big cheers. More than the tax, imagine unnecessary show cause notices, unnecessary classification disputes. As Rajiv mentioned, all that is gone, which is, I think, for us, a very big news. Going forward, what is required? I think immediately going forward required is that I think traders are pretty confused what to do. So we need clear FAQs which are binding, so that we know all what to pass on by when. We need the GST notification to come in very quickly. And we need clarity on this anti-profiteering law. I personally believe it should not lead to more curbs unnecessary. It should be made simple that, okay, at a profit and loss level, you have to pass on. We can audit in the financial year profit. It should not be SKU-wise. Clarity should be given quickly that if we don't want to reduce the price and give more value, for example, in small packs, we can still do that. So I think these are the type of things required, but I'm very sure the government, when I'm talking, is also working towards it. Last thing I would like to say through your platform is it is very important for consumers to understand that the message is not only what the Prime Minister wants to give is get more consumerism, but get more Swadeshi. And being something I always have been talking of, Make in India, I think it is important that we see this as that how do we not only consume more products, but how do we consume more Indian products? And this is something which I think on platforms like this I should be talking. If the Prime Minister is saying, the Minister is saying, we industry also should say, consume more Indian, be Indian, buy more Rasla.
But the flip argument of that is those companies which actually, for example, in aerated drinks, may not be Indian in origin, but they employ lakhs of Indians.
I do believe they are Indians also. In my definition of Indians, once I went to a committee and I was asked, what is made in India? I said, anything which is a manufacturing
So you're
in
saying
India,
don't buy that Indian product, buy your Indian product.
It is the Indian version is in my mind, honestly.
Okay.
I don't believe, or you ask me, otherwise I export to 50 countries. Imagine if 50 countries talk thinking like this, then they won't buy me, I'll be in more trouble. I've got more exports going. So I didn't mean that. I said, be made in India stuff. For me, every brand made in India is Indian, honestly. Right. That, let me clarify this very clearly. Okay. That is what it should be. Sure. You add value in India, don't just pack in India. Add value in India and you are Indian in my mind.
Mr. Bhimani, I think there was an important point over there on profit. Profit is at the heart of business. And there's nothing wrong with profit. We're a free market economy. But then there's profiteering and the concern that some of the benefits out of GST 2.0 will not be passed down. How does one balance the goal of business to profit and the government's concerns about profiteering?
Yeah. So, Vishnu, I think from CII standpoint, I think we've been very clear and we have committed to the government also on behalf of all members of CII that any benefit that accrues because of the change in the GST rate, and this has been a long-standing request that CII has been making to the government, and we understand that it's a big fiscal call for the government also to take this step, that we would want to assure that at least the communication that we are making to all the members, and as Piyush also mentioned, I think the idea is that any profits that you make because of the reduction in GST will be passed on. And I think you're already seeing some evidence of that in the automobile sector. Now, in some sectors, it may not be that straightforward to compute because of the inverted duty structures. So you know of some of the sectors where even though the duty rates have been reduced, may have been reduced from 18% to 5% or from 12% to 5%, but the accumulated tax credit may be 7, 8%, 9%, 12%. So there is a dilemma in industry to say, what's the extent that you can pass? I mean, you've heard, I think the most vociferous case has been the life insurance industry, for example, where for retail sectors, health and others, the duty has been reduced to, GST rate has been reduced to 0%, but they have input credit. I think Dr. Trehan also mentioned some of that also happens in the healthcare sector. So I think that's a dilemma that one has to do. And the third is that there is nothing wrong with profits. I don't think industry is saying that there is anything wrong with profits. I don't think government is saying anything wrong with profits. But this, in today's India, in this time, this law has been enacted. I think the government is also very keen. There is a rise in demand. There is a rise in greater economic activity in India. And the business and industry will gain much more with greater consumption, greater urban, greater rural consumption, if there is greater sales momentum in the country. So I think it's not bad for business. It's not business is sacrificing. This is good for government. This is good for country. This is good for citizens. This is good for business.
Mr. Banerjee, let's look at this from a somewhat more macro standpoint. MSMEs clearly gained from this. Could you spell out how, and in terms of job creation, how could GST 2.0 be a game changer?
So a couple of quick points. One is if you see majority of the sectors that would benefit are labor-intensive sectors, be it textiles, be it many others. And they are all, these labor-intensive sectors are primarily small and mid-sized companies. So obviously the benefit goes a lot to them. Second, very critical is the ease of compliance. And I think MSMEs are one of the most biggest, one of the biggest challenges of the MSMEs are the type of paperwork that they had to do. I think today we really see a lot of compliance issues coming up, being addressed in the GST 2.0. The third part, which is again very important from the small companies' point of view, is you see a lot which is being given to the hands of the consumer, right? And these are consumer products again. And these are again, much of it is again going to the MSME sector. And that's again going to be a great boost for the MSME. And last, if I can say that, we talked about the dispute resolution mechanism. Again, MSMEs can't deal with such complex regulatory systems. MSME needs easier way of exchanging or rather filling up. So that these ease of sort of filling up taxation, ease of doing GST would obviously be able to make them focus more on a business rather than compliances, and so that these are great enablers for the MSME sector.
Dr. Trehan, when we started, you raised that very important point on how insurance premiums, will be much cheaper now. That the fact that GST has gone down for all sorts of insurance is huge. But do you believe that there needs to be a mindset in the country for people who have savings to actually invest in insurance? Do you believe that that is a challenge which somehow or the other needs to be overcome? It's not just enough to say that you're not going to be taxed on it. There has to be an understanding and a willingness to spend the money you've saved in investing in insurance.
You know, that realization, actually, if you go by the numbers, in the last 5 years, the insurance percentage of people insured by private insurance companies and even GIC companies, that's the government insurance companies, has gone up from 2% to now 12 to 15%. So yes, the recognition that if you can afford it, you should actually create a safety net for yourself, I think that realization is there already. Also, you must understand, towards the universal healthcare for every Indian who's stands on the soil of India, this Ayushman has been a big boost for them. So affordability for 500 million people eventually, it may not have reached yet, but 500 million people safety net, that by itself adds a lot of comfort to the public. Then you lay on top of that the government schemes, and then you lay on top of that private insurance. So you can say that very large proportion, about 80% of our population has now come in the safety net, which was till 5 years ago, when Ayushman was announced, it was dismal that 500 million people were totally out of the net, and they were actually, what the statistics was, that the cost of their health care was driving 2 to 4% of the people from above poverty line to below poverty line every year. So you know that that was a real emergency, and we have all contributed in our own way to make Ayushman successful. The second thing is, when you talk about employment, we need 1.8 million more beds, hospital beds in this country, to be able to reach even the medium level of healthcare that we can provide or our people deserve. Now the question really is, what has happened today, we've always said, we can pass on the cost to the public because it's important that they come in the safety net. The second thing is that we need to we are already the cheapest healthcare system in the world. So we need to continue this, and all the help that can come will only help the public.
Dr. Trehan, give us a reality check, and I'm asking you this question deliberately, to those who say, who is the government to decide that they should tax us for the tobacco that we consume? Because there are many who say that it's my choice, therefore why should the government interfere with my life?
No, you know, that's, I think it's a warped thinking. You know it's going to hurt you. You know you have got addicted to it, so you pay for it. And why not? So the point is that there are two parts to it. One is we know that it's not good for anybody. The other part is that yes, the government has the right to tax, try to discourage them. But what has happened is it's not discouraged people. No matter, I mean, you look at taxes here, 40%, you look at what's happening in the world. A pack of cigarettes in US is costing $10, $12 a pack, up from $2. But people are still buying, and smoking amongst the younger generation is only on the rise. So I don't know what the right formula is, but we keep telling people all the time, tobacco in any form is absolutely a no-no, no question.
Mr. Kamata, in terms of what we've seen among states in the country who've been so bitterly divided on accepting GST 1, they've had so many problems, they've had so many concerns. The fact that there has been relative acceptance of everything thus far, how is that critical in going forward and seeing this through?
See, first let us admit, GST 1 was better than VAT, for sure. VAT was like 20-30 assessments, so let us put it this way. The GST 1 was also better than VAT. GST 2 definitely is going to be better than VAT, than GST 1. And I somehow believe we are on the right track. We are trying to make India a consuming economy. The per capita consumption, if the best penetrated food category today is still 20 and 30%. I will give you one just figure. Imagine what can happen if, say, even 80-90% penetration, that one can get, the others are at 5 and 7. If they go to 30 and 40, we are talking of 3 times, 4 times the turnover of most Indian companies to happen in a very short time. And I somehow believe that food is somewhere where I think this has been more benefit than any other sector, because you can directly see the benefit to the consumer can see the benefit quickly. These are all fast moving goods. So I definitely see this is going to catalyze the industry's growth, and on employment, definitely it will help the agriculturist also get a better price, because we have empirical data to prove that the more food is processed, the farmer definitely realizes a better price for the crop. So forget the employment for the industry people. In my industry, probably 500 people are there. But look at the 5,000 farmers back who are supplying to me. Look at their livelihood, how it is improved when I buy from them at a better rate they can ever get from the mandi, and definitely better than what they throw on the street. So in one go, the consumer gets a better price, employment increases, the farmer gets a better price, and we become an economy more powerful than any other economy in the world. So I think it is a combination of all you have to see together as one package. And I believe this is a step towards that. This is the biggest business reform I have seen in the last few years. To be very frank, that's what it says. And this is the biggest business reform. There is no other bigger business reform than this. And we should once again all thank the government for the same.
Mr. Bhimani, refund delays has been an issue in the past. There is greater digitalization now in GST 2.0. Do you believe that the entire issue of refunds across, which impact different sectors in different ways, that's been addressed to a large extent?
Yeah, I think to some extent it has been addressed, Vishnu. There is this concept of provisional refunds, which was earlier available only in case of exports or zero-rated products. Now, I think if you have any inverted duty structure, you will get provisional refunds almost to 90%, except in case of capital goods or where you are consuming services, or if you have a product that has got zero GST. So I would say the only thing that you could argue is on capital goods or on services. If you are consuming, you will not get credits for that. But this is a very significant shift from what has happened in the past years. And we also have to remember when we look at these, and obviously a lot of people from industry on transition provisions, on inverted duty structures are making representations. But I think the government also has to balance its books. They also have to keep states together. And as we all know, the states' balance sheets are very stretched. And one of the key areas of income for states is GST. I think they have very other, they don't have that many areas for collecting revenues. So if you balance all that, I think this is a very significant shift as compared to where we were earlier. Does it mean that everything comes through? The answer is no. But substantial part, at least that which was locked up because of inverted duty structures of goods, I think that gets addressed, minus capital goods. I think that gets addressed.
Mr. Banerjee, a final question to you. The concern of states has always been that we are going to sustain losses, at least in the interim run. What we gain in the long term doesn't take away necessarily from the pain we feel now. How does one look at that pain concern presently in the hope that consumption rises to the point that this becomes profitable for states going forward?
What I mentioned in the beginning, which I come back to that, is we have to see the long run. We'll have to look at a long-term picture of the Indian economy becoming much more matured than what it is today. We have come a long way. Now, obviously, wherever we have seen taxes go down, at the end of the day, we've seen revenue increasing, demand picking up, profits going up, consumers benefiting. So it's an all-round benefit. And I don't think today the states, if you really look at the type of competition that the states are having in terms of drawing in more investments than the other, there is, while there will be noise, we are a democracy, and there will be noise, and everybody would think that there is a short-term gain to be looked at. But I think the maths are pretty clear, and we do look at a strong uptick in both revenues as well as investment and demand.
All right. Well, I'd like to thank you all very much for joining us. And it's just so wonderful to get this very nuanced sort of expression or understanding of the various sectors which all of these gentlemen, in a sense, represent. Mr. Banerjee represents all of the sectors. But thank you very much for being with us. We've got the Finance Minister of India, Nirmala Sitharaman, who's on her way and should be with us very, very soon. But ultimately, this is all about a resurgent India. It is about the incredible opportunity that consumption leaves us with in terms of achieving our broader economic vision. Thank you very much for being with us.
Thank you.
Thanks.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated.
Co-powered by National Stock Exchange. Innovation partner, Veka, India's largest selling UPVC window. Technology partner, Tally Prime, India's favorite business software. Brought to you by Apar Suraksha, जिस पे देश करे भरोसा.
Through unprecedented global challenges with resolve and vision. Under her leadership, GST has not only stabilized as one of the most transformative tax reforms in our history, but is now evolving into GST 2.0, a more simplified, technology-driven, and forward-looking framework that strengthens compliance, empowers business, and benefits consumers alike. It is only fitting then that she leads this special conversation, the Town Hall on Reforms for a Resurgent India. Ladies and gentlemen, please join me in extending a warm welcome to Honorable Finance Minister of India, Srimati Nirmala Sitharaman. She will be in conversation with NDTV's Editor-in-Chief and CEO, Rahul Kanwal.
Hello and welcome to the NDTV GST Conclave. It's now time for the moment you've all been waiting for. On the hot seat, ladies and gentlemen, arguably the second most popular person in our country right now. I say second only because I'm leaving the Prime Minister and her boss above her. Can we have a warm round of applause as we welcome to the NDTV GST Conclave India's Finance Minister Nirmala Sitharaman. Ma'am, welcome. This is the NDTV GST Conclave, and we've got people cutting across industry sectors and many of the Aam Aadmi itching and waiting. And I have a list of people waiting to ask you questions that extends beyond the number of chairs in this room. So thank you so much for taking out time. Industry, market watchers, economists, pundits, they all wait, Madam Finance Minister, for what is described as Big Bang reform. And that always often seems an endless wait. And then suddenly, almost without adequate warning and quite unexpectedly, reform which seemed very difficult to deliver because consensus was extremely difficult to achieve is delivered. It's there on the plate. Everyone's celebrating. This is being called a second Deepavali, which is what the Prime Minister wanted as well. And people are wondering, how did we do it? Is it a crisis that prompts massive reform in a country like India, that's just when everybody rallies to try and deliver? It happened at the time of Dr. Manmohan Singh. It's happened now. Big Bang reform, does it only get delivered when there are massive headwinds staring at us? Ma'am, welcome. That's your mic. And can we have a round of applause before the Finance Minister answers the question? Thank you.
Well, this one was in the making for almost 1.5 years. You had an election in between, and then soon after Prime Minister took charge for the third time, he did call me once and asked me if I'm working on GST. I said yes, I've started, and that was much before the last GST Council meeting, which was held in Rajasthan. And once again, I suppose, when we were preparing the budget this time, when the major announcement about income tax happened, even then he sort of once reminded me, saying, are you doing something on GST? Yes, I assured him even then. Then it was around May when I thought I had a worthy pack of reform measures that I could go to the PM and sort of brief him about it, saying this is what I have got as a major proposal, and the way in which it can work is that the center can give it as a proposal to the council itself. So that's how it happened. So it wasn't as if the crisis was on us because of the tariff measures, But this has been some time in the works.
Ma'am, the last time you delivered something which was quite as emphatic and brought India closer to global benchmarks is when you dramatically reduced the corporate tax rates in the country. And at that time, it didn't quite pan out the way you would have imagined for factors completely beyond your control. There was COVID, industry investment didn't quite take off in the way that you had calculated. How confident are you that this time round, the estimates or the hope that you have with the reduction in GST rates will actually get passed on to consumers and lead to a virtuous cycle of consumption which ultimately spurs the growth rate of the Indian economy, madam?
I'm very confident. And I say this because I have complete trust on our industry and on our traders. Because I think people know, because after all, industry or traders themselves are consumers as well. So when they know that across the board, rates have been brought down, and I've said this several times before, the guiding principles were for me looking at those which are daily consumption items for all Indian citizens, particularly for the middle class and the poor people, and then that which is aspirational items for the middle class, looking at farmers for their inputs, MSMEs because they are going to have to drive this Indian economy. Already they are about 40% in the engineering sector and so on. So we have looked at all these, I've mentioned 4, the 5th being those which are very critical for the Indian economy at large. So these 5 filters were the one with which I looked at rate rationalization. So I am of the impression that 140 crore Indians will have one or the other thing touching them from 22nd September, where they will see that the government's taxation reduction has come through. Government meaning the GST councils. So I'm very confident because if it touches 140 crore people and it is not one section here, one section there, the persons who have got to pass the tax forward to the consumer are all consumers themselves in the first place. So it will have to get transferred.
At the NDTV GST conclave, we had the finance minister of Punjab, we had the finance minister of Jharkhand. They were engaging with ministers from the BJP ruled states, and their argument was that their apprehension is that this impacts the compensation that they get. And as was the argument when the GST reform was brought in the first instance, they're hoping that the government can do more than you've said at the moment in terms of ensuring that the revenue that accrues to the states does not go down on account of the reforms that you've brought.
You're right in a way, but I would like to rephrase what you've said, just so that there's clarity. The first thing I did after coming out of this very crucial council meeting was to thank every one of the ministers who came from various different parties, various different states and so on, because but for everybody consenting, this wouldn't have come
Was
through.
it an acrimonious meeting, lots of dishum or not really?
No, not at all acrimonious. But of course there were rounds and rounds of putting everyone's views forward, and the council is quite used to that kind of a discussion going around in circles and not moving forward, but sometimes it does move forward. So that's one thing. But let's have some fundamental facts in our mind. The union's proposal going to this council was not opposed by anybody. And this they said even before coming to the GST council. They said we are in favor of the rate rationalization. This is a people-friendly proposal. This will affect positively all citizens of the country. To be fair to them, they all agreed on that. And where is the difference then? The difference is when they started speaking about what if my revenues go down? Who's going to give a protection? That's where the differences lie. So let's understand, to be fair to everybody, they were in favor of the proposal. They wanted people to get the benefit of rate reduction. That is one. Second, I've told you the differences as regards. The third one is about the question or the way in which you put the question forward. They were worried about the compensation. There's no compensation now. From 2022, no compensation is there. The cess in the name of compensation, cess that is getting collected, is going to repay the loan that was taken during COVID. So compensation to the states has already stopped as of June 30th, 2022. So compensation loss is not the issue. Revenue coming down is the issue, on which difference of opinion prevailed. And in that, my view was, and also some of the commentators outside were suggesting that states' revenues will come down. I would like to do a correction using this platform. In the GST Council, all of us are there together. I'm not a donor and states are not donees. We are sitting there saying we'll have to collect the GST, and the better efficient collection results in good collection totally, and therefore all of us can benefit from it. But if the collections come down, all our efficiencies will have to be improved so that evasions are controlled and we actually collect everything that we need to collect. It's not as if the center is sitting there with a huge big suitcase next to me that I can give money if the GST is not efficient in its collection. I'm equally the person who's going, or the center is equally going to lose revenue if the states are losing revenue. So in general, my approach is this GST Council and the nature of the council will have to be understood by everybody. Center versus state is not the point. All of us are together in it, and if states lose, I also lose, all of us will have to devise a way to improve collection.
One of NDTV's most iconic shows was We the People, and the idea really is to get we the people to ask questions to those in power. So I'll turn this now into a town hall format. We've got many doyens of Indian industry, we've got lots of people across sectors here as well, and I'll start with Rajiv Memani, Chief of Ernst & Young in India, President this year of the CII, Confederation of Indian Industry. We'll get him to ask the first question. We've got many stars of Indian television and business journalism here. They'll be asking questions as well. Ma'am hasn't asked even once, what question will you ask me? And I have no idea what people are going to ask either. So do applaud the Finance Minister for that as well. Thank you, ma'am. Here, Rajiv ji.
Thank you very much, ma'am. Reduction in corporate tax rate, reduction in personal tax, modification of the new Income Tax Act, and this one probably the most transformational. So I do want, India today has got one of the most competitive tax regimes as compared to most countries which have similar economic activity. So on behalf of industry, first let me just thank you profusely for making this happen. I think this is really it really reposes the faith, as you rightly said, on industry, and also the trust that you have put in. And the beauty of this is, ma'am, at least the way I see it, is it's not just rate reduction, but the clarity with which you have brought two rates, the structural reforms that have been done, and the speed which it has come and the way you have rolled it out is
you
really
seem
fantastic.
quite surprised with the speed, Mr. Memani.
I think everyone is surprised, because this touches so many things. So I'm sure a lot of work would have done, because every one product rolls into the other product.
What else would you like to see happen with such speed?
No, So let me first finish. And ma'am, you've not. I have two questions before Rahul interrupts me or needles me. The first one is, you've not brought in the anti-profiteering clause, at least not till now. And you did mention that you have a lot of faith in industry. I would really want you to articulate, if you can, what you would want from industry. This is a great platform, and I think it'll be great to get your perspective on that. The second is, as compensation cess gradually phases out, did you want to time this around the fact that when compensation cess is also phasing out, so that at least the impact on states will be much lesser, because the amount of compensation cess that was being collected was not going to states. It was mainly center using that money to repay the loans. And to some extent, where the rates haven't moved back, that money will now be available for distribution to states as well. So I just wanted to ask you that question.
On the compensation, I want a bit of a clarity. Is it timed with the compensation? Yeah, in somewhat. Are you timing it around the compensation cess? Yes and no. Yes, because June 30th, 2022, compensation collection for the purpose of compensating the states ended. It had to be extended because in 2020 and partly 21, we couldn't give the states the compensation because we couldn't collect enough revenue. We had to borrow, and in order to pay the borrowing back, we had to extend the collection. Now, at least in 2 GST council meetings earlier, we had already said that, first of all, extension was till 31st March 2026, by which time it was assessed that we would be able to repay the loan. Now, sometime 2 GST councils before Rajasthan itself, we had said GST collection for the sake of paying back loan would probably end even earlier than March 2026. Subsequent to Rajasthan, our assessment gave us the feeling that probably we'll end it this calendar year itself and not wait till 26. And therefore, if this calendar year we collect as much as we need to repay the loan, we had no business to collect it even one day after that. So we needed to get the clearance from the council that post repaying the cess, what do we do? Which means that is why you had a GOM looking at it, and also then the rate rationalization GOM was also working. To the limited purpose of decision on the compensation cess, the GOM on compensation cess decided, but what to do about the money which was collected in the name of cess? Would it be replowed? Would it be reapplied? All that was to become a part of the rate rationalization GOM. So that decision was put to the GOM looking at rate rationalization. So that is why it had to be time somewhere to keep in mind that by the time the GST compensation cess comes to an end, we should know what happens to those items on which the cess was being levied. Therefore, we had to keep it somewhere closer to this date.
Okay, we'll take more questions. I've got Dr. Naresh Trehan here, one of India's most iconic, well-known doctors. Doc, your question for the Finance Minister.
So first of all, Honorable Finance Minister, I can only echo a big thank for the public in accessing healthcare by your very bold move.
Thank you.
So the question basically is right now that we have benefited majorly from the GST on insurance premiums going, because that made it very expensive for people on top of what was already their cost. So affordability for insurance will definitely increase, and more people we are expecting to come in the insured net. Second, you have taken away the GST on life-saving drugs, and also generally on pharmaceuticals, there's been reduced from 12 to 18% to 5%. So this is a big help in the sense it will reduce our cost of acquisition, and then we should be able to pass it on to the patient and the families. The third thing is that it also helps us to create more hospitals and the employment that we do is about 5 to 6 persons or healthcare workers per bed that we create. We need 1.8 million more beds in the next 10 to 15 years for India. So it can essentially create jobs for 10 to 15 million people as we move forward. So all this will help us to move forward. What I can request for the future is in your GST reform 3.0, that we still don't get a set-off on the GST that we pay, unlike most other sectors. That has been a long-standing request to you, that you can look at it. You've already done enough, but maybe in a subsequent move. If that is, we can get the set off, it'll help us to even keep the cost under control. As it is, the cost of healthcare delivery in India, comparable to the rest of the world, or even better in some cases, is 1/10 to 1/5 of what is the world can offer. So we are in good shape as far as our delivery system is concerned. Whatever help comes your way should be passed on to the public so that more and more people can access us. Thank you very much for this whole thing, and my request stays pending. Thank you.
Quite literally, Doc ka dil mange more.
Diagnostic equipments have also come down.
Yeah, I didn't have like every...
I understand. Okay, so I've got Chandrajit Banerjee, Director General at CII. He'll ask the next question. I have a question for you, Sebi, as you ask your question to the Finance Minister, which is essentially this. The fact that when Madam Finance Minister made the big reduction in corporate taxation, one of the hopes you had and others had, what this would lead to a capex cycle, that investments would happen, and frankly, for various reasons which have been discussed ad nauseum, it didn't happen. How are you working with India Inc. and all the companies you constantly talk to towards ensuring what the Finance Minister has been saying constantly, that starting the 22nd of September itself, the entire benefit should be passed on? Because yes, prices are rising, there is inflation, input costs are going up. So how do you ensure that companies don't say a part of it needs to be offset against our own input prices and therefore we can't pass it all on to the customer? So first respond to my question and then your question to the Finance Minister.
First, I will want to also join in congratulating the Honorable Finance Minister for GST 2.0, ma'am. Thank you very much. To respond to Rahul, ma'am, you know that industry has pledged, even in the panels preceding this important session, industry after industry, sectors after sectors were pledging that it would benefit the industry if they pass it on to the consumer. And as you also said a little while ago, that every industry is also a consumer. So we see that happening. We see that happening definitely, Rahul. And of course, institutions like ours will have to play a vital role in seeing that the benefits are passed down to the consumer. Ma'am, having said that, GST 2.0 is being celebrated. You also talked about how you did it easy. It was 8 years and we have done it once again. You didn't talk about what difficulties you faced. And is it that there were no difficulties? What went on in those closed rooms?
Because we had a very acrimonious debate on the stage between the finance ministers, and yet so quickly on day one itself, you came out and said it's all done. There was that late evening press conference. There was talk in Delhi, I'm sure Mr. Banerjee and Rajiv and everybody heard that this could go over to a third day, because initially the apprehension was that consensus would be difficult to find.
So something which is not yet in the public domain, ma'am, in terms of the difficulties and the navigations that you had to do to make this really happen, it wouldn't have been so easy.
No, I think to be fair to the finance ministers, they were all on board about the rate rationalization and the entire package which the union government gave. At no point in time there was acrimony. But certainly the states were repeating the argument, and some of them more than 2 times, let us say, about what happens when our revenue goes down. So once it was clear that all of us are on the same page about the proposal per se, there was no need on that score to talk anymore. But on the question of revenues going down, who's going to fill it all up and all that, I said I'm willing to sit the next day, because anyway, it was scheduled, the council meeting was scheduled for 2 days. But I think gradually people realized that citizens are waiting to hear that the council has come out saying, yes, we agree for the rate reduction. And issues of how revenue dipping should be taken care of are not that which the people are waiting for. I mean, this was not said in so many words, but it could be sensed in the House. So to be fair to the state's finance ministers, having said their piece more than once, even those states who thought this will result in a dip in their revenue, as much as I kept saying my revenue also would dip, I think they all saw the point and agreed.
Nobody wants to stand in the way of giving a benefit to the Aam Aadmi, and therefore...
That's right. So everyone came around. So
it's all about votes at the end. As much as it is about the economy, it's about votes. So there's a lot of talk, Madam Finance Minister, about whether this spurs consumption and whether it spurs just behaviorally consumers going out and buying more. So I've got Peruz Kambata, he runs Rasna. Does this get people to buy, you would naturally hope more Rasna, but do you have like a arithmetic conversion for this because of the reduction in GST across different categories? How do you see this impact India's consumption story, which over several quarters hasn't been quite as inspiring as the Finance Minister and everyone else would like it to be?
First, I would also like in thanking you, because what you have done for the food sector is unimaginable. You actually brought the whole food sector in 5%. And all the earlier issues of classification are gone with one stroke, and nobody was expecting. I was expecting lot P to be the 18, forget 40, everything is in the 5. And the direct benefit is not only to the consumer. Consumer obviously is going to benefit because we have pledged, I pledged in the earlier session, we are going to give more than the benefit. Because I'll tell you why we want to give.
How will you give more than the benefit?
Because as it is, we are always looking at giving better to the consumer in terms of values. And I do believe that this is going to have a ripple effect on the economy. Prices are going to come down. As it is, I am seeing some prices going down. So coupled with that and the fact that we also would like to rationalize our retail margins and the benefit of the taxes GST on the retail margins, if you calculate, it will be slightly better we will be able to give than what has come to us. So this is my personal belief. Having said that, I think the major benefit is not to that. The major benefit is to the farmer back, because we buy at a better price from the farmer gets a better price, and the farmer himself is the consumer. And the farmer consumes more the same product. So I think it is the whole circle which I want to see. And the best benefit will come in the agri and the food and the dairy sector. So I would like to thank you very much for the same.
What's your question, sir?
And as regards questions, my question is more towards the need for, I somehow believe that the thing now we have to move is into procedural issues. And I still believe that everything goes to a court. And I still believe that we need an alternate dispute ADR mechanism at the ground level. And why I'm saying it is important is you like it or not.
Reduce GST procedures.
Yes, I think now see, we always watch more. So I do believe that ADR and procedure is something, of course, this GST2 does take care of it to an extent, but I think this is something now when you have done so much for taxes, I want something to be more done on this. And one thing is,
if you keep
on
questions shorter.
On ADR, we are talking of the old cases. That the old cases, legacy cases, if we can find a quicker samadhan, procedure ADR is my question, how will you go to it?
Okay.
That's okay. I've heard him.
She's saying this is good feedback in any case, and therefore now we have to see what we can do to try and reduce procedures. We've got the man who runs Amul, Jayan Mehta, is here. Can I get Mr. Mehta to ask the next question? Just keep your questions short so we can take as many questions as possible. Go for it, sir.
Thank you so much, ma'am. All our lives we heard one very important quote or a phrase. The only thing certain in life is death and taxes. I'm now worried for the 1.5 billion Indians, because taxes definitely are now out of the picture. Direct tax and the indirect tax, both you have simplified so much. And hearing Dr. Trehan, our life is also in safe hands. On behalf of all the milk producers of the country, and there are as many as 80 million farmers associated with dairy in this country, we thank you and the Honorable Prime Minister for this wonderful initiative. As Piruz told, it is definitely going to help all the milk producers, and particularly, ma'am, all the consumers are primarily the women. So through your hands, this decision, which is helping women milk producers and women consumers, is going to be a landmark decision. Usually this is not the time I would have asked any question, because आपने सब कुछ दे दिया है. But since these marks for class participation, I may just make a small request.
Blame me. Yes, go on.
Ma'am, milk is the largest agricultural crop of India. But the income from milk is not exempt from taxation. So as India moves towards White Revolution 2.0, more and more women are actually putting their efforts into increasing the milk production. If their incomes are going above the 12 lakh slab that you announced this year, it would really benefit if you are able to actually treat milk now as an agricultural crop, and with your wisdom, benefit large number of women milk producers in the coming decades. Thank you so much.
Ma'am is taking some of this just as feedback, because you can't possibly expect her to make tax policy on including or excluding new items. I saw Sanjeev Bikhchandani, and there's a lot of talk about the impact this has potentially on employment, jobs. So from your lens, Sanjeev, and given everything that you've done, your question to the Finance Minister, and whether you see a reduction in GST rates potentially having a ripple effect on job creation and employment?
No, I think anything that simplifies and makes it less complex is great. It makes it easier to do business, and therefore this simplification of slabs is great. I think anything that reduces costs, whether input costs or for the consumer, is great because that will give a boost to demand and therefore growth. And as the companies grow, they'll employ more people. I've spoken to several startups in the last 2 days. The only thing they told me was that, यार, हमारा आउटपुट पे टैक्स कम हो गया है, बट इनपुट पे तो उतना ही है, तो I now have to apply for input tax credit refund, and that may have complexities you don't know about. So they are still grappling with that.
Okay, ma'am, there are two trends that are playing out parallelly at this time. You've got some impetus in the economy on account of the GST rate cuts that you've delivered, and then there is the headwind that plays itself out around American President Donald Trump and the tariff wave that he's sending towards India. And the economy, as you know well, is so much about animal spirits and how people feel, certainty, predictability, investment cycles. Do you think some of the cheer that you're trying to spread around Diwali is frankly just getting negated by factors so far across which you can't control and completely unpredictable in terms of when they get resolved, how they get resolved, and if they get resolved?
See, the GST reform was not triggered by the tariff. As I said, it was in the making. One. Second, the US tariff hits those exporters who export to many countries in the world and also to the US. Surely, I'm not undermining the impact of a 50% tariff, but it hits exporters who are exposed to the US, who have a market access and who export to US. In fact, I've been saying that many of these exporters were getting hit by the 50% tariff. Government is doing some kind of a work to get something so that we can, support them in some form or the other. But the inputs to making that policy or a scheme or designing a scheme will also depend on those hit by the 50% tariff and telling us to what extent they are exposed and what is the actual loss or damage because of the 50%. So by industry, first of all, we need to have an assessment of those who are exporting to the US and to what extent of their total exports and what is the hit. That is
by when
also
do you hope
some.
To have this package ready?
That will be a vital input for making the package. But even otherwise, some inputs have been coming and government is working.
But it's not just about companies exporting to the United States. So you're also trying so hard to attract foreign direct investment into India. And as companies look at setting manufacturing bases up, and so many were thinking about it, work was in the pipeline. Now when the American president holds this tariff sword over their heads, are you concerned that this potentially jeopardizes, impacts the prospects of long-term foreign direct investment coming into the India story? Because I don't want to take any one company and single that out, but so many companies may have scaled up their manufacturing in India in the hope of exporting to the US and elsewhere. Now they wonder, hey, just let's wait it out. Let's see what happens.
We will, that possibility exists. But from our side, we are keeping all the doors open, if I can use that expression. The diplomatic teams are engaging with the US. The trade negotiations can still go on. So we don't, from our side, we are not making anything difficult for others, one. And second, FDI has also come through various other routes. They come through investment, wealth funds, sovereign wealth funds. They also come through various other destinations from where funds are managed. So I'm not saying this is not going to have a bearing. It will have a bearing, but we are trying to offset it. We are not engaging with other countries, other FDI sources. So Work is on, I can assure that much.
Okay. We'll take some questions from the NDTV team as well. I've got Vasudha Venugopal. She's the editor for politics at NDTV. She'll take the next question. Go for it, Vasudha.
Thank you, Rahul. Ma'am, I'm going to ask you a political question and about a state that we both come from, Tamil Nadu. You were in Tamil Nadu recently, and I want to understand from you, what are the prospects of the BJP-AIDMK alliance? And considering that there have been voices from the AIDMK, Sengotian specifically, do you see that impacting the prospects of the AIDMK-BJP alliance?
Well, post the Lok Sabha election, BJP has been very keen to get back its NDA alliance to strength. And therefore, every effort was made to get all the allies back. And there is one clear unanimity among all members of the NDA alliance, and to a large extent the people of Tamil Nadu, that DMK should not come back to power in 26. Why is that unanimity? Because of the extent to which things are going on in Tamil Nadu about not just the liquor policy, but also the drugs which have gotten into the society. Tamil Nadu has never seen this kind of a situation. And above all, it is also very clear that even the DMK is far removed from its own ideology. If you want to believe that its own ideology was social justice, which is what they normally say. We are building a society which is going to have social, equanimity. Everybody is going to be equal and people are not going to be treated up and down or higher or lower and so on. Tamil Nadu has seen one of the highest of honor killings. Villages which are dominated by scheduled castes, for instance, have had unbelievable crime. If I can tell you here that in one particular village where SCs are the majority, from the drinking water source from where they take their domestic, for use in their homes, that was polluted with human excreta. And the government has not even till today taken concrete action against those who have done that. Similarly, in another one village, I think it's called Kallakurchi, spurious liquor has killed women and adults in the village. You don't have one solid action. They may say, yeah, we filed an FIR, we've done this, but concrete action is missing. And similar to what happened in that RG Kar medical hospital come college. Tamil Nadu Anna University had a similar attack on a woman student. And it so happens that the culprit was so closely associated with the first family ruling Tamil Nadu. So today there is near unanimity among people, among political parties. You may be in an alliance or you may be out of it. Clear understanding that another 5 years for Tamil Nadu with DMK is going to make the state go backwards. So that unanimity among the NDA members is also recognized, and all of us have come together on that score. I don't want to comment on the internal disturbances or whatever you may call of the ADMK. I'm sure they will resolve it for themselves.
Okay, I'll go to Tamanna Inamdar. She's the managing editor at NDTV Profit, and she's tracking the stock markets very closely. So Tamanna, here you go.
Ma'am, since we've started with the queue of the stock markets, I think the big question right now is why are stock markets not responding maybe with full fervor as they should to the GST cuts? They have been larger than expected across more areas than expected. There are many theories, but I wanted to know if you had any thoughts on this, because if you look at the triple whammy of good news, income tax cuts, 7.8% on GDP, take that those who say dead economy, and then you have these GST cuts. Markets should be cheering. Do you have any thoughts on this?
Well, I think markets always react to so many different other factors as well. The global uncertainty is definitely dominating, and therefore we'll have to see. But I thought today, for instance, the market has actually done well. Yes. So,
Does it play on your mind when you're at work or once you're at home? the way markets are responding and the impact you would expect your announcement would have on the stock market versus what's actually happening?
No, I do observe the market, but I don't think I can measure the reforms based on the performance of the market. I would want the reforms to go down well within the country with our citizens. Markets are within the country, no doubt, but I would rather have that gain ground. So I watch the markets, but I don't think I'm very worried about immediate reaction from the market on these.
Does it lift or sink your mood? Just I'm psychologically kind of wondering.
On market-related matters, Rahul, no question will get any better answer from me.
That's true. Okay. As I said, your level of if this was appraisal cycle in corporate India, ma'am would have like rockstar appraisals because the popularity in a 360 appraisal would be extremely high. So Akhilesh Sharma has the next question. Go for it, Akhilesh.
नमस्ते मैम, अभी हम जब बात कर रहे हैं तो उपराष्ट्रपति चुनाव के लिए वोटों की गिनती हो रही है और जैसे आप जानती हैं कि अभी तक भारत को कभी कोई महिला उपराष्ट्रपति नहीं मिली। एक दूसरा चुनाव है जो बीजेपी के अध्यक्ष का है, काफ़ी लंबे समय से पेंडिंग है। बीजेपी को भी अभी तक कोई महिला अध्यक्ष नहीं मिली है। क्या ये समय आ गया कि बीजेपी को कोई महिला अध्यक्ष मिले?
That's the trickiest question that's come. Yes, ma'am. Would you like to be the new BJP president?
Whoever becomes the president of BJP, all of us will work under her or him. We are happy with that.
Do you think it is time that the BJP have a woman president?
You know, I like the media which goes on asking about us. You know, is it time for BJP? Is it time for the BJP to do this, that? BJP was the first party to give 33% reservation in every one of its organization down to the Panchayat to up to the national executive. And I'm a beneficiary of it. I've come into the national executive of BJP because there was reservation for women. So on women, BJP is never behind. And for that matter, the reservation bill, women's reservation bill, being the first one in the new parliament, is also because of BJP.
You know, as we try and build out, ladies and gentlemen, a new NDTV, it's always good to look back at the past as well. And very interestingly, we have in the audience the former chief executive of NDTV who happened to be here, madam, to moderate a session at another event which was taking place nearby. And because this was an NDTV event, Vikram Chandra couldn't help and we invited him to come and just join us here. So Vikram, here you go. NDTV, the finance minister, your question next.
Thanks a lot, Rahul. It's interesting to be holding this mic after 7 years, but madam, it was great to get a chance to come here and talk to you. Big bang reforms in GST, ma'am, but of course when it comes to reform, dil mange more, and I know you're working on other next-gen reforms. So there's a lot of interest in what they are, which areas they will be covering, will it be deregulation, and will they also be big bang?
Well, I should also recall the number of times I've attended Vikram Chandra in NDTV, in his program during those days when I was spokesperson. I do recall that now before you. Well, on reforms, there's no point in me listing out anything at all. Prime Minister Modi is known for reforms. Even during COVID, he didn't sit back and say we should take care of the people, vaccination and things, forget the economy. No, even that time we came up with several reform steps. And therefore, reform is never off the agenda. PM is always there saying push more, get more reforms done. So there will be a lot more. And from my ministry, I will continue to do the work that we need to do, whether it is disinvestment, whether you're looking at land monetization, asset monetization, all that will go on. Yes, on the financial and non-financial regulator, as I announced in the budget, there are 4 committees now, one headed by the Home Minister, one headed by the Defense Minister, and 2 others, one headed by the Chief Cabinet Secretary and one by the former Cabinet Secretary. So there are a lot of activities happening now to get those streamlined and to push forward with reforms. There will be a lot more action.
Thank you for that, Finance Minister. There are folks from the hotel and restaurant industry, right? So I just want to take a question from the folks from the restaurant industry. And go ahead, please. Introduce yourself and then ask your question.
Namaskar, Minister. My name is Rahul Singh. I'm the trustee for NRAI, which stands for the National Restaurant Association of India. It's the organized sector for the restaurants. We do contribute 2% to the GDP and one of the largest employers in the country. Question I'll come to. Just hold on. Okay. So just bringing myself there, right? So first, we want to thank you because the parantha debate is over, as we know. You know, that is a big debate, that parantha should be taxed at whatever. No, I like both. Depends on the time of the day. The other is that, yes, we'll continue to employ a lot of people because AI can't, cook or serve for sure. So that's a good thing that we'll continue doing. There is only one request that we have, and it's kind of a question if it can be done that way. Our largest cost to our restaurant is actually two landlords. So one's the landlord, which is physical, which is the rent. The other is the Zomatos and the Swiggis, which are the digital landlords. And they charge us 18% tax, GST. We don't get an input tax for that. And we've not got input tax since 2017. So our request is, because that is more than the food cost, please do something about it. Make that part maybe 5%. At least when they charge us, because that's not being set off, and that, like Dr. Trehan said, that set off is important. So that's the request. The question is, we know constitutionally liquor for human consumption is a state subject, and you just mentioned the friction, the state, one nation, one price. Can we bring liquor for human consumption in GST?
Liquor for human consumption sounds deeper than it actually is. But yes, Madam Finance Minister, why don't you respond on the issue of alcohol and on the issue subsequently of petroleum products? But can liquor ever come under GST? That's the question.
That depends on the states. It's not for me to answer that. Liquor will have to depend on the states. I can't even comment on it. Yes, Rahul.
Okay. There's a gentleman from the Auto Dealers Association. They've got lots of pent-up inventory. So got deep discounts, pent-up industry, and he has a question also. So go on.
So, Madam Finance Minister, I'm Venkesh Gulati representing FADA, Federation of Automobile Dealer Association. So first, thank you. Compensation cess has been absolved or finished, and all the issues, legal compliances issues were major in dealers, which is over now. But it has created one more issue. So overall the GST, all the OEMs, like Mahindra has already started giving the post-GST price from today, even before 22nd, Audi and Skoda also. So as from the auto industry, we commit, we'll pass on everything. But one major thing with this reform, which has created an issue with the automobile dealers, which are working at paper-thin 3% margin, is the cess input, what is still left in the GST and ledger. So from 22nd onward, whatever cess input is left for a dealer will not be able to adjust as per our information as of today. There has been questions on the evening.
The question. Yes, ma'am.
Yeah, so.
See, the only answer I can give at this stage is for you all to please look at the FAQs that we've put out for every sector. I think on the day we had the press meet, in fact, the media themselves were given about 75 pages as press release, because every question that a journalist might have in her or his mind can be answered. So over and above that, we put on the website FAQs addressing all the questions that might run in the minds of anybody who's a part of this GST. So I'm sure I would only refer to you at this moment to go back to the FAQ, see it. It has answers for every question.
And while we do feel bad for automobile dealers because it's an awkward situation to be in, from the lens of the customer, it's not an unhappy situation, right? Because you've got deeper discounts than you ever will. And just linked to that, I think the executive director of Maruti Suzuki is here as well. So yes, go ahead and ask your question. And the question of passing on the benefits to the customer and your question to the finance minister. Go on. Okay.
Ma'am, honestly, you've done so much that it's now our time to respond. Obviously, it's a religion at Maruti, and I think our peer group within industry to pass on 100%. There is absolutely no doubt that a single paisa should be retained by the manufacturer. It's a gift from the government to the consumer of India. It's the consumer's day, should be passed on. Thanks. Of course, now it is for industry to respond. And in fact, we are now worried about investments. We might have to accelerate our capex cycle because the demand surge that may come, we want to be on the right side of the consumer and start producing.
Are you feeling a demand surge?
Yeah, in fact, we know the pulse of the customer. So we certainly will have a demand surge. The projection that we have given out is, for example, small cars had some structural issues. They were declining at about 6% per annum. From a -6, we think a swing to +10% growth. That is our initial projection. We may be surprised positively, we don't know. But certainly we are accelerating our new plants and investments in anticipation of more demand. And,
okay. Ma'am, now there are two things. One, of course, the fact that you'd want the companies like Maruti, the Mahindras, etc., to spend more on building capacities here. Then the fear that part of this production was meant for exports. And it comes back to that point that till the time the uncertainty around tariffs settles, they're sinking in this infrastructure spend without knowing fully whether they'll be able to export in a competitive fashion or not. So there is that, I mean, there's nothing you can do about it, but there is that factor which also plays its out simultaneously.
That may be so, but I quite appreciate Maruti's commitment to transfer or pass on the tax reduction to their consumer. And that is a spirit which I think the people of India are also expecting, because eventually you asked Maruti the question that do you see a surge? I'll give you one input from my side. Much before, once the GST union government's proposal, rate reduction were all now coming out in trickles, much before the GST council met, so many industries called up to say, hey, would you please take this call sooner? Because those people who come to us are no longer ready to place an order. They're saying likely there is a reduction, so we shall wait. So you're also getting a situation from the other side saying surge, but before that they held back. So obviously a surge.
हमने भी wait किया है. I think lots of people here, I don't know if anybody is planning to buy a car, but many people decided to wait कि देख लेते हैं मैम क्या करती है फिर decide करते हैं. So, can I just take some more questions from people? Ma'am, I have, in the economic survey, the chief economic advisor spoke about relooking investments from China. Now, given that the Prime Minister went there was a good meeting with Chinese President Xi Jinping, how do you as Finance Minister view the contentious issue of investment coming from China, the sectors where you currently have guardrails, and given what we're seeing with the United States and the slight thaw that we're seeing with Beijing, how do you see this play out in the weeks and months to come?
Well, I think it's important. We will have to be negotiating for greater market access to Indian products in China, if at all there is a trade talk. About investment, the PN3 guides us, the press note 3 guides us. It's also true that we very clearly said investments from neighborhood we are not entertaining, particularly during and immediately after the Galvan crisis. But the PN3 has also been made a bit flexible as regards domain experts, technicians who will have to come to complete projects which are already in the ground. Now, if projects are already on the ground and they're not getting completed because experts were not available, we had to that extent, allow experts to come. As regards investments, which is your specific question, are we flexing it? Are we making it easier? I think the concerned departments will have to talk about it and then come back to take a call on it.
Are you less wary than you were earlier, just philosophically and ideologically?
No, I would continue to be cautious.
Interesting. Vishnu Shom has a question for you. Vishnu.
That's not to deter any decision in favor.
No,
caution is a word.
Of course, absolutely.
Ma'am, I had the opportunity of meeting the Chinese ambassador yesterday. He spoke to a few journalists. And he's called for a fair, equitable business environment in India. We're in the midst of a reset in ties with China. I don't know if the word reset is accurate or not. Some suggest that it may be. Do you believe that, do you welcome greater Chinese involvement in our economy? And what about rare earths, which is found mention? Is that not critical for us to achieve our economic goals?
No, No, it is absolutely critical to achieve our economic goals, no doubt. And I would want to have trading relationship with every country, investments to be attracted from any country, no doubt. But I'm just getting into the detail. If you ask me one step more, get into the granular detail. These are my thoughts. I need greater market access as much as opening up my market for you, for anybody, for any country. In a way, isn't that the question of what negotiations with the US, with the EU is all about? Give us greater access and trade surplus. There are many countries which have trade surplus as against vis-a-vis United States. So we also have a huge deficit against China. So when you put India's interest on the top, there are aspects which have to be said and negotiated on. That's the point I'd like to highlight.
Okay, I said we'll give some of the leading voices of India Inc. an opportunity. I also want to move back and give some folks sitting towards the seats at the back the opportunity. Go on, please.
Firstly, ma'am, I'll take the opportunity to join all the senior dignitaries in thanking you for bringing us an early Diwali gift this year in the form of 2.0. The question is very quick. I'm personally a startup founder. I have benefited from the startup benefits that the government has prevailed personally because I have created a product company out of AI. But my question is very short and simple. Today's youth in India is now aspiring to make the tech giants now come out of India. And whilst there's a lot that we've already received in the 2.0, compliance is something where it's slightly on the heavier side. And with total number of startups that are coming up, and startup founders are always working on the thinnest of margins. Is there something that we can expect in the coming times where towards the compliances and services side also the regimes can get slightly more compressed so that we can probably think of not using foreign AIs and creating our own chat GPTs in India itself in the coming times to come?
When you say compliance, I don't know what you're referring to, because as many compliance-related issues that may pertain to me, central government, we are actively engaged with the stakeholders to say, tell us where you want to remove something, we are willing. Hasn't the last 2 terms of Prime Minister Modi seen so many archaic acts being removed, compliance conditions being removed? We are always on course for it. But the problem sometimes is, I'm not shifting the blame, startups are located somewhere in some state, because union government doesn't have its territory except for union territories which are known. But if the compliance pertains to a state regulation or a state law, that is for the respective states to deal with. That burdens you equally. I accept that point. But even states will have to take up this thing about making it easy for startups. We are still ready. As many as the issues that you will draw to my attention, I will work on them. That will continue.
Ma'am, there was a question that somebody sent on social media. I want to ask you this. This is to do with real money gaming. The government brought a new law which bans real money gaming. And the question is on behavior. And we had the same question for you when you did the same with cryptocurrency. The government comes with an iron fist and comes out with a law. It doesn't really change youth behavior. A lot of those who are buying cryptocurrencies in India move some of those investments abroad through VPN. They still continue to trade, and a lot of the Web 3.0 companies feel they're having to move to Dubai, move elsewhere, but they're still trying to do the same thing, and a lot of that money is coming from India. The concern around real money gaming is the same, that while and there's a moral reason why you've done what you have, but it doesn't change behavior, and therefore, instead of Indian startup founders benefiting from the surge in real money gaming, the benefit just gets exported to somebody in some other geography who's making the same money with people who are based out of India. How do you look at this argument?
So it's for us, Rahul, to say we encourage money gaming at any cost. And even if citizens are calling up the PMO, sending emails to many of us, SMSs, WhatsApps, to saying my family is getting ruined, does the government care or not? And that is why, whether you recall my conversations on crypto, which you are doing now, or whether this one, we are not against the technology. We are not against the technology which builds up these games. That is why entertainment related games, online gaming, all that is fine. But when money is involved and betting comes into the place, or people are bidding money for greater game purposes, many families have lost their monies. And many middle class families are saying, what's happening? Our children are playing it thinking it's free, and it is temptingly free to enter. And after that, you are unknowingly walking into a payment scheme of things. Families have really become very agitated and wanted government to take an action. We reflect the people's opinion. Money gamings are going outside of the country. Well, we are not against the technology or bringing in entertainment through digital games. But gambling or bidding for games through online is worrisome. And it's not just Government of India. Many states have already banned it. Why have they done it? So I think we'll have to draw some fine line somewhere.
Madam Finance Minister, we are out of time. This just so happens to have been my first broadcast at NDTV. And we're thinking about finding a special opportunity to come and do this first broadcast. I don't think we could have done anything more special. So on behalf of the NDTV team and on behalf of everyone who's joined us here, can we have a very warm round of applause for Union Finance Minister Nirmala Sitharaman for coming into this setting and for taking questions from we the people and from all of us, all of you who came here today to join this town hall. Thank you so much for taking our time. Thank you, Madam Finance Minister. Wish you a happy Diwali, a double Diwali, and before that, happy Navratras. And thank you for making it so special for everyone. Thank you, ma'am.
Thank you so much, ma'am. Could I request you to stay on stage for the editorial leadership of NDTV to join us here for a photo op, please?
Come. Everyone's moving very slowly. Come, Shimi, come. Come, Vasu. Mohit. Thank you for taking our time, no? Thank you.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
and so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
We see the problem.
Co-powered by National Stock Exchange. Innovation partner, Veka, India's largest selling UPVC window. Technology partner, Tally Prime, India's favorite business software. Brought to you by अपार सुरक्षा, जिस पे देश करे भरोसा.
Them, my colleague Tamanna Inamdar.
Okay, that's a truly tough act to follow. Finance Minister and her sharp answers have had everyone floored. We'll just give a little bit of time. I think Mr. Mehta is around. All right, what are we talking about today? You know why India has been able to stand up to tariffs? Why India has been relatively resilient during the biggest global financial crisis in the last several decades? Well, the answer is consumption. Consumption is the bedrock of our economy, and it's a domestic consumption which fuels us. Consumption in India may have been sluggish in recent quarters, weighed down by inflation and weak consumer sentiment, but it is no doubt what is keeping us going. Now, with the government's bold GST reforms, simplifying the rate structure, lowering taxes on daily use items and reducing compliance hurdles, there's renewed optimism. These changes are designed to put more money in consumers' hands, boost affordability, and revive demand at a critical juncture. Joining us to unpack how these reforms could reshape consumption patterns are industry stalwarts. I'm speaking today with Rahul Bharti, Executive Director, Maruti Suzuki. We will be joined shortly by Dr. Jayan Mehta, Managing Director, GCMMF, that's Amul, as we all know and love it, and Sanjeev Bhikchandani, Founder and Executive Vice Chairman, Info Edge India. Let's begin. Gentlemen, it was excellent to hear some of your questions to the Finance Minister as well. We've had that opportunity to hear from her wisdom and thought behind what government wants to achieve. What's really clear is the ball is now in your court. And when I say your, I mean industry. Industry has to take that mandate forward and make it easier for people to consume. I'm going to start with you, sir, Mr. Bharti, on how Maruti plans to do that. Yes, the cuts will be passed on. You've made a commitment on the NDTV platform that you see demand surging and coming in as high as 12%. How do you see this really boosting the urge and the ability for more Indians, especially first-time buyers, to buy their first car?
Absolutely. I couldn't agree more with you. It's the domestic consumption that gives the resilience to India to weather all these storms and headwinds like tariffs, etc. And again, agree with you that the government has done a major, bold reform, a historic reform, I would say. They have given a major gift to the consumer of India across sectors, across segments. And most of these are mass consumption items. I mean, food, medicines, agri, mobility, all segments of mobilities, trucks, buses, three-wheelers. small cars, two-wheelers. So, of course, now the first, of course, is, as we mentioned, it is industry's absolute imperative that we pass on 100% of this benefit, and at least at Maruti it's a religion, and not just this time, it has been since all times to come. So 100% of this will be passed on to the consumer. The second is, of course, we expect a demand surge. You would know that compact cars, smaller cars have been degrowing for a while. So this financial year, for example, the first 4-5 months of the year, we had a decline of about 6%. But we expect that this may swing to something like plus 10%. So that's a swing of 16%. And of course, there's a small benefit to larger cars also, depending on the slab structure. We expect consumers to come back. And now what we have to do is be quick in servicing that demand fast, ensuring that our cost structure remains competitive, and no other, any kind of inflationary pressures are totally well managed with in-house cost reduction, etc.
May I ask you, Mr. Bharti, because especially with the automobile sector, for example, for Mr. Mehta, the demand is inelastic. People are still going to buy milk, curd, paneer, etc. But for cars, if people could not afford it, and in the small cars, the small passenger vehicle segment, you've seen growth go down. If people could not afford it, will that 10% GST cut make the difference?
Oh, certainly, huge.
You think so?
It will. So the net impact to the customer, for example, in small cars, so from 128, it will move to 180, the total cost, if 100 is the base price. So that reflects a reduction of about 8.5% to 9%. It will make a huge difference. It does.
You wanted to comment?
Yeah, no, look, also, this news of GST cuts has been doing the rounds for a while, right? So there's also likely that a lot of people had postponed waiting for these cuts. And now that these cuts are there, there will be some held back demand that will come in immediately. So there might be a surge.
But you've seen degrowth over several quarters. Way before the GST news has come in. The degrowth in the small car segment has been an issue, and maybe some of it is moving upwards.
I think it might have been accentuated by some people holding back for a few weeks.
And if I may add, the buoyancy is not only because of GST. The budget recently, the income tax structure was made more favorable. The government placed more money in the hands of the consumer. Then we have the repo rate cuts. It's probably one of the lowest ever, the interest rates that are there. All these collectively will generate a lot of buoyancy, and we are expecting demand to come back.
So, Mr. Mehta, for you, the demand is inelastic, like we said. But on the other hand, dairy producers are set to increase rates, is what we hear. How do you see this? Will there be more increase in rates on the base level just because of that kind of demand coming in? How do you see it play out?
No. Well, there is no proposal to increase rates of any of the products.
Not from your end, from the dairy farmers, basic milk prices.
I don't think that's an issue at the moment. For a simple reason, the rains have been very good, and overall the market momentum is also there. The first part is on the demand, which is very, very important. While one may say that it is inelastic, actually it is a function of the incomes also, and pricing also. So if your income increases by 1, the consumption of dairy increases by 1.1. And milk and dairy is the single largest item in everyone's monthly household consumption. And I'm not just referring to food, it is entire consumption basket. Dairy is the highest. So that is the importance of this segment, both from the consumption point of view and also, of course, from the production point of view. As we know, milk is the largest agricultural crop of India, and value of output of milk in India is more than wheat, paddy, oil seeds put together. So it is very important, and 4% of India's GDP comes from the dairy sector, and 1/4 of the agri GDP comes from the dairy sector. So that it's a very important sector, and once you bring down the GST, I mean, it's either 0, which is on milk, and rest of the products are 5%.
including ice creams. So what we are now looking at a scenario is that while people will consume products, the consumption of per capita of many of the dairy products, excluding milk, starting with ice creams, for instance, ghee, butter, cheese, it is very, very less. Per capita consumption of ice cream in India is only 5 cups per person per year, which is 500 ml as compared to 15 to 20 liters for developing countries or developed countries. So, which means there is a big headroom for growth. 1 in 10 Indians consume butter, and I'm not telling about what quantity of butter they consume. 1 in 20 perhaps consumes cheese. These are all aspirational products, and they were all taxed very high. The new policy has brought them into affordable category.
What is the kind of volume growth you think you will see?
We have been growing at double digit, but now the rate of growth will be much, much more high. And you have to now also see the reforms in context of what happened in the past. 2 years back, under the PLI scheme, the government encouraged us to invest and also supported that investment. So we doubled our capacity of manufacturing ice creams. And now with this cut, you can imagine we will have to double our capacity in the next 2 years. Same applies to cottage cheese. Same applies to other dairy products. So we are seeing a big growth. And second dimension of the growth is not just the growth organically. People are also moving in from loose and unbranded to package and branded. And that's where the industry will grow. And once the industry grows, the consumer base grows, the producers benefit. And this is what is the optimism for the entire dairy sector because of these reforms.
I think we need to look at what has happened from a larger context than just a tax cut. Because yes, everyone loves paying less taxes. And then you'd want to either save more or spend more. But what is the virtuous cycle that gets kick-started? And Mr. Bikhchandani, I'm going to come to you on this point. The pain point, not in the quantum of jobs, but the quality of jobs for a very large young population. Do you think this helps kickstart that process?
Well, look, quality of jobs will depend a lot on overall GDP growth, right? And if overall GDP growth picks up across sectors, you will see quality of jobs. At the same time, there's this AI imperative, okay, where there's fear that people may lose jobs. Look, in general on GST, I'd say this: anything that reduces complexity for businesses to comply with, especially small companies who can't really afford the cost of complying. It's not, actually complying, it's complicated, right? Anything that reduces complexity is great. Anything that reduces taxes and that those tax cuts are passed on to the consumer will cause an increase in demand. Right? And that's also very good. Now, whether or not tax cuts are passed on will depend on competition. Companies will do what makes sense. So if my competitor is cutting prices and passing on taxes, so will I.
I don't think there is a choice in this point. I think the message from government and policymakers are very clear that these tax cuts is not for you to line your margins.
Well, look, if it's a free market, people will do what makes business sense for them, although they might posture that, they're passing on. But it's competition that will ensure that tax cuts are passed on. Government cannot do a command and control thing on a sustainable basis. So, jahan competition hai, wahan tax cuts pass on ho jayenge.
So then coming back to the core question, do you see this as boosting better quality jobs? And we'll come to the AI imperative in a minute because that is a real concern. But in the context of kicking off that cycle.
Look, like I said, if GDP growth goes up, there will be more jobs, all sorts of jobs. The lower end jobs, the higher end jobs, the middle jobs. If GDP growth picks up, there will be all sorts of jobs.
Mr. Mehta, what is the kind of capacity increase that you see which will be needed across industry to live up to that demand? And is that demand looking like it will actually come? I mean, for Amul, I see that you are focusing so much on protein and increasing the protein needs of a population that actually is undernourished to that extent when it comes to protein. These are also all aspirational items in the larger section and scheme of things. What is the kind of capex expansion you see being boosted by this? Let's put numbers to it.
Okay. Coming to this question, yes, milk is a superfood, and we are lucky that we handle almost 350 lakh liters of milk every day, and every liter of milk is 3% protein. So the goodness of protein is coming to us in more ways than one, but the initiative to bring in high protein products which meet our daily requirements, and so that each one of us achieves the goal of having 1 gram of protein per kg of body weight in a very tasty, affordable, and nice manner is what is our endeavor has been. Now, cheese is when you make cheese out of milk, you get the whey, and from whey we are extracting this high quality protein and manufacturing this wide range of products. So this resource was already available